what's important here for what I do, investment strategy, is the direction of the market. And I did think that we would have a correction on all the uncertainty, but as the uncertainty dissipated, as it abated, as we've sort of learned that Trump is negotiating, that a lot of his bluster is the way he negotiates, and that at the end of the day, we may find that when all is said and done, things do settle down and the market can go back to focusing on earnings. Now, in the United States, first quarter earnings were much better than expected, and it looks like second quarter earnings will also be much better than expected because expectations have been knocked down so much by what I call Trump tariff turmoil. Trump tariff turmoil obviously still with us, but I think the market is taking it more in stride. It's not getting as upset about it.
Mr. Yardeni, how do you see India? And earlier, Rob talked about how the fact that India has not got a letter is good. We have more time for negotiations is good. But we're also hearing that those red lines is something that India is not willing to cross. Opening up the dairy sector, the agricultural sector, that's still an issue.
Yeah, well, I think Trump figured that the U.S. is the world's largest economy. The U.S. is the world's biggest importer. It's the biggest customer for a lot of countries, including India, and that would lead to very quick deals. But it hasn't quite worked out that way. And Peter Navarro, his trade representative, back in April 11th, said, we have 90 days of postponement of Liberation Day, and we'll get 90 deals in that time frame. Well, as you pointed out, we only have 2 deals with the UK and Vietnam and 1 framework with China. So it hasn't been easy at all. Countries do have their own self-interest. They're not just kind of going to roll over and do whatever the President Trump wants them to do. And so I think he's going to have to kind of declare victory by coming up with some vague agreements that don't necessarily address all the specifics, like dairy issues with India. There are a lot of issues when it comes to trade. If you really sit down and negotiate a trade deal, it could take 2 years because there's so many details involved. There's so many domestic interests involved. It's not easy. And to assume that this could all be done in 90 days was rather naive, I think. But again, I think the president has a lot of successes so far. He doesn't need this trade war to really cause him problems with the U.S. economy.
Yeah, you said it. Rob, the final word on the U.S. economy. I'm just wondering, of course, we are seeing in a few cases in the letters that got sent out a small reduction in the tariffs, but they're significantly higher than they were before. I'm just wondering about the implications, as Dr. Yardeni just pointed out, it's not reflected in earnings yet, the slowdown. It's actually better than expected in the first quarter and in the second quarter likely. And so therefore, the question is, do you foresee a recession at some point towards the end of this year or heading into next year? Do you see significant slowdown in growth, and do you see inflation spiking on account of tariffs?
So out of all those, I'd say the one we're most concerned about is inflation spiking. And the interesting thing is the next US CPI report is coming out July 15. So before the new August 1 tariff deadline. And I think the risk around that report is we start to see some tariff impact showing up in US inflation. So I think right now the consensus is US core CPI will go up from 2.8 to 3%. We think by the fourth quarter it could be around 3.25%. I think that will be very interesting because if US inflation does start to pick up a bit, it's going to put a lot more pressure on the Trump administration to say, hey, these tariffs are having some negative effect. It'll make it harder for the Fed to cut rates if inflation goes up. And so then maybe actually the economic data, the inflation data, may actually be a key factor that actually causes Trump to ease off on the tariff rhetoric and agree to lower rates come August 1. As Dr. Yardeni said, we do have the midterms approaching. Last thing I would say, just going back to India, the interesting thing for India is if India does get a pretty decent deal here, let's say something similar to the UK where an average tariff rate is close to around 10%, that is better than most other countries in Asia that we're seeing right now. And India in the medium term could benefit a lot from trade diversion, a lot more foreign direct investment coming to India, set up factories in India, because ultimately it's got a lower tariff rate with the US, the biggest consumer in the world.
Rob, thanks so much for joining us this morning. Dr. Yardeni as well. Always a pleasure speaking with you, and look forward to the next chat as well.
Thank you.
All right, let's talk about what happened in trade yesterday, and as much as it has a significance because a lot has happened since last trade. But foreign institutions and domestic institutions buying on a net basis in trade, small number for foreign institutions to the extent of 321 crore rupees. It's after 5 or 6 sessions that they're turning net buyer, which is interesting. The benchmark Nifty 50 ended completely unchanged, and I haven't seen something like this in a while. It was absolutely pat at where it closed the previous day. Broader markets lost ground amid that weak market breadth, which actually turned over the course of the session. And you had the mid-cap indexes lost about 0.25% and the small-cap index that ended about 0.2% lower. But the pack that did really well in trade yesterday, and you might see a few of these stocks react in trade today as well, is the FMCG counters. They shone amidst that positive quarterly update from a few of those. Godrej Consumer was by far and away the star. Dabur India reacting despite what some had thought were not the best quarterly updates, and HUL gaining 3%. Not every day that you see that happen. The Nifty IT once again continued its flip-flop and dropped about 0.75%. It has remained range-bound. I was looking at the chart since June 17th, which is its most recent high. It has not done too much. And that will be evident in the charts as well. The Nifty 50 has in that time frame gained 2.5%. Defense stocks see further signs of profit taking, and the index ended 1% lower. And so, by the way, if you are invested in either a defense index fund or an active fund, then bear that in mind. You've seen significant gains, and you might want to review how much of a share it has in your portfolio. Companies continue to react sharply to quarterly updates, and you could see some of that playing out today as well, Neeraj.
Oh, big time. I'm 100% sure of that. But, just yesterday's trade set us up for something like that, right? Just lack of directional moves in a session with very subdued volumes as well. The volume activity was pretty low yesterday. Now, people will say that, oh, is this a factor of Jane Street and who knows now Millennium coming in and all of that. But it was subdued volumes on the cash market side for sure. So keep that in mind. And I think the Nifty, in technical parlance, as I was reading a couple of notes, is forming a lower high, lower low structure. And it's actually kind of facing a fairly significant supply zone and on the upside, which is a bit of a problem from a upside perspective. And frankly, look at all the things that are coming out thus far. We spoke about how retail numbers haven't necessarily set the stage on fire. Auto sales, power demand, digital transactions, all are kind of emitting weak signals. So is there a case for a dramatic uptick? Don't know. Can earnings do the trick in Q1? Maybe does IT need to deliver in Q1, because we know banks will do okay, but that's anticipated. Can IT do the trick? Because certainly consumption, except for select FMCG, is not coming to the party right now. So bear that in mind.
Okay, so I think the will they, won't they, wait and watch on trade deal is also one factor which will keep 100%. Volumes maybe thin today. Jane Street, is there more to come? That continues to be a factor to watch. So you could see muted action just as an upside for textile companies, because the high tariffs on Bangladesh, and Bangladesh's tariffs have actually gone up if I compare. I mean, it's all notional at this point, because he announces the tariff, Trump announces the tariff, then puts a pause on it, then gives a deadline for it to be in effect. having said that, the tariffs on Bangladesh announced could be an advantage for Indian textile companies. Watch out for the textile pack today. Consumption will continue to be in focus. When all else fails, you know that the Indian consumer will come and have those basic needs coming in. So watch out for that. And look at what Jefferies is saying. They're talking about 47 covered companies with $170 billion in spends across 9 consumption subsectors, grew revenues by 13% year on year in FY25, same as FY24. Trends indicate urban slowdown being balanced by rural uptick. Consumer services doing better than consumer goods is what they're saying. That's a note from Mahesh Nandurkar. Bottom-up expectation of growth revival in FY26 may be at risk, he says, given the nominal GDP growth slowdown in FY26. Preferred consumer stocks are Bharti, Vishal Megamart, TVS, hospitals, and Indigo. So that list coming in from Jefferies. It also says markets, so that's the word from Jefferies. Now, markets could witness a bit of a gap down opening due to those negative global cues, although the rest of Asia seems to have recovered from the tariff and the letters, but 26 points down on the implied is what we're seeing. Initial hours are crucial to gauge the extent of selling pressure and whether key support levels hold. Resistance at 25,485, 25,500. For the Nifty, 25,420, 25,400, 25,370 are support levels for the Nifty. So watch out for some of those. On the Bank Nifty, resistance at 57,100, support at 56,860. But all the action on the derivative side with you, Puneet, and then of course we'll come back to you on what SEBI is saying in its latest report on how many people lose money trading F&O.
Well, definitely, it is some key facts putting out for retail investors and what's happened with them in terms of premium as well as the notional losses. So some key highlights there in terms of first on the cues for today. Again, it was a day which had a very narrow trading session again, and that's largely because of what's happening before. The result season actually starts from this Thursday for TCS. For both the Nifty as well as for the Bank Nifty, again, we're getting to a place where the key support zone is very close, but at least for Nifty, the 25,500 level is something that we've been talking about for a while now, so that's there as well. Let's quickly look at the foreign investors' positions. Yesterday, we did see some selling across index as well as Nifty options, and largely maintaining a short position, while the percentage of longs is now steadily, getting towards the 27 to 28% mark. So if we can move on and look at that aspect, it's now 28%. Previous week, it was at around 36%. So definitely for foreign investors, the shorts are increasing in the system. In terms of open interest for both calls as well as puts, that is largely hovering around the 26,000 mark for the calls. Let's go across to the next chart and look at that. So 26,000 for the calls, 25,500 remains a key support, while we've seen some build up of puts on the 25,000 level as well as 25,300, similar to what we saw yesterday as well. Finally, in terms of stocks, we've seen on the open interest gainer side some long build up in stocks like Titagarh Rail as well as something like a PG Electroplast, while on the open interest losers side, seeing some kind of short covering across the FMCG pack, despite HUL was boosted by a positive note by UBS, so we saw short covering there. Dabur was an interesting one. While the open interest change has been lower, it was a disappointing update to say the least, but seen some short covering on that as well. So again, it will be a day we're expecting the market to trade in a narrow range, and definitely a session where the GIFT Nifty is implying just about 25 to 30 points on the downtick, but we could see some aspect of revival, if any, but again in a very narrow trading range.
Okay, so that narrow trading range remains, but Puneet, just take us through what SEBI is saying in its study. Very, very relevant for those who trade in derivatives.
Well, unfortunately, the headline number is that 9 out of 10 retail investors that invest make losses in futures and options, and that is one of the key trends. They mentioned that because of the SEBI measures, though the index turnover has come down by almost 9%, and that's because of the key measures that SEBI has done in Q4 specifically. So that's reflected in the data. Now, compared to 2 years ago, it's still a growth. So while on a year-on-year basis, we have seen some loss in terms of premium turnover, compared to 2 years ago, the data is still high, indicating that while there has been some downtick, it still continues to be an area where retail investors try to come and make money, but haven't been able to. Specifically, the individual turnover also is down 11%, but again, it's up 36% from almost 2 years ago as well. Finally, in terms of the number of individual traders, it continues to be that trend where compared to 2 years ago, that trend has been continuing. But the total losses for retail investors have actually widened despite participation from retail investors decreasing over the last 6 months. So that is a concerning trend. But hopefully with the current measures, we could see some retail investors getting away who don't have expertise in futures and options. But currently, largely 9 out of 10 investors still making losses in futures and options. And the quantum seems to be increasing despite the retail participation decreasing trend.
Okay, so 91% individual traders faced net losses. Remember that number was 95, but can't say it's very heartening either. All right, these are some of the stocks on our watch list this morning. I'm starting off with Hindustan Aeronautics. JP Morgan has a note on it. They've maintained an overweight with a target price of 6105. It's a thumbs up. They say steady progress continues. Strong order book provides visibility. Significant order pipeline. There is more clarity on future initiatives, and progress on the AMCA tender is key to watch out for. Long-term optionality as the aging fighter aircraft fleet gets upgraded. Now, in a sea of defense stocks which are moving up, HAL then stands out for this reason. The second one is Kotak Mahindra Bank, and a thumbs up there. The bank's net advances for the quarter ending June 30th grew by 14% year-on-year at 4.4 lakh crores, and total deposits grew by 14.6% year-on-year at 5.1 lakh crores. CASA deposits grew by 8% year-on-year at 2.1 lakh crores. So that's definitely a thumbs up for Kotak Mahindra Bank, and they've demonstrated the strongest sequential growth among mid to large banks, so which is another reason. Quarter end for the CASA has shrunk though, and average CASA also grew 2% Q on Q. So while deposit growth was slightly slower, quarterly average reflected strong growth of 5%. So that's the story on KMB. Watch out for it. Macquarie has a note on it today. They say Kotak Mahindra Bank maintains neutral with target price of 2300. Q1 pre-quarter better than expected performance on loan and deposit growth fronts. Seen quarter-on-quarter CASA decline can be attributed to Q1 seasonality. What to focus on? NIM compression and ability to manage credit costs. So those net interest margins getting compressed is something we need to watch out for. Jefferies, meanwhile, has maintained a buy with a target price of 2550. They say the Q1 pre-quarter shows a healthy loan growth. Deposit growth has picked up. Healthy loan growth despite moderation of 200 basis point in the system. Loan growth over the past few months. Bellrise is a third stock, and this is because of a buy initiation from Jefferies. So watch out for Bellrise as well. That's the third stock on my watch list. They've assigned a target price of 435 rupees. They say it's a good growth and attractive valuations. A leading two-wheeler metal component player, they expect a healthy 12% EBITDA growth, 12% EPS growth, and 12% EBITDA and revenue growth, and 18% EPS CAGR over FY25 to 28 estimated. They're positive on the rising two-wheeler demand, industry premiumization, increasing content per vehicle, and expansion in four-wheelers and exports. Given the strong growth outlook, valuations are attractive. Any simplification of group structure can further boost valuation. So that's perhaps something that they hope will happen. I think Bellrise is a stock to watch out for today.
All right. Well, I'm going to start with the negative first, and it's not all negative. Let me get to the numbers and why I'm talking about it. Tata Motors is the first stock on my list, and on the face of it, let's talk about the negative numbers first. Jaguar Land Rover retail sales have dropped as much as 15.1% year-on-year in the first quarter and 12.8% sequentially. Those sales are affected, according to the company, by the stoppage of Jaguar production that was done in May 2024. So midway through the quarter in the year-ago period, you had a stoppage of Jaguar production. However, bear in mind that Jaguar, even at that time, did not account for a very large portion of the volumes. So that has had an impact, but what has also had an impact is that retail sales were impacted by a pause in US shipments in April because of that tariff turmoil. So that is the negative aspect of it. It's certainly going to have a bearing on the earnings. But there are a couple of positives as well for Jaguar Land Rover, and that is that the sales mix or the volume mix has improved during the quarter. Range Rover Range Rover Sport and Defender accounted for 77.2% of the wholesale volumes, and that contribution in the first quarter of FY25, that is a year ago, was 66.3%, and it was 67.8% in the fourth quarter of the last financial year. Volume mix is important because it has a bearing on the EBITDA margins, and that, according to Morgan Stanley, has been pegged at 11.4% for the first quarter of this year, but they expect that the consolidated business margins will decline by 350 basis points. Tata Motors, of course, has been under a fair bit of pressure over the course of the last year, and a lot of investors have lost. So therefore, you could see another quarter of pain, at least on the earnings front, because Jaguar Land Rover accounts for a very large chunk of the consolidated revenue. Let's talk about the next stock. We've got Phoenix Mill, and this is a positive update. The retailer sales across its malls have grown 12% in the first quarter, and that compares with a growth of 7% in the first quarter last year. Yes, on a sequential basis, it has actually fallen because in the fourth quarter, it had 15% growth and 21% in the third quarter FY25. But remember that the first quarter of the financial year is likely a lean period, at least if you compare it to the fourth quarter as well as the third quarter, which is that festive season. The trading occupancy has also dropped to 89% versus 91% in the fourth quarter, and the company says that that is on account of planned upgrades and certain vacancies that have been caused on account of that. There's also an increase in the leasing space, but I thought that the update on the residential sales was interesting. In the first quarter, they have sold 168 crore rupees worth of residential flats, and that is a sizable increase on a year-on-year basis, and they've also collected 99 crore rupees compared with 60 crore rupees in the comparable quarter, so a significant improvement there as well. And finally, Reflex Industries, it's an order win, 250 crore rupees, a pretty sizable order when you look at the quarterly sales numbers or even the annual sales numbers of this company. It is for handling of fly ash and pond ash, and I was doing a little bit of reading to find out what this is. Essentially, it is what emerges from a thermal power plant, and it requires to be handled on an ongoing basis. And so this order is valid till the 31st of March 2028 for a 3-year period.
Okay, 3 stocks on my list, and then, by the way, viewers, there are a clutch of brokerage notes today which will make stocks move, a clutch of them, really. But on news, Lodha, and I'm calling it Lodha, not Macrotech, because from July 11th, it's anyways going to be called Lodha. So let's stick with Lodha. So pre-sales grew about 10%, which was down, by the way, 7% quarter on Q. It's not 44 crores, it's 4,450 crores. But they are on track to achieve the guide. The company says it's on track to achieve a guidance of the pre-sales for FY26. So let the Q1 aberration be an aberration according to them. And the key is actually, to my mind, why it seems an okay update and a good quarter is because they added 5 new projects across the Indian landscape with a gross developable value of 22,700 crores relative to the guidance of 25,000 crores or whatever, nearly 90% achieved just by this GDV in one quarter alone. I think that is quite remarkable, and I would suspect that this development should help the stock sentiment today. So keep an eye out. Opposing factors at play here, but watch out for this one. Titan, no opposing factors at play. Very likely a slam dunk today. 17% growth in the jewelry business. It seems impressive, but the recent trends are 25% growth. The LTL growth is in early double digits, which is weaker versus the 18 to 19% that is seen for peers. And now brokerages believe that the street's expectation of a high-teen jewelry growth for FY26 with stable margins is at risk. And why is this so? Because this 17% growth that is coming, excuse me, my chair is a bit wobbly, but this 17% growth in quarter one comes on a weak base of a 9% growth, and the rest of FY26 has a strong base of 25% growth. So will Titan be able to show that growth also or no, when they couldn't show it in a quarter of a good base for them? So that's the problem. And the last point is the mix on Titan. The higher margin products are low, and coins, etc., have been high, and therefore I would suspect Titan could see a bit of a slam dunk today. PN Gadgil, Again, 19.4%, it's okay. 7 growth. The franchise operations, though, surged by 109%, which is actually very good. E-commerce segment surging 126%, maybe a bit tad better, but maybe Titan a slam dunk, Lodha undecided. And guys, I mean, there are maybe at least 8 notes out there, but just 2 or 3, and Tamanna probably has one too. But I thought, and we'll talk about this at 9:05, but the Jeffries note on Adani Power, when they are saying EBITDA could double by FY30, is quite stellar, and therefore maybe Adani Power reacts. And Schloss, which is the Leela operator, 2 initiating coverage notes on Schloss with target prices northwards of 500. Could make that stock interesting because it's at 4 or 6 if I'm not wrong currently. So that stock could do well.
And it was quite a dampener compared to its issue price as well.
Yes.
So if that's
But expensive,
by
very
slam dunk
expensive.
you mean आज अच्छा रहेगा कि
नहीं
बुरा
बुरा रहेगा. Titan तो आज पिटेगा.
ठीक है. So
Hey, slam dunk is usually a good thing, yeah.
नहीं नहीं, but वो slam dunk वजह नीचे गिरेगा.
No,
चलो.
but in basketball if you have a slam dunk
It's a
then
positive.
you so we've cleared
What I
that
meant
up.
was Titan actually will get
पिटेगा.
हाँ आज
KO'd.
पिटेगा. I think Titan should go down today.
Okay, all right. So
Oh, wrestling wala slam dunk.
okay, so which sport is that?
Let's change the terminology the next time.
No, so agreed. A lot of notes, just divvies. I want to add to that because of this HSBC upgrade to a buy. Hikes target to 7,900. It's a long runway to growth, is what they say, led by tirzepatide, other peptides, and contrast media in medium term. They see revenue potential of $450 million from peptides by 2030. They see revenue potential of $260 million from contrast media by 2030 and expect FY25 to 28 EPS CAGR of 23%. So quite a few of those that we're going to talk about through the day. We'll tell you about our watch list as well as we go into the break, but stay tuned. We're coming back with all the top trading strategies.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception.
Welcome back. You're watching India Market Open. And by the way, we were talking about a few brokerage notes that have come through. One interesting one on divvies. that Tamanna was mentioning. Tamanna, that's a double upgrade, right?
Yeah, I mean, that's the exciting part, because they've upgraded to a buy from a reduce, and the target price has gone to 7,900 from 5,020.
Wow.
So, which is why I think Divi's is going to be one to watch out for today.
Yeah, and we'll find out what our experts have to say about that this morning. In fact, incidentally, let me introduce you to them. We've got Bhavin Mehta of Dolat Capital, as well as Sunny Agarwal of SBI Cap Securities joining us this morning. Gentlemen, very good morning to you, and thanks so much for taking the time. Bhavin, I'll come to you first on this phase of consolidation that we seem to have entered, and we were talking about it just a short while back, the lower top, lower bottom kind of situation for the benchmark Nifty 50. Do you see that likely extending for a few more sessions?
Good morning. So last couple of trading session is almost identical to what we have seen even in the previous expiry. That Nifty towards start of the expiry, we do see some amount of uptick followed by a long consolidation, and this is exactly what has been playing out this series as well. Nifty is once again moving back closer to 20-day exponential moving average. In fact, in this entire rally that we started from about a level of 22,000, there were multiple instances wherein the deviation from 20-day exponential moving average was significantly higher, and then we saw a cool off towards the same, ideally called as mean reversal for most of the indices. So believe that this particular level currently is at 25,228. Believe that this is the level where we can possibly see Nifty taking support on the downside. On the upside, we are watching out for 25,600, 650 level. If that breaks out, I think the trend would be clear on the upside once again.
So therefore, if you were to trade the index, or actually the question is rather, would you trade the index at this given moment, and how would you, for example, look at the bank Nifty, and what are the individual trades that you would suggest today?
Sure. So if I have to take a trade with regards to indices, definitely more comfortable with regards to Bank Nifty, which has almost touched 20-day EMA in trade yesterday. It was closer to level of 56,000. Currently, it is quoting somewhere around 56,949. Sense is that on upside, it has a potential to move closer to 57,700 kind of level. So more comforting on Bank Nifty versus Nifty at this point of time. Also, possibly watch out for some of the PSU names which has been consolidating for quite some time now, including State Bank of India. Anticipating, probably by end of this week or next, we may see a strong move for majority of PSU banks, and Kotak Mahindra Bank, because of business update, ideally should stay in limelight in trade today.
All right, so point taken, Bhavin. I just want to come to you, Sunny, on that last point as well, because we're talking about Kotak Mahindra Bank. What did you make of the quarterly updates? First of all, were you surprised that you saw quarterly updates? It's not something that we've seen before for Kotak Mahindra Bank.
Yeah, good morning, Alec. Good morning, everyone. Yeah, I think definitely a very strong set of update by Kotak Bank. So where we have seen an overall slowdown in industry credit growth to close to 10 to 11%. In fact, the May number was very weak for an overall industry level. Compared to that, we have seen Kotak reporting 14% kind of advances and deposit growth. So very strong set of number. I think, again, as you rightly pointed out, surprised to see a business update from a Kotak. But definitely a positive, and market should react positively to this update.
Bhavin, very good morning. Let's come to you on your top stocks today. Is this a good day with a lot to choose from? I mean, even brokerages seem to have had issuing their own set of letters, I suppose, have their own picks, and quite a few picks today. What's on your list?
Yes, so definitely today what we have seen is, though yesterday markets volumes were significantly lower, we are likely to see significantly higher amount of stock specific activity. That is what we believe. We have been anticipating this. So on my radar, there are two stocks particularly. First one, Cipla. The stock has been consolidating for quite some time now. There are, if you look at pharma as a sector, there are two sets of stocks. One stocks like Divis, which are in an extremely strong momentum. Be it Divis, Laurus, Biocon, this series, we have seen some strong move. So this stock continues to trade with an extremely strong momentum. On other hand, we have stocks like Sun Pharma, Cipla, Lupin, which are just consolidating in a narrow range. Our sense is that possibly going forward, high probability that these stocks will also start witnessing a momentum on the upside, given that strong base has been formed. So recommending buy on Cipla with the stop loss of 1480 for target price of 1550. This stock has been quite ranged between level of 1510 to 1500 for some time now. Second stock on my radar is Tata Consumer. So we have seen very strong move across FMCG sector in trade yesterday. Tata Consumer was trying to close above 50-day EMA after witnessing a reversal on MACD and RSI earlier. We have seen some decent OI addition, so anticipating a move possibly towards level of 1180. Stop loss for this stock should be kept around level of 1050 on downside.
Viewers, do you sense that? I mean, the two ideas that have come in are both from the defensive side. There is pharma and there is FMCG, and that's very interesting. Is it the sign of what the market is going through right now? A bit of a fatigue at higher levels and maybe defensives coming to the fore. Not quite seeing defense names out there. We'll talk about Titan, we'll talk about PN Gutgill, we'll talk about Phoenix Mills and a lot more, but it's 8:45, that time of the show wherein we get in our colleague Somit Sarkar, who joins in with all the key chatter from the dealing rooms. Somit, good morning. What's on your list today?
Well, multiple stocks. Firstly, it's Bharat Electronics. Now, dealers are indicating that there are sell flows on DI desk when it comes to BL. And one of the reasons or one of the concerns that dealers have indicated is the fact that the company's valuations are at a lifetime high, and that could be one of the reasons why there are sell flows on BL. When it comes to ICICI Lombard, despite the weak non-life insurance data, dealers are indicating that there are buy flows. Large HNIs have been accumulating this counter. A potential price hike announcement is something that they're expecting could come in for ICICI Lombard, so keep an eye out for ICICI Lombard as well. For Shriram Finance, dealers are indicating that there are buy flows on FI desk. For Ganesha Housing, the stock was consolidating for the last month. There were some sell flows. Dealers are indicating that the sell flows are largely over and the stock could see a bounce back from current levels. For Orion Pro Solution, the stock at one point of time had hit was up around 12% in trade, and there were buy flows on HNI desk, and this was on anticipation of a large order win announcement that could come in from Orion Pro Solution, and hence the stock was buzzing in trade yesterday. Apart from that, a month back we did indicate you guys about the Navin Fluorine QIP that could come in, and yes, they have launched the QIP. 750 crore is what they're looking to raise. Most of the fund will be used by the company towards debt repayment. They have a net debt of around 920 odd crore rupees. So a large part of the debt would move out of the company, and the equity dilution would be around 3.2%. And after speaking with multiple dealers, what I'm picking up right now is that the demand has been quite strong. In fact, the demand is nearly 3 to 4x of what the company is looking to raise. All the existing domestic institutional investors have shown interest in putting in more money in this QIP. So it will be interesting to see how the stock reacts.
You know, this is very interesting. And Somit, thanks so much for that. Thanks so much for that. But this is very interesting because I remember about a year ago, less than a year ago, or maybe in the last 12 to 18 months when Navin Fluorine went through this whole transition when the MD resigned, etc., there were no takers for the stock sub 3,500 or thereabouts. And now it's a QIP and there is 4x demand. Quite something really for Navin Fluorine. Thanks, Somit. Thanks so much for that. And Bhavin, I just want to take one or two of these stocks to you. So Navin Fluorine, if it starts off slightly higher, is there something on the chart? Secondly, Somit highlighted BEL and that there are sell flows. And I was looking at the stock down about 2.5% in the last 5 days. Are the charts looking weak there?
So if we talk about Navin Fluorine, we are awaiting a close above its all-time high. That is, whenever that happens, we may see further additional momentum. As we have historically seen that whenever the stock crosses that all-time high, the momentum just builds on. This is despite the fact that stock has already moved from close to about 3,200 to 4,900 over a period of just about 4 to 5 months old. However, what we like in this entire space is that, after a long time, we are looking at a very strong build-up in most of the chemical names, and that includes now there is only one stock, particularly SRF, that is there in F&O. But we are looking at a very good amount of built-up interest across the board. So, given that stock is in momentum along with sector also riding the same sense is that if it crosses an all-time high, we may see continuation of this momentum on upside, and anything towards 47.20, which is 20-day EMA for the stock, ideally should be looked as a buying opportunity. Second stock that you have mentioned is Bharat Electronics. Now, what we have been highlighting over a period of time is that the deviation, the pace at which the stock has seen an up move of late, that has been very, very sharp. No, the charts are not showcasing weakness, but what we are anticipating is some amount of mean reversal. The support for the stock remains close to about 390 to 400 in an immediate term. So our sense is that maybe some amount of cool off or a consolidation above level of 400 will definitely be positive for the stock and not negative. On the upside, we will see somewhere around 425, 430 as a kind of resistance, wherein we had seen good amount of call writing as well. So this level needs to be monitored. On the downside, something around 400 should be looked out as a support zone for the stock.
Thanks for that, Bhavin. Now, I do want to focus on the consumption theme, and within that, of course, there's a stock that reacted very positively. Bajaj Consumer earlier in the week, it was up, if I'm not mistaken, 6%. It cooled off just a tad bit. Yesterday's session, of course, it's in fact up as much as 37% over the course of 1 month. And for a company that has traditionally had a bit of a question mark around sustainable or sustained up move in terms of performance, the question is the investor interest justified? And Mahima is joining in to give you a deep dive on where things stand. Mahima?
Right. So, Alex, as you rightly mentioned, fundamentally there has been consistent weak performance in Bajaj Consumer, but lately we have seen that there is high investor interest in the counter. So, let us take a look at whether this kind of interest is justified or not. First of all, in terms of stock performance, overall 37% growth in the past 1 odd month, 18% away from its 52-week high now, 12% however down in 1 year, and past 5 years, it's hardly given 66% returns. Now, in terms of what's not working for the counter, couple of factors. The 3-year compounded sales growth has been a mere 3%. In terms of 3 years compounded profit growth, that has degrown by around 9%. Declining dividend payouts is one of the factors that probably the street should look out for. Plus, the working capital has significantly risen. The working capital days ratio has significantly risen in the past few odd years. Now, in terms of the overall performance as well, there's lower sales growth in terms of financial performance versus declining profits on higher expenses. Let's take a look at the data as well in the past 4 odd years. Sales has been largely flat. As I mentioned earlier, 3-year CAGR has been hardly 3%. Profit has been on a declining trend as well. FY22, it did a profit of 170 crores versus that of only 125 crore in FY25. Moving on to the overall margins picture as well, there has been sharp decline in the margin on the back of high inflation, which has impacted the company very badly. If we take a look at 4 years margin trajectory, FY22 it stood at 20%, which has come down to 13% in FY25. In terms of the overall dividend payout ratio as well, the dividend payout ratio has dropped completely, and this is of course on the back of dropping profitability as well. The 4-year trajectory, if we see, the dividend payout ratio in FY22 was at 70% almost, which has come down to almost 0% in FY25. This the company did not declare any dividend in FY25. However, in FY24 still it declared a dividend of around 28%. Moving on to the working capital days that I was talking about, overall working capital days are rising, and that's impacting the overall cash flows, operating cash flows as well. If you take a look at how working capital days have increased, while it was 6 days in FY23, it has gone up to 150 days in FY25, and that has overall impacted the cash flow from operations as well, because that has come down to around 65 crores in FY25, which was almost 100 crore in FY23. Moving on to overall, what's probably working for the counter? Well, why we are seeing a significant up move in the stock in the past 1 month? These could be the possible reasons. First, valuation cheapest amongst the peers. Second, there's a new experienced MD that has come on board from 1st of July, and there are technicals that are supporting the stock as well. Now, let's take a look at each of these factors. In terms of valuations, if we take the like-to-like comparison with respect to a Jyoti Labs or a Zydus Wellness, the trailing 12-month right now for Bajaj Consumer is at 22 times PE, which is a 36 and 35 times for their peers. And if we see the 2026 estimates, the PE goes to around 14 times, which is cheapest amongst the entire FMCG pack, and that compared to a Jyoti Labs at 33 times and 29 times for Zydus Wellness. So that makes Bajaj Consumer the cheapest stock amongst the entire FMCG pack. Now, let's also talk about the recent leadership change. They've appointed Naveen Pandey as MD for the next 5 years from 1st of July. Basically, he has 2 decades of experience across leadership roles, and Mr. Jaideep Nandi, who's the former MD, has completed his tenure, and after this, Mr. Naveen was appointed. Let's also take a look at how his experience has been overall and who Naveen Pandey is exactly. He's the ex-regional manager with Asian Paints, worked for 7 years in Asian Paints. Also, the ex-head of PepsiCo, where he worked for almost 8 years. Then ex-MD of Marico Bangladesh for 2 odd years, and he was also the ex-CEO of Unibic since 2021. Now, in terms of the overall technical indicators as well, they are pointing towards a positive momentum. The stock is trading above 50 DMA and 200 DMA. That indicates overall upward momentum, and plus the 50 DMA is crossing the 200 DMA. That means that if this continues going ahead, the stock will see further up move as well. In terms of lastly, what Bloomberg analysts are suggesting in terms of whether you should buy the stock or not, there are 8 buys right now, 1 hold and 1 sell, but the return potential right now penciled in is just 8%. So this is the overall view as to what's working and what's not working for Bajaj Consumer right now.
Okay, very, very detailed piece. Thank you for that, Mahima. Let me actually take that across to both Bhavin and Sunny, since we've done this breakdown on Bajaj Consumer. Sunny, what do you think?
Yeah, I think Bajaj Consumer, the issue with the company has been the category growth of hair oil. So hair oil as a category is not growing, and that's the reason we have seen pressure in terms of the business as far as Bajaj Consumer is concerned. But over the period of last 2 to 3 years, we have seen company has diversified the portfolio. So earlier, majority of the revenue used to come from almond drop hair oil, and now they have recently poured into lotion, skincare, shampoos, and so on and so forth. Although the new product category contribution is very minuscule as of now. So going forward, because of the change in management, there is a hope that there will be an aggression in terms of new product launches or growth as far as Bajaj Consumer is concerned. And one positive thing which is playing out for the entire hair oil as a category is the reduction in crude oil price. So LLP, which is the crude derivative, is one of the key input material for hair oil as a category. So that should aid margin expansion maybe in the second half of FY26 for hair oil companies, and Bajaj Consumer can be one of the key beneficiaries. Again, trading at a reasonable valuation, significant cash on the balance sheet, close to 400 crore cash out of 900 crore balance sheet size. So I think valuation is reasonable. In case the company is able to guide or show any strategy which will lead to a healthy growth over the period of next 2-3 years, we can see a re-rating in Bajaj Consumer. The similar story which we have seen 10 years back was in Godrej Consumer, where we have seen the management change, and post that, or for that matter, Britannia also. And post the management change, we have seen a strategy playing out well for both the companies, and have seen a significant re-rating post the management change. So Street is hopeful that the similar story will play out in Bajaj Consumer.
All right. On that note, we have to slip into a short break. Bhavin, thanks so much for joining us this morning. Pleasure speaking with you, and look forward to the next chat. We'll be back on the other side to talk about a few more stocks that you should watch out for in the pre-open session. Do stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than
Back with India Market Open right here on NDTV Profit. Maybe a subdued start, and much like yesterday was a quiet day of trade. You know, by the way, this is also okay, so it doesn't matter. Okay, by the way, some flashes on your screen. Jane Street told its employees that SEBI may have made many erroneous or unsupported assertions on the company. This is on the SEBI action, and of course, they've already said that they are going to contest this, so doesn't surprise this at all. We'll of course take the story forward as well with Mark Matthews a bit later on in the day. But for now, Sunny, on to stocks which will get impacted. And by the way, the pre-open session is begin. I think we'll wait for the rates to settle down. But Sunny, one of the companies in focus was Titan. The growth numbers 17%, maybe ordinarily good, but relative to expectations really bad. Suspect that there'll be a choke slam on Titan today. What do you expect? Do you expect the stock could actually start off lower and stay lower? Or could it see some buying at lower levels?
I think Neeraj bhai, basically Titan on a large base have delivered a decent 17% growth, but compared to it, other peers like Kalyan, Senco, or for that matter, PN Gadgil, all these three companies have reported close to 30% kind of growth number with a very strong like-to-like sales growth by all these smaller peers. On a larger base, I think Titan has done have posted a decent growth, but again, I feel the valuations are slightly expensive. So I believe that stock can react marginally negative in the trade today. But again, we believe the fair value of the business is close to 3,800, 3,900 rupees. So maybe kind of a neutral view as far as Titan is concerned. So we continue to remain bullish on smaller peers, whether it is PN Gadgil or Kalyan or Senco. So all the three names are doing relatively better as compared to Titan.
Tell me about what you think about Tata Motors. The update based on what Jaguar Land Rover said, a decline in the retail numbers in the first quarter. This was anticipated, but did you look at the numbers? And the one positive from what they said is that their volume mix is improving, that 77% contribution from the higher margin products. Are you taking that as a ray of sunshine?
Again, yes, almost in line with expectation update from Tata Motors. So anyway, they have downgraded their guidance for the full year FY26 also. So all the negative news is already in the price. As you rightly pointed out, I like that the shift is changing in favor of Range Rover Sports and Defender, which is a relatively a better margin product for Tata Motors. So that's definitely a positive read through. But one has to keep in mind that at overall consolidated level, FY26 is likely to be a muted year for Tata Motors. And to that extent, that has been discounted by the street. So again, I believe a neutral development as far as Tata Motors is concerned.
Okay. Now, there's news, of course, on tariffs that we spoke about this morning. The fact that Bangladesh is levied a certain level of tariffs, and that would ordinarily be looked at as positive for the textile sector. So let's listen in to whether this is going to pan out as an advantage and what else to bear in mind. We've got Mahima joining in to tell you about some of that. Mahima?
Right. So, Alex, as you rightly mentioned, higher tariffs on both Bangladesh as well Vietnam could benefit the Indian textile sectors. Now, let's take a brief look as to how tariffs have been for both of these countries. Higher tariffs on Bangladesh and Vietnam basically could slow down the exports from these countries, and that could probably shift, exports to India. Indian textiles have crossed already, 34 billion USD, and currently, if we see the tariff rate, which is of course paused right now, is at 26% for India, but Bangladesh at 35%, Indonesia, which also exports garments by the way, is 32%, and Vietnam at 20%. On the back of this, now if Indian tariff comes below that 26% mark, textile companies that could benefit from this include Trident, where 39% of their revenue comes from US, Wellspun Living, where 63% of their revenue comes from US, KPR Mills 21%, Alok Industries, where 45% of their revenue comes from the US, and Gokul Das, where almost 77% of their revenue comes from US. So their exposure to the US might increase because of higher tariffs in neighboring countries like Bangladesh and Vietnam. Now, other stocks that could also benefit from this include Kitex Garments, Raymond Limited, as well as Arvind Limited. And in terms of the overall Indian textile industry outlook, textile exports have remained strong despite of the global shifts that are happening. Plus, India is placed better in terms of negotiations with tariffs. We'll have to see, of course, as to how these negotiations fare. And India is also aiming to reach almost 100 billion US dollars by 2030 in terms of their textile exports. So all of this combined together could be a positive for the entire textile space.
Okay, certainly watching out for these. And Milan Vaishnav, CMT MSTA founder and technical analyst at Gemstone Equity, also joins in. Milan, great having you as always. Thanks for joining in. Now, before we get to the markets at large, Milan, since we're on the topic of textile companies and all that's happening with tariffs, I'm trying to understand if you believe any of these textile stocks have charts which are interesting. If you've looked at them, I mean, there could be a Gokul Das, there could be a Wellspun or some others. I don't know if you've had a chance to look at any of these.
I had a chance to look a few of them, of course, and one of them that catches my eye is Wellspun Living, because Wellspun Living has been attempting reversal since last couple of months, and right now it is in the process of reversing the trend, but in the process of confirming that reversal of trend. So might be this external news can help, and any move above 146 or 148. Right now the stock has closed at 143. Any move above 147, 148 can propel the stock higher. So at least the technical structure is showing that something good might be expected on the charts.
Good morning, Milan. Very quickly, your picks this morning.
Good morning. Two stocks that I'm looking at. One is Hindustan Aeronautics. I'm looking to buy about 5010. And the target I'll put it would be around 5500 with a protective stop at 4780. And the second stock is Uno Minda, looking to buy about 1090 with a protective stop at 1050, and the target I would expect would be 1170 on it.
Hindustan Aeronautics also on our watch list. There's a JP Morgan note out on it, which is pretty positive. Now, today is going to be about brokerage calls, and their impact is going to be about specific stocks and news based on business updates. So keep that in mind. We're going to try and pack as much information as we can before markets open. So let me go across to Harsh quickly. Harsh, let's talk about the Jefferies initiation of a buy rating on Adani Power.
Well, yes, 15% upside is what Jefferies is penciling in, 690 being the target price. Now, I'll try and sum this up in 3 quick points. One, they met with management. They're saying 29% capacity growth FY23 to FY25 is impressive. Current capacity at around 17.5 gigawatts. Around 2.5 gigawatts out of the 3.9 gigawatts have been added through acquisitions of late, and the target is to hit 30 gigawatts by FY30. Now 11.5 gigawatts orders already placed, so there's good visibility for that. There's an acceleration with regard to execution happening, so that is evident. Now the second point being the payments from Bangladesh. This was a challenge. Around 384 million US dollars has already come through in June of 2025. Key positive trigger point. They're saying that this is a big confidence boost. Mind you, FY25 in terms of average receivable days was 83, but ex-Bangladesh was 55. So this is a big positive. Last off, there is plenty of PPAs also in the pipeline. and that limits the risk with regard to Adani Power. It has a faster growth versus NTPC. Upside surprise possible given the FY30 target. It's a listed pure play thermal power play, and apart from NTPC, to a large extent thermal, there aren't too many of those plays, is what Jefferies is saying. 1.7 times capacity versus 1.3 ramp up in NTPC, so clearly that is faster, the ramp up, and the value at 15 times EV EBITDA is at a 36% premium to NTPC, justifiably so, is what they're saying.
All right, so Adani Power in focus there, the disclaimer on your screen. I think I want to talk about Schloss Bangalore as well. Again, a new listing. Morgan Stanley has initiated with an overweight and a target price of 549 rupees, saying Leela is the luxury play, one of the limited ways to play the India luxury story. Their overweight rating is driven by a higher for longer upcycle. They see a strong demand for luxury experiences, has iconic assets with a low net debt position and attractive valuation. Steady executing can drive re-rating, but concentration risk is key to watch. I want to just pull up where it's sitting versus its listing price if we can, because Schloss Bangalore has had a tough go, and it's still down 5% compared to its listing price, which was at its issue price, which was 435, but target price of 549 now put by Morgan Stanley. Let's get a quick view on this. Sunny with us as well today. Sunny, just on Schloss, let me add Belrise, because that's also an initiation and a new listing, and Adani Power.
So first Belrise, I think post listing they have done analyst interaction also, where they have again a play on basically two-wheeler, and they have categorically mentioned that they will grow revenue at a close to 12 to 13%, but margins, because of margin expansion, profitability will rise ahead of the sales growth. So that again trading at a reasonable valuation. So again we continue to remain bullish on Belrise. Coming to Schloss, basically the Leela, there again post-IPO, post-IPO management traction, again the business continue to remain robust. Again, one of the pure play on a luxury hotel segment in India, very high ARR rate as compared to the industry. Again, kind of more of a turnaround story. So going ahead, we are expecting an improvement in profitability. But within hotel space, there are other better players which are available where risk reward is more favorable. So we continue to remain bullish on Chalet as an hotel in this space.
Okay. Well, hotel companies, remember viewers though, might not have the best of quarters. Keep that in mind, because April, May, June has been a bit lackluster. So the quarterly numbers may not be necessarily the best. The question only is, can they pick up from there? And is the commentary around July, August, September and the occupancies for the festive season, which is slightly early this time around if I'm not wrong, is that looking promising? I think that remains to be seen.
Yeah. Just want to point out Vardhaman Textiles, Wellspun Living. We talked about some of these textile plays. Even as we know now, there are higher tariffs on Bangladesh. We know that there are higher tariffs on Vietnam. I want to come to Sunny once again to just ask you what you think of any of these as fundamental plays.
Yeah, I think again, if you look at April 2 announcement as far as trade tariff is concerned, so there is not much significant change as far as the tariff on Bangladesh is concerned. So definitely positive for domestic textile players like Wellspun, or for that matter Gokaldas. Let's see how India is able to negotiate the trade deal with US. In case that is at a relatively lower rate as compared to Bangladesh, then definitely that will be a big positive for all the textile players, and especially ahead of this festive season in US. So we always see a channel inventory filling in the September quarter. So continue to remain bullish in case this tariff turns favorable for India as compared to the Bangladesh. Let us see how this plays out over the period of next few days.
On the charts, Bhavin, Milan?
On the charts, I have been looking at these couple of stocks, as I just mentioned in the morning today. Two stocks stand out, as I mentioned. The first one was Wellspun Living and another one was Vardhaman Textile. Both are technically more stable, structurally more stable on the charts. And if I have to select two stocks out of the pack, this would be my two picks.
If Kotak Mahindra Bank opens gap up today and the pre-open session, it began with 3% gains, but it settled at 1.6% higher. Milan, how would you trade this? Would you go long at this stage? It's up only about 6.5% over the last 3 months.
I would not go long immediately. I would wait for the stock to go above 2225, and then would take a long position in it. I would allow it to rise. There are multiple overhead pattern resistances on the chart, so I will not be in a hurry. I might end up buying a bit expensive from the current levels, but if you are entering above 2225, then your risk reward ratio would be far favorable than what it is right now. So I would wait for the stock to go above 2225 and then take a long position there.
What about HDFC Bank? If you were to look at any of the private banks so far, Milan, it could be a positive surprise there this quarter.
Positive surprise, SDFC and ICICI, if you take a look, because they constitute one of the two stocks which has maximum weightage in the index. I would still stick to SDFC Bank. I would allow it to consolidate. Even a percentage or two retracement from the current level is fine. But SDFC Bank makes a good component for a portfolio over the medium term. May not give a runaway up move immediately, but yes, if you are looking at private banks, then SDFC Bank, in my opinion, should be the one that we should go for.
Milan, out of the two stocks that you recommended in the pre-open session, both of them would have the discovered price out. What would be one top call for the day? 20 seconds, Milan.
You mean to say out of the two which I say?
Or otherwise, one top call for the day.
One top call, difficult to say right now, but I would go for Apollo Hospitals.
Okay, you're going long on Apollo, I presume, right, Milan?
Of course, long. Yes, long, of course.
Long on Apollo Hospitals. We'll get the target prices and the stop losses after the market opens. Remember, 10 seconds left. Remember, it's a very flat start. The mid caps and the small caps are starting off very, very flattish, at least in the pre-open session. So the morning will not be very electric. Can it change? Remains to be seen. The first rates, well, flat as flat can be. Let's get the Nifty IT. And the Nifty Bank, of course, it's flattish. Nifty IT down about 0.11%. Small caps, flattish. Mid caps, flattish. Now, within this, by the way, there will be a lot of changes. I suspect Titan will be at the lower rung here. Let's get the heat map up on the screen and see what's moving and what's not. Are we seeing Titan here? Yes, 4.5% lower. And no surprise there at 65 times earnings for a business to deliver 8% lower than what the street was wanting it to. I think this punishment is deserved. Dr. Reddy's, HDFC Life, Cipla. Remember, Pharma has seen some positive calls, but not quite reacting. And HDFC Bank and ICICI Bank are playing their part in keeping the bank Nifty subdued. Not to forget, Reliance is in the red as well, about 0.25%. But Titan, the standout loser. Even Stevens, almost even Stevens on the gainers and the losers side. On the gaining side, Kotak Bank kind of attempting to thwart what HDFC Bank and ICICI Bank are doing. You know, the weightages are materially different, but up 3.5%. Tata Motors, not bad. Is it the mix and the higher margin mix that is helping the street turn constructive, or is it just that the price had fallen so much that abhi isse zyada kya hoga? Geo Financial, Eternal, ONGC are amongst the others. But yep, on a flattish day, I think the 2 or 3 key takeaways have to be Titan and Kotak Bank amongst the top losers, and Tata Motors is the interesting mover. Let's see what the day holds in store.
Yeah, all of these stocks, by the way, on our watch list this morning. So if you'd watched us right in the beginning, we had flagged all of these off with exactly this call that you're seeing. Kotak Mahindra Bank, I'm told, doesn't usually give updates. So that's another thing that has maybe been positive for the street. Let's quickly pull up what's happening on the broader end of the spectrum before we move forward, and how the mid caps are performing. Well, no surprises. Also very flat. One almost thinks that all the volumes that have disappeared after Jane Street is what is keeping markets very, very range bound. Likewise for the small cap 250. We'll pull up the sectoral heat map for you and tell you what's moving there this morning. Private banks, I suspect Kotak Mahindra Bank has a lot to do with it. Nifty Bank also doing okay. You're seeing J&K Bank also buzzing. So maybe that's leading to it. BFSI and flavor metals are fine. But you know, among an era of uncertainty and who will get a letter, who will not get a letter, what happens to the trade deal, you're seeing markets being very, very careful. Nifty Consumer Durable pulled down by Titan. more than anything else is seeing a bit of a knock. Everything else is middling. The screen more green than red, if you can call it an advantage, but so flat, such minimal gains, so range bound that nothing to really celebrate at this point. It's all stock specific action. This is turned into a stock pickers market, so let's pull that up. Pulling up business updates, Sobha and Lodha. A lot of the other business updates we've covered in the Nifty, so I'm not going over them again. But on the realty side, both looking mildly positive. Sobha about 0.5% up, not too much action over there. A lot of brokerage notes, and I want to see if that's having any impact on the street, if that's being taken seriously. Schloss Bangalore, initiation of coverage. Bellrise, initiation of coverage. Divi's Lab, double upgrade from HSBC, we mentioned that. Jeffries has initiated a buy on Bellrise. Adani Power, also positive notes so far, and Siemens Energy as well. So you're seeing that impact of brokerages this morning coming in. JP Power has been a buzzer in yesterday's trade. Does it continue? Yes, it does. On that acquisition buzz, 1% up on the stock. Textiles, we told you in the factors to watch this morning that you should watch out for what's happening with textiles, because tariffs on Bangladesh coming in higher than expected. Advantage India, right now we're still at 10% as we speak. So KPR Mills, Wellspun Living, I don't know if we pulled up Gokuldas, but if we can look at Gokuldas, there you have it, 6.5% up. Vardhaman, 6% up. So that's where all of the action comes in this morning, and we'll get some of those textile companies in to speak with us as well, just to understand what their perspective is. But these are some of the buzzers this morning, and hard to spot them because it's all about individual stories. Alex, isn't it?
You said it, and in fact, I find that the biggest moves are in the last pack that you pointed out. The textile stocks are the ones that are interesting. Of course, Kotak Mahindra Bank, 3.7% higher, 2228. Now, where Milan at the level that you had spoken about, so I want to come first to you on that. We've hit that mark. Would you, at this juncture, therefore, suggest going long on Kotak Mahindra Bank?
Yes, we can go long, and we can keep a protective stop at around 2190, and we can take a long position in Kotak.
Okay, so that's the view on Kotak Mahindra Bank. Sharp up move on the back of a quarterly update. But let's talk about, Sunny, these textile companies, and we pulled up some of them. Let's pull them up again. The likes of Vardhaman Textiles, the likes of Gokuldas, Wellspun Living not reacting to the extent that Vardhaman and Gokuldas are moving. Vardhaman Textiles up as much as 6%, Gokuldas also 6% higher. Which ones of these would you buy, or would you say that it's a little too early, too premature? We don't know the contours of the trade deal, if at all it's struck with India. And so right now, perhaps reacting because your partners, your neighbors are getting hit worse than you are.
Yeah, I think you are right, Alex, that as of now, there is not much clarity on how the trade deal with India India will play out. So need more clarity on that aspect. But having said that, the way the companies are doling out commentary on a decent demand environment in US and the stability in the input prices as far as cotton and yarn is concerned, so that should augur well for key exporter to North America market. So players like Gokuldas, where we have seen a recent fundraise, also capacity expansion. So Gokuldas export is a clear winner on both the front on demand environment. And at the same time, Wellspun Living, which is a more of an home textile play, that should also benefit in case the demand environment continue to remain robust. But having said that, the trade deal with India and the clarity on trade deal with India is something which Street will look forward to.
Okay, Adani Power is reacting to that note from Jeffries, by the way, up about 2%, 609. So amongst the brokerage notes, this one is certainly starting off well. Sunny, this. Any thoughts on this whole power space? It's been quiet now for a while. So Adani Power specifically, if you guys have coverage, and if not, anything within this power generation or power transmission space?
Yeah, I think, Neeraj, we are more bullish on power ancillary as a play. So transformer as a sector is one of the key beneficiary. Again, a proxy play on rapid expansion on renewable as well as thermal side. So transmission players with a newly listed demerged entity like Siemens Energy, so one of the large cap player where we are bullish on. T&D Power again play on power EPC as well as the transmission sector. And to some extent, we believe that the headwinds as far as the cables and wire segment is concerned, so that has been taken care of. So we believe that cable and wire segment also is one of the key beneficiary of the rapid expansion in power side. So companies like Polycab or for that matter RR Kabel can be the key beneficiary over the medium to long term.
Milan, but I'm tempted to ask you about Adani Power because that's now up 3%, trending higher. Is there a trade here?
Honestly, no. The reason is that I have my little personal bias involved here when I said that, first of all, from the technical perspective, the stock might have its upside limited near 625, 628 levels, whereas the nearest stop loss is way below that thing in terms of the potential gain. So from risk reward perspective, Adani Power may not be a good idea. Now, a bit of my personal bias also comes into picture that basically I'm levels of recommending Adani stocks to my clients, because what happens that you stay invested for a year and a half, and one alleged wrongdoing brings your entire portfolio down by 25-30%. This has not happened once. So basically I avoid Adani stocks. That is that aside, even from the technical aspect, I see the upside staying capped around 625 odd levels, so I would not recommend a trade here.
Okay, the other set of stocks, and I wonder if Schloss Bangalore is inching higher, whether or not, because there are a couple of upgrades there. Yes, indeed, 403 initiating coverage, actually not upgrades, with target prices significantly higher. So bear that stock in mind. Sunny, hotel stocks will not have a terrific quarter, right? So even if you are constructive on any of the hotel businesses, would you bide your time and buy it when there could be probable weakness after the Q1 numbers are declared?
Yeah, so I think maybe a time for accumulation over the period of next 2-3 months. So one has to keep in mind that this time the festival season are slightly early compared to the last year. So Ganesh Chaturthi will kick off from the month of August. So usually post festive season, we usually start seeing a travel increase in demand for travel and leisure stay and so on and so forth. So as you rightly pointed out, usually December quarter is one of the strongest quarter as far as hotels as a business is concerned. So time for accumulation, maybe Q1 is likely to be muted on Q basis for this result season. Yeah.
Okay. Sure. I just want to make a point that, we hope to bring our viewers' views based on analysis, not on bias. Having said that, let me go across to Harsh on a stock that is truly one of the buzzers of the day. Kotak Mahindra Bank has come out with its Q1 business updates. It's firing all cylinders. Why is that, Harsh?
Well, it's the fastest growth among mid as well as large cap banks that it's clocked, and they've put out disclosures. First time in a long time that we've seen Kotak Mahindra come out with quarterly growth numbers. And in terms of that quarterly growth number, the net advances grew 4%, while the total deposits shows only a 3% growth. But mind you, it's generally on a Q4 base, which is slightly elevated anyway. So for perspective, your quarterly average balance is a better way to look at it. And on that metric, the deposits on a quarterly average balances basis has grown at 5% sequential, which is extremely strong. And therefore, that's an impressive growth number. Even the quarterly average CASA has grown at 2% on a sequential basis, even though it's just 4% on a YOY basis. There you go. So on both of those metrics, it's a strong performance. Now, of course, focus shifts to margins. How are brokerages looking at this one? Macquarie is saying that the Q1 pre-quarter update is better than expected, both as on the loans as well as on the deposits front. CASA decline can be attributed to Q1 seasonality. They are now focused in on margins as well as ability to manage credit cost. Now, Jefferies, they are also saying that the numbers look very, very healthy at the outset, and they are saying that the healthy loan growth, despite a moderation of 200 bips in system loan growth over the past few months, is the impressive part of it. So, positive all across.
The entire pack, thanks so much, Harsh, for that. And Kotak, by the way, up 3.5%. and contributing quite a bit at this juncture to the Bank Nifty. Let's see if that pans out over the course of the day. But the pack that really is the bright spot today is the entire textile pack, and everything from a Vardhman Textile to Gokuldas Exports, all buzzing and moving higher even as we speak. Let's talk about why this is occurring, and seemingly Mahima is joining in to tell you this. Mahima, seemingly it's because of the tariff impact on other countries.
Right, Alex, as you rightly mentioned, higher tariffs on Bangladesh and Vietnam is certainly a positive for Indian textile sector. Now, just to give viewers a perspective, higher tariffs on Bangladesh and Vietnam could slow down the textile exports from those countries, and any slowdown in sales from export of these countries is a positive on India because those exports will flow to India. Overall, India is the fourth largest exporter of textiles in the world, and Indian textile exports crossed $34 billion in FY25. India is currently at a tariff rate of 26%, which is at a pause, of course. But in terms of how tariffs have been imposed on other countries, Bangladesh at 35%, Vietnam at 20%, and Indonesia, which is also a garment exporter, at around 32%. So higher tariffs right now as compared to what the flat rate for India is. In terms of stocks that could benefit from this, if tariffs are lower for India, stocks like Trident, which has 39% of revenue coming from US, Welspun 63% coming from US, KPR Mills at 21% coming from US, Alok Industries 45% coming from the US, and Gokuldas almost 77% of the revenue comes from US. Other names that could also see some impact includes your Kitex Garments, Raymond Limited, as well as Irwin Limited. Now, just to give viewers a perspective of how Indian textiles is expected to grow in the next 5 odd years, the textile exports have remained, first of all, strong amid the global shifts that are happening. And India is, of course, placed better in terms of tariff negotiations, and India is aiming to reach a $30 billion, $100 by 2030 is what Bloomberg analysts are suggesting. So that could possibly be a big positive for the textile sector, and this could contribute to that 100 billion going forward as well.
Okay, thank you so much for that, Mahima. So textiles are buzzing. Our focus though now on IT, and we have a very exciting conversation coming up with CLSA on the entire IT sector. It couldn't come at a more opportune time because we're talking just ahead of the earnings season this week, but the street is bracing for a divergent quarter. The key trends are expected to continue with tier 2 IT companies likely to outpace their larger peers. Let's start off with Puneet telling us what brokerages are expecting from IT companies in the first quarter.
Well, thanks so much for that. So 4 key macro trends is what we're seeing across brokerages. The first one is that the environment, actually the macro environment, hasn't deteriorated further from March of 2025, which is a sign that despite the volatility, the macro trends have remained largely stable. So that's a key positive. The second key trend is that almost all companies have announced solid large deals in this particular time, despite being a volatile time, as I just mentioned. So that's the second key trend visible amongst brokerages. The third, you rightly mentioned that they're seeing that the tier 2 IT companies are likely to outperform tier 1 companies similar to the previous quarter, and brokerages are suggesting that the demand will largely be driven in terms of growth from the BFSI, which is the banking vertical of all these companies. And the fourth key trend is that the tech spends cannot be held back for more longer, and that could eventually be growth from the second half for all these companies. In terms of quarter 1, we are expecting all IT companies to show growth on a slower end for tier 1 specifically, as visible on your screen. And the key aspect for something like an Infosys is that there are only a couple of brokerages. This is of course from the Bloomberg consensus, and hence you're seeing the consensus actually showing degrowth in terms of revenue for all 5 tier 1 IT companies. Infosys is seeing only from a couple of them, which is 2 negative. So Infosys actually could have higher growth and in the green, if any. The key aspect is that from then, for margin specifically, there will be Tech Mahindra to something to watch out for on EBIT growth. And finally, in terms of tier 2 companies as well, just to round up the discussion, we are expecting strong growth from something like Coforge. It is expected to have the highest growth in quarter 1. Apart from that, we're also seeing for Persistent, they're targeting $2 billion in terms of revenue by FY27, plan on that aspect. And finally, in terms of LTI Mindtree as well, we're going to be seeing a new CEO, and that would be a key monitor in terms of strategy strategy. So overall, these are some of the key highlights and trends in terms of numbers. How much of that is, of course, of CLS as estimates? That will be one of the key aspects of this conversation.
All right. Thank you so much for that, Puneet. In fact, Sumit Jain joining our senior research analyst at CLSA, looking at the IT sector very, very closely. And I was going through your report, Sumit. Clearly, you've spent a lot of time asking and perhaps answering the biggest question in the sector right now. How definitive will be the Gen AI rollout on companies' profitability? Is there some time before we start seeing the benefits which everyone's talking about? And what have you found?
Yeah, thanks for having me on your session. And I think on the Gen AI, the jury is still out. I think the house is still divided as to how the impact will play out. But, I think it will happen over the next 3 to 5 years or maybe even longer. I mean, we know that cloud has been in the market for the last 2 decades, and we have seen still 40 to 50% of workloads are on public cloud, and majority of the workloads are still on-premise. So I guess Gen AI has a very complex technologies stack, and it will take time for companies to adopt. Now, Gen AI, if you evaluate, it's a combination of an LLM as well as an RPA. So LLM, obviously, as you know, is probabilistic in nature, and enterprises need accuracy every time they are working on a solution. So which is where I think the Gen AI will take time, and the house is divided as to whether the deflationary threat will be ahead of the volume opportunity or vice versa. So I guess every 6 months, we'd host this virtual or physical Gen AI tours, and we get more information on ground from the company CTOs as well as startups. So very interesting times, clearly.
Interesting. How you see Indian companies faring, and TCS is not necessarily at the top of that pecking order in the context specifically of Gen AI rollout, isn't it?
So see, I mean, in terms of capabilities, we find TCS to be extremely good, because you have to realize that the Gen AI technology, when it is being rolled out, there are a lot of grounds of work which need to be done. And that grounds of work is actually around data analytics and engineering. So, as per various consultants like McKinsey, BCG, 70 to 80% of the work in any Gen AI deal is around data analytics. So you need to have a structured format of data in a proper lakehouse or a warehouse. Similarly, a lot of your data should be either on cloud, or let's say if it is on-premise, you need to secure NVIDIA GPUs to upgrade your on-prem infrastructure. And similarly, you need strong cybersecurity tools. You need to integrate SaaS solutions which are infused with Gen AI, where if you look at Salesforce or SAP, they have all come up with their agent forces. And then, of course, you need a very strong RPA automation practice. So we have identified these 5 areas, which are the backbone of developing Gen AI solutions. I think typically we have seen TCS as a company which rolls out these solutions pretty fast once the technology is mature and scaled up, so that it doesn't hit their profitability. But we believe, over the next few quarters or years, you will see that event playing out, and that's where the opportunity will roll up in the hands of TCS. So we are quite positive on that name as well.
Sumit, good morning, Neeraj here. So with the TCS, and we'll get to the pecking order too, but do you believe that, based on the recent conversations that you may have had with the IT companies, either at a conference of yours or in meetings that you might be doing, that the commentary this time from the companies would become very important? Is it possible to envisage that the IT companies will say something that will give a great idea of what the rest of the year could have in store?
So Neeraj, I think great question, and I believe, a lot of pent-up demand is out there as far as digital transformation is concerned, particularly beyond BFSI vertical. And that's where, if you remember last year when there was this talk that the US Fed will start cutting down interest rates over the next 1 year, but that probably did not pan out because of sticky inflation and then the tariff-related uncertainty. But now, I think that question will be again on top of mind for every investor, and let's see if companies give any clarity as to what kind of interest rates or inflation and the Fed action will lead to discretionary demand revival over the coming quarters beyond BFSI. And there is always this trend that BFSI is one of the first vertical to see discretionary demand revival. and then other verticals follow the suit with certain quarter lag. So it's been more than 4 quarters now, and we believe that over the next 2 to 4 quarters, that discretionary demand revival beyond BFSI should start to happen. So having said that, I don't see a material change in the commentary of the company managements compared to a month back. But still, I think the overall macro news has been stable since April, when the guidances were issued by, let's say, Infosys, HCL, and Wipro.
Got it. And Sumit, the other thing would be the valuations at which the companies trade at. Now, one is what the companies do in terms of earnings. Two is what you, for example, are comfortable assigning a valuation at. Is the new normal higher than the averages of the last 5 years or the last 10 years, as the case may be? Or do you believe there could be a derating if indeed the companies fail to deliver for another couple of quarters?
Yeah, Neeraj, I think that's a great question and the most debatable point among the investor community. And there, we believe that if you look at the growth in BFSI vertical in the last 1 year, it has given a 2.5% CQGR kind of a growth. So, if the overall potential for IT services is more like low to mid single digit growth overall, that is what we have seen for the last 3 years, then BFSI vertical itself should not have grown at 2.5% CQGR. So, we believe that that growth for the sector should more be like mid to high single digits. That has been the last 8 to 9 year CAGR for this sector, because I think obviously we had a sharp V-shaped COVID recovery in 21 and 22, and then a sharp deceleration over the last 3 years. But you look at the last 7-8 year CAGR, it is around 7 to 8%. So that's what we believe the sector growth should revive back next year, when the Fed cuts down their interest rates by 2 to 3 times, or let's say the overall macro in US is better and we see discretionary demand revival beyond BFSI.
Okay, so all things considered, TCS remains most constructive. How do you look at some of the other majors? And do you think that there's further upside, Sumit, maybe in the mid-tier IT companies?
Yeah, so see, I can't comment too much about stock specific what we are expecting, but we generally are quite positive on the overall space. I mean, like Infosys, we are expecting a sequential growth this quarter because of the seasonality. Plus, the overall order booking by all Indian IT companies has been better than what it was in March quarter. So maybe, that could be a trend that in June quarter, Indian IT companies were more aggressive than Accenture, where if you remember, Accenture reported a weak order booking number also because of unfavorable base. So we like the overall sector given the fact that we're expecting a V-shaped recovery in the coming quarters as well as in FY27. And the valuations part, which Neeraj also talked about, it is attractive if you compare on a last 5-year average basis, maybe not on a 10-year basis. So overall, we like the sector. And of course, I mean, Infosys, Tech Mahindra, Persistent, these are some things we are more positive upon the near term.
Okay. Just let me not get stock specific then, but Sumit, I think the bit of the, I won't say confusion, but the mixed view on Indian IT is in context of what's happening with the American economy, what's happening with tariffs, what's happening with American government spending and the business outlook there. What side of the fence are you on right now? Because the street doesn't seem to be able to make up its mind on whether this quarter is going to be decent for Indian IT or not.
Yeah, no, I think, obviously we are too fixated upon the near-term quarterly commentary by the company managements and maybe ignore the big picture out there. But if you look at the US economy, it is still quite resilient, despite the talk about inflation picking up quite materially because of tariffs. We haven't seen that actually happening as far as the data is concerned. The overall job prospects have been pretty decent in US. Of course, some of the tariff-related impact is being absorbed by the companies in US in terms of lower margins. But still the overall economy looks pretty good. And then if you look at, CY26 in US over CY25, you will have midterm elections then, and the economy will be growing off a favorable base of CY25, where particularly retail and manufacturing sectors will have a weak growth this year because of tariff uncertainty, which I think should go away next year. So which is where we believe, if you look at the overall macro context, the interest rate cuts in US, the overall maybe reduced fiscal deficit because of tariff-related revenues coming in for US economy, and then of course a favorable base to grow upon with midterm elections. So I think if you combine these 3-4 factors and plus last 3 years of subdued growth for the IT services sector, where a lot of pent-up demand is out there as far as digital transformation projects are concerned, we see the setup being quite positive for the next financial year and maybe next couple of quarters itself.
Sumit, because now I'm just divvying up between large caps and non-nifty names, right? And because the large caps or the larger businesses have this traditional business as well, which probably will scale down as a result of AI or otherwise. But is there a case that some of the smaller businesses which have the ability to be more agile and more nimble still continue to show decent growth, and therefore the street's still rewarding them? I'm not asking you to say names, but just so that the viewers understand, the valuation multiples for the Persistence, the Coforges, etc., is very, very high, right? And maybe with reason. Do you reckon that continues?
Yeah, no, Iraj, I definitely believe that, Gen AI is creating a level playing field across IT service firms. So actually the size really does not matter, although the larger size firms will have to cannibalize their legacy services to some extent. Now it all depends on how willing they are to do it. But we had experts on our Gen AI session, the Gen AI Access Day, a couple of weeks back, where most of those experts are of the view that the speed of acting out here in Gen AI is extremely critical. And even the large caps who are executing well can grow strongly in the Gen AI space. So it all depends on how quickly you are acting, how quickly you are willing to cannibalize your legacy business. Because, this is a new field which is emerging called services as a software. And that, as per few consultants, could be a $1.5 trillion market in the next decade, taking away share from both IT services as well as the SaaS market. So both IT service firms and the SaaS companies going forward can have a very similar kind of business model where you have AI agents being rolled out, and the pricing model will be either outcome based or it will be consumption based in terms of usage of cloud or tokens going forward.
Okay. So with quick 30 seconds, we're out of time completely, but are you negative ER&D companies, especially auto ER&D? Quick 30 seconds, please.
So, we don't officially cover it, but valuations are always, tricky in that space. So, but yeah, I would refrain to comment since we don't cover it.
Fair call. Sumit, leave it at that. But thank you so much. Really appreciate you taking the time out and being with us. And maybe we should do a review conversation once the quarter is out, Sumit, to just get a sense of how it lived up to your billing.
Surely, look forward to it.
All right, cheers. Thank you for that. So that's the view on information technology. Now a view on real estate, and Keystone Realtors reported a strong set of numbers.
Before we go to Keystone, please, Neeraj, because this is this back and forth going on between Jane Street and SEBI in the last few minutes. So I just want to update viewers on that, and we'll get that on our screen very quickly. So remember, Jane Street has written to employees. NDTV Profit is in possession of that letter where they've said that malicious, erroneous. This is how they've described the SEBI order. SEBI has responded with a comment in which they say, as with all SEBI's order, the July 3rd order is a speaking order that clearly lays out SEBI's prima facie case and addresses all relevant areas and questions. At this stage, we have nothing to add to what is already contained, explained, and reasoned in this order. So look at what Jane Street is saying. They're saying, we made multiple requests to discuss concerns, but were consistently rebuffed. It is very rare that you see this kind of a statement versus statement out in the open by a large investor cohort who has been put in the dock by SEBI. So they're getting defiant, and SEBI responding at this rate is not something that we usually see as well. In fact, Sajid has all of those details. So Sajid, we are in possession of that Jane Street letter to employees. What do they say? And then what does SEBI say?
The Jane Street, is clearly denying any of the allegations made by the SEBI's order, especially with respect to the kind of options trading they did. They are basically saying that the SEBI's order is based on erroneous and unsupported assertions, and also they go on to say that they've been engaging with SEBI since August of 2024, and since then there have been several meetings, but subsequently their entire request to discuss the concerns were rebuffed by the regulator. We've been talking to the regulator for the last couple of days, and now the regulator has responded that, as you read out, that it's a speaking order of July 3rd, and it basically means that they have to submit the entire amount in an escrow account unless if they want to continue trading in the Indian markets. So SEBI has not barred them from trading per se, but the gains or the illegal gains which SEBI is claiming that Jane Street made on 21 days of since Jan of 23 to March 2025, that gains have to be deposited in escrow account till further investigation is done and the entire investigation is completed. What SEBI is also trying to say is that they have just done the superficial analysis of the numbers, and that's why it's a speaking order. It needs a detailed examination of all the trades that has happened in that period, and it will also mean that looking at each and every day of trade of Jane Street, not only Jane Street, but if there are other entities also which are in, and looking at similar strategies which are coming into the market and in other indices as well. So far it has been only restricted to Bank Nifty. It may go to Nifty, it may go to Fin Nifty, and it may also look at Sensex. So these are some of the indices which will be under investigation. Remember, this is a huge amount of data which needs to be processed, and processing of this data will take some time, and that's what SEBI is saying, that the final orders may take at least 6 months to a year before a final conclusion can come in, or basically
thank you for that, Sajid. Neeraj, what really strikes me is that Jane Street is coming back strong, they're coming back hard, and they are now making a counter accusation that we tried to reach out to you, SEBI, but you rebuffed us. They're playing the victim card.
Yeah, and partly you could expect this to happen as well, but considering the fact that SEBI would have done its homework on making an order of this magnitude on an institution this large, and this may not be the only action, because we hear murmurs, Tamanna, of it may not only be restricted to Jane Street. I would suspect that while this will continue to be ugly, as we discussed, right, when this came out, that this is not the end of it, this is probably just the beginning of it. The question only remains, how far does this go, and for how long does this go? I would suspect fairly long.
For those of us who know the specific whole-time member of SEBI who's authored this, Anant Narayan, I mean, his credentials as someone who does his homework is impeccable.
As meticulous as they come.
Yeah, it comes from academia. I mean, just that, to me, lends a lot of credibility. Okay, Sajid wants to come in with a point on this. Yes, Sajid?
Tamanna, Jane Street has been in touch and SEBI has been in touch with Jane Street since August of 2024. And it was in December or January of this year that they found that there's something wrong in the kind of trades that has been done by Jane Street, and they were engaging with them. After February, there was a lull in the trading pattern of Jane Street as per SEBI sources. And then finally they found that suddenly April onwards, or after that April end and May, we saw on May 15 that there was a sudden increase in the trading activity that again came into Jane Street. And that's when SEBI got into the action, and they said that they want to come into the entire picture and give a speaking order to curb their trading till further investigation comes in. Remember, this is a huge trading data which has to be analyzed, and they were doing that quietly, and they were engaging with Jane Street, and Jane Street did go for a pause after February of 2025 for a couple of months, and then again they started the trading in May, and on May 15th when when they saw that there was a huge trade that happened on the Nifty, and it was trying to manipulate the Nifty or change the direction of the market, that's when they decided to come back heavily and put this speaking order.
Yeah, so I think it's erroneous and malicious of Jane Street to say that SEBI never spoke to them, because from what Sajid is telling us, this is a conversation that has been ongoing, and we definitely have to take that in mind. Also remember, we were the first and the only channel to get this comment on video from SEBI. And the whole time member, Mr. Vashni, spoke to us, and we'll get that for you in a bit. All right, that's the big story that we're tracking, of course, in NDTV Profit. But let's move to focus on reality and Keystone Realtors. Apologies to the management for keeping you waiting. We had to go in and break that story very quickly. They've reported a very strong set of numbers in their Q1 business updates, including announcement of a twin redevelopment deal in Mumbai. Before we chat with the management, Anushi is taking us through what those updates are very, very quickly. Anushi.
Hi, morning, Tamanna. It's a couple of big updates that we are seeing for Keystone Realtors. Firstly, the Q1 FY26 update, wherein they've seen about a 75% of a jump in terms of where the pre-sales are concerned. They've achieved 57% of guidance for their new launches, while for business development, they've surpassed the guidance of FY26 in the first quarter itself. Other than that, if we are looking at the other recent update also, they have been selected as a large-scale cluster redevelopment project. This is for 8 housing societies with a development potential of 3,000 crore, along with a redevelopment project in Sion, which adds up to 4,521 crore. Do remember that the company has guided for a 33% of a growth in terms of pre-sales and are aiming for a gross debt to equity levels of 0.75 to 1.1x. So this is the overall picture that we are seeing for Keystone Realtors. Strong set of updates that we're seeing in the recent days.
Okay, let me go across to Chandresh Mehta, who's joining in for more on this conversation. Mr. Mehta, thank you for speaking with us. And first of all, apologies for the delay. There was important breaking news that we had to address. But let me just come to you on these Q1 business updates and what they're looking like. What do you think is different in FY26 versus FY25? Because the first set of numbers that we're seeing from you for FY26 are looking very robust.
Thank you, Tamanna, and thank you for having me here. I guess we have always been guiding that we'll be doing very strong numbers, and true to our guidance, we've been focusing on launches, we've been focusing on execution, we are focusing on reducing our timelines, whether they are for acquisition or bringing the project to the market in terms of rare registration or delivering the project. So I guess strong execution focus is what is dovetailing into the numbers that you see.
What approvals? Are your approval timelines easing? Are you seeing more launches and project additions?
Yes, definitely. We have acquired close to around 18 projects in the last few years, about 2.5 years, with a total GDV of around 20,000 crores. And this is and this quarter we have added another 7,000 crores of projects. So yes, we are bringing in. We are continuously augmenting our pipeline, and of course approvals. I guess we have a very strong focus in terms of getting the approvals, and the team is doing a stellar job in terms of approvals. And to specifically answer your questions, is approval slowing down? I guess not.
Not slowing down in Mumbai. Okay, Mr. Mehta, good morning, Neeraj here. What is the kind of acceptability to price rise that might be there in the launches and the bookings that are happening right now? The general belief is that costs would have gone up, but prices not in as much a proportionate fashion. In Mumbai, or MMR at least.
So we have been continuously be able to, at least protect our margins. So if there are any cost increases, and yes, there are certain cost increases, we have been able to pass it on to the end consumer, and the end consumer is willing to absorb those. And you can see that in the numbers, the pre-sales numbers that we have done in the last quarter, and that speaks the story of that the consumer is willing to accept at least the cost increases that have happened over the period of time.
The other question would be, I presume, and correct me if I'm wrong, but you are largely or predominantly MMR. Now, MMR itself, if you take into account what MMR is right now versus what it could be 5 years down the line with all that's happening around Alibag, Navi Mumbai and the airport, etc., so on and so forth, the market size is expanding. Are you as a developer thinking of moving into those regions as well in a meaningful fashion? Or do you believe the market in Mumbai itself, currently, the basic MMR plus Thane, is lucrative enough for you not needing to move out?
So, Neeraj, Mumbai is a vast market, as you said. It is 11 markets. And we, by and large, aim to be present in all relevant micro markets. As you know, we have also ventured into plotted development in Kasara, which is an 88-acre plotted development, and we have got a very good response there. We are also actively exploring other plotted development markets, may they be Alibag or Palghar or anything in and around Mumbai. So yes, we are looking at these markets. We are already present in Vasai Virar region. We are present in Dombivli. We are present in Thana. We're looking at making an entry in Navi Mumbai. So by and large, we intend to be present in all relevant micro markets as far as MMR is concerned. MMR, as you know, constitutes close to around 42% of the recognized residential real estate market of the country, and that's a huge market. We have got a strong brand in this particular market, and we intend to exploit that.
Okay, Mr. Mehta, I just want to come to all the redevelopment news, especially in the MMR region as far as Keystone is concerned. So 8 housing societies you've mentioned have selected the company for large-scale cluster redevelopment. This is in Andheri. There's also an LOI executed with 5 societies you have a gross development potential of 3,000 crores. What is the timeline on this? Because redevelopment, great on paper, sometimes very painful to execute. You're laughing because you know how it is in Mumbai.
I guess it does carry that kind of a perception, but having said that, Tamanna, we have been in the redevelopment space since the last 2.5 decades. And over a period of time, we have institutionalized this entire process of redevelopment. Case in point is we recently launched a project in Bandra, not a small project, 5,000 square meters on Pali Hill. We signed the development agreement on 8th of July 24, and we gave the society notice to vacate on 31st of December. And the society vacated. We launched the project on 1st of April 25 within a span of 170 days. So that's the kind of speed with which we at Rustomjee move in the redevelopment space. So yes, it is a tough business, but we know the nuts and bolts.
Most certainly do. Okay, how do you expect the rest of the year to be, Mr. Mehta? I mean, the Q1 has started off well. I believe the GDV of the newly backed projects is looking strong. If you had given a formal guidance, you reckon that is easily eclipsable, or you don't want to talk about it right now?
So Neeraj, we normally under-promise and over-deliver. That's the DNA of the company. By and large, first quarter normally is a slow quarter, and we have grown 75% year on year. So, and quarter on quarter also, we have seen a 25% growth. So in terms of doing our numbers, we are well on our way. We have given a guidance of about 4,000 crores for this particular financial year. We have already done 1/3 of it, 1/4 of it in the first quarter, and we are well on our way to surpass our guidance.
And what is happening with the Nagpur foray? I think you announced it in November, or it's going to happen in November. Why this market? Because Keystone has always been very, very clearly an MMR play.
Okay, Tamanna, we firmly believe that wherever development goes, wherever infrastructure goes, development has to follow. And the kind of money that has been spent in the MMR region the last decade, I think we all are seeing the fruits of that spend of infrastructure in terms of the kind of development and the opportunity that has put up for the real estate players in this market. Similar kind of money is being spent in Nagpur, and the kind of infrastructure that Nagpur is, transformation that Nagpur is undergoing. I think it's going to be a city of the future, and we at Rustomjee always are the front runners in terms of identifying new opportunities. We made a small play in the Nagpur market. It's not much. It's looking like a GDP of around 1,000 crores. We will test the market and then see what our experience is, and then accordingly take a call.
Stepping stone to expanding your geographical footprint?
Absolutely. And there are other markets, especially in and around Mumbai, which we are actively exploring to ensure that we are well versed to take care of.
So far from Pan India yet, just MMR and beyond, and Maharashtra right now.
Maharashtra right now.
Okay, right now is the key word there. Thank you so much. Thank you so much, Mr. Mehta, for speaking with us. Always a pleasure. We'll take a very short break, but just quick look at the markets before we do. And the Keystone stock, let's pull that up. Okay, Keystone perking up as our conversation has gone on. Markets also showing some improvement actually through and through, at least on the broader markets and on the Bank Nifty. Nifty still languishing in that very, very flattish zone, but Bank Nifty is not doing half bad, nearly 0.5% up right now. We'll take a very quick break, but when we come back, all of the latest stories, what's buzzing, what's not, all of that coming up after the break. But as we go into the break, let's listen in to that exclusive response from whole-time member Kamlesh Chandravarshini of SEBI on the Jane Street action.
The Jane Street order came today, and it is quite a shocking order with a big quantum. What is the regulator's stance against something that is so big in quantum, especially in terms of manipulation of Indian markets from a foreign player or entities like that?
So as we say always that we don't generally react on individual cases, but as a general, as I have said earlier, whenever SEBI sees violation taking place, we enter the picture. We try to correct the violation, we take enforcement action, but all our enforcement actions are without any bias, completely on merit and proportionate. So we make it a point that all of our enforcement actions fulfill these three criteria, completely on merit, without any bias, and proportionate. So I think with this I will leave it over there, and it is for all others to judge.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
All right, back with India Market Open right here on NDTV Profit. Now, let's get in a very special voice. Mark Matthews, Head of Research Asia at Julius Baer, Johnson right now with his thoughts on all that's happening around the world. And Mark, good afternoon to you. Thank you so much. It's always a pleasure talking to you, and you know that. So thank you for taking the time out. And I hope all is well. But is all well with the world at a point of time when the US and Donald Trump are giving a deadline and changing it, saying that the new deadline is also negotiable, but at the same time launching tariffs and trade deals or some trade deals which are, well, slightly different than what they'd promised?
I'm fine, thank you, by the way, and it's an honor as always to be on the program. I think now the big beautiful bill is out of the way. He's come back to the tariffs, and the stock market is almost at an all-time high, so I think he probably feels more confident doing it than when it was just 1% away from becoming a bear market back in April. Now, Reuters says that the Europeans are not going to get sent one of these infamous letters, so it seems the letters are largely being sent out here to Asia, and the two countries where it matters the most are South Korea and Japan, because they export a lot to the United States. And so we'll see how it goes with both of them. Now, even if Donald Trump forces the Japanese to open their market to American rice, I doubt Japanese consumers will buy it in stores. So I don't really think it's a big deal if Japan gives a little on that. Like India, the agricultural sector is extremely sensitive. It is in all countries in the world. But I would just say that if you look at most other countries, including India, what percent of their economies are derived from goods exported to the United States, it is not large. So it is fairly large for South Korea and Japan, but for most other countries it's not. In India, I mean, it's something like, I don't know, 2% of GDP, very small. So I suspect that the tariffs are more noise than substance. And to me, the ultimate barometer of that is Walmart's share price. If the tariffs were really going to be a big deal, then I don't think Walmart's share price would be 5% below an all-time high, which is where it is today.
Very interesting take. So no one's taking this too seriously. The boy who cried wolf and the president who cried tariffs. Maybe that's what we're seeing till you have those final prices coming in. But Mark, I want to come back to that comment on India, because there's no letter, there's no deal yet though. What do you think, in your view, the outcome will be or is likely to be?
I don't know. There's talk of a mini deal and there's talk of an extension. But just to reiterate what I said earlier, I think it's mostly noise. This is not impactful for the Indian economy. And the noise could be bad, because if the government does allow genetically modified corn and soybean into India and opens up the dairy market and the automobile market, for sure the opposition would take advantage of that to say that the government's been weak. And there's no doubt the Americans are very competitive in agriculture, so they could take a dent out of that market for India. So, I mean, if the Americans end up putting a 26% tariff on exports of Indian goods to the United States, I would just say it doesn't really matter, because exports of goods to the United States are a very small part of India's GDP and certainly not what drives it.
Even the worst case scenario of 26% doesn't really matter. I mean, what we're learning is that those red lines on agriculture are unlikely to be crossed as far as the Indian negotiating team is concerned. Does that change at all the global view on the Indian markets? Trade deal or no trade deal?
No, I think it's irrelevant. The thing that moves the Indian market first and foremost is the earnings, which are forecast to be in the single digits for the impending results. But if we have a few outliers surprising to the upside, like in metals, I think we could even see double digit. And most certainly in the quarter beyond, we're going to move into double digit earnings, because both the central bank, which was very hawkish last year, and the government, which didn't spend much, those have done a 180-degree turn. The RBI, as we know, is dovish. And I think that will translate into credit growth rising into the teens again in the next few quarters, and that'll percolate through into the economy and earnings. And the government is spending again. So with that backdrop, I don't see much to take the Indian market down unless there's a big global correction, because it is a market that is sensitive to the world market. But on its own, I think it looks very good.
Got it. Mark, in terms of what happens to foreign flows in light of the fact that there has been some dollar weakness thus far, maybe there is more in store, and opposing views there, because some people believe that a lower dollar means that quantum of flows will actually go off, versus there being a view that de-dollarization and people wanting to diversify away from the US, which has been the first port of call for nearly the last 15 years, mean that emerging markets could actually get more flows over the course of the next 12 months. How do you think about this argument?
Well, I'm torn, because on the one hand, the positioning shows that there's extreme short positions in dollars. And historically, when we've reached such short positions, there has been a rise in the dollar. But on the other hand, there's a good reason for those shorts, which is the big, beautiful bill is going to require a lot more debt to finance the budget, and that will widen the deficit, which is currently at 7% of GDP. Now, historically, the US has run a deficit to GDP of about 2 to 3%, which is what most developed economies do. And so to keep it at 7%, and the Congressional Budget Office estimates it's going to go up to as high as 9% 10 years from now, would certainly mean a reduced credit rating and therefore a lower value in the dollar. So I'm kind of torn between the technicals and the fundamentals. I suppose the way I'd put it is that short term we could see a dollar rally simply because of those extreme positionings in the futures market, but longer term, the fundamentals do not bode well for the dollar.
Mark, did you have a chance, or have you looked at the recent SEBI verdict on Jane Street? And it's in some sense, it's a big one, and there have been some to and fro, so we do not know which way this will settle. But have you had a chance to look at it? What do you make of it? Any impact on trading volumes? Any other views that you may have on the development?
I would just say that this kind of thing happens once in a while, not just in India, but around the world. And because the investigation's ongoing, I don't think I can say any more.
From the Indian earnings perspective, Mark, you talked briefly about metals possibly being an outlier. How are you looking at conditions, say, for Indian IT, considering all of the uncertainty around America, pharma? Do you see this as being impacted at all?
If anything, beneficially, because the outlook for Indian IT was very gloomy just a couple of months ago. The online betting platforms were suggesting something like 70% probability of the US entering into a recession. Now that's down to about 20%. And apart from housing data, where you've got softness in house prices, generally speaking, I think the data in the US is still favorable. We saw that with the non-farm payrolls last week, which beat expectations. So I would say that the outlook for the US looks better, and that's not yet been reflected in commentary from the IT companies, but I would expect them to start to speak more positively about their operations in the US. So generally, I think it's looking better than it did a few months ago.
Okay, so that's an interesting view, because it's been very confusing on Indian IT, and here Mark Matthews comes and says it's looking better than before. What about some strong domestic plays like BFSI? If you're seeing the Indian economy grow at a steady clip, do you think that there are still pockets of growth in some of these segments?
I'm sorry, I don't have the local depth that would be required to answer the question, but I would go back to what I said earlier, that if credit growth does accelerate from around 9%, we think it's going to get to 12% around 2 or 3 quarters from now, then one obvious beneficiary of that is banks, right? So I think banks are a good domestic play.
Mark, what in terms of all the developments that have happened thus far, what's your overarching stance? Let's say on India, from a 3-year view, one of the fastest growing economies per se, even now, large economies at least, as so far in the trade deals or the lack of it has come out unscathed. And as you said, it is noise because the overall impact is restricted to 2% of GDP. But let's assume we kind of protect that, do more. India does more trade deals as well as FTAs with other geographies as well, and continues to grow at this 6.5%, 7%, which is the base case for most people. Does it stand to get flows over the course of the next 2 or 3 years, or do the flows remain at best unpredictable or anemic, as have been now for the last 2-3 years, wherein for a period they come in and then for a period there's just a consistent outflow?
Yes, I think it stands to get inflows. Generally speaking, the emerging market asset class has been a terrible place to invest over the last 10, 20, 30 years. Big opportunity cost in being and invested in emerging markets. One of the very few outliers is India, and so it has a proven track record of providing returns, even dollarized, to overseas investors that you can't find in Southeast Asia or Latin America or even in China or South Korea. Now, I would say, having mentioned China, that one thing that is interesting to watch is the gradual transformation in policy in China, which had been quite against the private sector there, and the big thing since 2022 has been so-called common prosperity, which means a redistribution of wealth from rich people to everybody. Of course, the market doesn't like that. Now, it seems that over the last year, there's multiple signs that they're moving back toward being friendlier toward the private sector. I think one reason is they recognize the technology sector in China offers so many products and services that are truly globally competitive, in some cases superior, from artificial intelligence to smartphones to semiconductors to electric vehicles. So why be mean to the companies that do those things? So anyway, I don't want to ramble, but I think you could get better news in China over the next few months, year. That would make people more disposed to investing in it again. Could take some of the shine off India, but I still think if you're talking on a 3-year view, that India is the best emerging market in the world.
Thank you so much, Mark. Always a pleasure speaking with you. We love it when you join us right here on NDTV Profit. Mark Matthews of Julius Baer there. All right, quick look at what's happening with the markets and which pockets are showing some action, because the frontline indices are completely flat. But AMCs are buzzing in trade. This is after brokerage firm Antique Stock Broking has released a bullish note on the Indian mutual fund industry, projecting a 15% compounded annual growth in assets under management. Harsh joins in with more.
Well, yes, they talk about SIP flows being strong. They also talk about passive flows being good, and both of those will likely aid the industry as a whole. And within it, the players also not looking too unattractive in relative terms. You have an HDFC AMC which is currently trading sub 5200, but the target price given, for example, by an Antique is 6,000 rupees. So that's a strong strong mid-teen kind of return that they are penciling in. They're calling it India's second largest asset manager, of course, but strong fund performance will likely drive the numbers going forward. The SIP flows have grown 35% CAGR over the past 4 years for this one. That's what will drive numbers. They also have a positive coverage on Nippon Life India, 950 being the target price on that one. Also an Aditya Birla Sun Life where the target price is 900, and the UTI AMC where the target price is 1500. Again, strong SIP flows is the case that they are making where UTI AMC is concerned. 24% CAGR on that SIP number is what they have penciled in. Of course, the upside cap on this one, given that the target price is 1500.
Okay, stay on with us, Harsh, because Kotak Mahindra Bank is the other stock that's buzzing and continues to be nearly 4% up in trade on an otherwise very listless, dull day, even holding up the bank nifty to some extent. They've come out with its Q1 business update. What is it that the street is liking?
Well, it's the only mid-large kind of bank which has done 4% on net advances, which is extremely strong on a sequential basis. Deposit growth weak and it's only appearing weak. That's because your year-end Q4 FY25 numbers is always on an elevated base, and therefore that QOQ number not showing, but the average number is 5% QOQ. In fact, we had positive notes from Macquarie as well as Jefferies on a Kotak Mahindra Bank. So very strong numbers overall is what they are also suggesting, much better than what they had penciled in.
Okay, thanks a lot for that. So that's the big gainer, right, which is Kotak Bank, 3.82. And by the way, it's now above that resistance level that the technical analyst was talking about as well. So keep an eye out for Kotak. Now, from the top gainer to the top loser, because jewelry major Titan, the growth has come in, but Mahima, suspect the growth is way lower than what the street was penciling it to be, and thereby with the valuations that Titan is trading at, it was expected that it will start off lower, isn't it?
Absolutely, Neeraj. So basically two things. The street was expecting a growth of anywhere around 22%, but the consumer business saw growth of 20% and jewelry business saw growth of only 18%. So that's disappointing. Secondly, peers have seen a much better growth. Something like a Kalyan has seen a growth of 31%. So compared to that also, the jewelry growth has been disappointing overall. And that is why we're seeing the pressure on the stock. In terms of the overall performance, the business with respect to how the business update fared, CaratLane saw a good growth of 38%. Tanishq, Mia and Zoya grew only 17%, which is kind of weighing on the overall jewelry growth. Bio growth was flat, which was disappointing. Overall, customers are now preferring lightweight and lower carated jewelry, so that is also kind of hampering their overall margin business. Studded ratio was lower and plain gold saw a growth in mid-teens. The like-for-like growth was still in early double digits, so that's slightly positive on a positive note. Watches were the other segment that has done well this quarter, 23% growth there. It was largely led by analog watches and Fast Track and of course their international brands. iCare saw a growth of 12%, added 12 new stores, and they are in process of closing the non-performing iCare stores. So Titan Eye, they've closed around 30 non-performing stores there. Emerging business again was a surprise because good growth of 36% there. Overall fragrances grew 56%, women's bag grew 61%, and Taneira also saw a double-digit growth first time, since it started. That's around 15%. International business saw a growth of 49%. One store they did add in UAE this quarter, and Tanishq in US markets have overall the performance has doubled. So that's also on a positive note. But overall, in terms of what brokerages are saying about the Q1 business update, Citi has maintained neutral with a target price of 3,800. They're saying that studded mix continues to decline, which is disappointing. The like-for-like growth was driven entirely by the ticket size growth, and margins will be the key to sustain the current valuations. JP Morgan again has maintained neutral with a target price of 3,350. They're saying that jewelry shine has faded in Q1 and overall revenue growth is moderated and worse than what was feared. So this is the overall view as to why Titan growth has been disappointing.
Yeah, so pain for Titan, 5% down on the stock is what we're seeing. Stay on with us, Mahima, because we also want to talk about textile stocks. Higher tariffs on Bangladesh and Vietnam. Will they benefit Indian textile companies? This is something that the street is assuming. Look at how Gokuldas, etc. are firing today. But what I want to ask you, Mahima, is that is there any real sense to it? Because all of these tariffs are right now up in the air. Nothing is final.
Absolutely. So, I was talking to some textile companies also just, before this conversation, and, every textile company management has said that we have to wait and watch out for as to how textile overall tariffs for India also fares. But it is certainly positive because right now the ban for us is 26%, which is lower than what is imposed on something like a Bangladesh at 35% or 32% for Indonesia. However, Vietnam is at 20%. So, if our tariffs are below that 20%, 30% mark, then we'll also have the benefit of getting exports diverted from Vietnam to India as well. Just to give viewers a perspective in terms of which textile companies could benefit from this, there's Trident, where 39% revenue comes from the US. There's Welspun Living, around 63% of the revenue comes from US. KPR Mills at 21%. Alok Industries, which is seeing a significant up move in trade today, almost 45% of their revenue comes from the US. There's Gokaldas, where almost 77% of their revenue comes from the US, is also buzzing very well in trade today. So all of these companies will be in focus. Some other names like Kitex Garments, Raymond, Arvind Limited will also be in focus. Overall, Indian textile industry has grown to that $34 billion US dollars in the past 1 year, and is expected to be a $100 billion industry by the end of 2030. That is something that India is aiming at. So all of these things combined together is certainly a positive for the entire textile space.
Okay, well, thanks Mahima for that. As we wrap up though, Belrise is the next stock that we're looking at. It's come off the highs completely, but Jefferies has an interesting note on that. Puneet Johnson with more on that note. Puneet.
Well, thank you for that. It's an initiating coverage on a recently listed company in the auto component space, Belrise. 135 is the target, a 20% upside from the current levels. Now, the key aspect is that they're maintaining that 12 to 18% growth in terms of revenue, and profits could continue for the company. They're largely getting 60% of the company's revenue from the two-wheeler space. So they are diversifying into four-wheelers, and that has 3x more components than the two-wheeler space. So hence, it could be a growth trajectory as well. But there are two key points that you need to know. One is that 20% of the company's revenue is coming from commodity trading, which is a very marginal business in terms of profits. So that is one, and that was a concern at the time of IPO as well. And the second aspect is that Jefferies was also the investment banker. So take it with a pinch of salt. The other aspect is that valuations are at 18 times price to earnings, are very, very favorable compared to other peers with niche businesses which are operating above 30 times price to earnings. So those are some of the key highlights, but definitely valuations are in comfort, and business diversification to four-wheelers could aid growth for Belrise going forward.
Okay, thank you so much for that, Puneet. So it's all about brokerages this morning, I think. Entirely, because there are just no other triggers. Brokerages and the odd, I think, shrimp exporting company.
And textiles.
And textiles, of course, being the big one. So yeah, market searching for ideas. But sometimes the calm before the storm is not half bad either. So on that note, that's all the time we have on India Market Open. Stay tuned. Ask Profit up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so
elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to
ICICI?
invest?
Welcome, you're watching Ask Profit. I'm Mahima Vachhrajani and with me is Alex Matthew. Today, we're going to take a quick look at a new IPO that is Glen Industries from the SME space that we're going to talk about. It's a very interesting company because it's into sustainable packaging, and they've started this since 2019. It's a B2B manufacturer and manufactures eco-friendly recyclable food service packaging products. So that includes your PLA straws, your food containers, your paper straw, etc. And they provide these sustainable packaging to QSRs plus HoReCa, beverage industry and the dairy industry as well. To take this conversation ahead, and of course this is a fresh issue of 63 odd crores, and to take this conversation ahead, we are joined by Lalit Agrawal, Chairman and Promoter and Director of Glen Industries, who's joining us now. Mr. Agrawal, hi, a very good morning to you. Before I move on to company specific questions, Mr. Agrawal, your quick take on why this fundraising of 63 crores and how will you be putting that to use?
Why this fundraising of 63 crore is basically to fund our new project. Most of it will go into setting up a new facility, which is costing about 100 crore, and 50 crore we will raise by way of term loan, and balance is from the equity.
Agrawal, yeah, go ahead.
Yeah, now this new project is mainly to manufacture again the similar type of products, injection molded and thermoformed thin wall food containers, as well as paper based packaging for the food packaging. So all in the sustainable space.
And just to give viewers a perspective, what is the capacity right now that you have combined for all your capex that you have right now? And considering that this new facility will also be introduced, what's the kind of capacity that will raise, and what are the utilizations looking like?
Yeah, right now we have capacity for thin wall food container about 665 metric ton per month. And for the straw, paper straw is about 110 metric ton per month, and for PLA straw is about 120 metric ton per month. Okay. And when we set up the new facility, we'll be almost multiplying the food container capacity from 665, it will go to almost 1900, 2000 metric ton per month. And in the paper, one more in the paper space, we'll be expanding in around a capacity of 700 to 750 metric ton per month.
Okay, and when do you think this will be operational?
We are targeting for next January 26.
Okay. Mr. Agrawal, just want to get a sense on your financials as well. It's been a good growth where it comes to the FY24 numbers as compared to FY25, 18% growth in terms of revenue, good profit growth of 125%. Just want to get a sense from a longer term perspective, what is the kind of growth that you're penciling in for your top line as well as your bottom line? Because I was just reading up a note which said that QSR industry as a whole is expected to grow at a double-digit CAGR in the next 5 to 7 years, and that will probably, augur growth for your business as well.
Yes, we are very true. That is the trigger point for the growth of our company. And as far as the top line is concerned, we believe that after new facility setup, we'll be multiplying our turnover. From the presently, we did 170 crore. In the current year, maybe around 200 we will do. And after a new setup is in operations, it will be almost 2.5 times of that.
Okay, Mr. Agrawal, thank you so much for giving us that perspective, and all the best for the IPO. All right, so that's with regards to where Glen Industries stand. But Alex, with respect to where markets are concerned, I think it's a flat day of trade. You know, the Nifty 50 not doing much. Your broader markets slightly under pressure, but overall markets are silent.
Markets are silent, markets are quiet, you name it. There are various adjectives that you can use at this point. Range bound is another. And take a look at that chart, it's pretty much flat. Yesterday, of course, the Nifty 50 ending unchanged. And this is on the back of low volumes. Even at this stage, as I look at the Nifty 50 volumes, they're at 0.14 times the 30-day average. So, of course, it will build over the course of the session, but I would hazard a guess to say that you will have another session in a row where you have slightly lower volumes. And there's a lot of uncertainty globally that is pervading, and I guess to a certain extent one can argue that the lack of a trade deal between the US and India is one of the factors. There's also this overarching cloud about the uncertainty about Jane Street and how that is being treated. There was a response that you got earlier on, and we will continue to talk about the implications there. But really, the volumes are a little bit low, to say the very least. But take a look at the benchmark, and some of the constituents are moving. You have individual stocks that are in focus today on the back of big corporate announcements or updates. And this is quarterly updates from Kotak Mahindra Bank on the one side, which is very positive, and the big loser on the Nifty 50 Titan is faltering in trade because of a not so pretty picture. And you want to very quickly talk about it?
Yeah, I think the jewelry growth has been disappointing. You know, earlier also I pointed out saying that something like a Kalyan Jewellers has seen a growth of 31% in revenue, but Titan jewelry growth was only at 18%.
And the mix is not good also, right?
The mix is not good, and the street was expecting a growth of 22%. It has come at 18%, and I think valuations still don't look cheap for Titan, and that's why we're seeing the downtick in trade today. So down 5% because of that.
Another Tata company and stock that has gained tremendously and has been an outperformer, but which is now losing ground because perhaps valuations are way ahead of expectations.
Absolutely, and margins is something that we'll have to watch out for, because that will be the only factor that could justify these valuations if they're able to sustain that 11 to 12% mark in the jewelry business.
On that note, so let's get our, by the way, if you've got questions on Titan or Kotak Mahindra Bank or any other stock for that matter, you can write to us on the number on the top of the screen. That is where you can send us a message, or you can call us on the landline number that you also see on the screen. Joining us today, we've got Swati Hodkar of Nirmal Bang, as well as Asta Jain of HEM Securities. Thank you so much to the both of you for joining in. Incidentally, we've got our first caller of the day. Dheeraj has been holding on. Dheeraj, thanks for your patience. Appreciate it. And how can we help you today? Dheeraj, can you hear me?
Good morning, sir.
Hi, good morning.
Sir. Yes, sir.
Please go ahead.
Good morning, sir. My query is regarding BSE, sir.
Okay.
I bought BSE 59 shares at 2579 at 2679 yesterday, sir.
Okay.
Can I add at lower levels, or is it a good stock to hold for the next 3 to 6 months?
Okay, that's a
or
good.
Should I exit from the counter? Is my query, sir.
That's a good question.
Or should I shift to something like TCS, or which are in a corrective phase? All the Tata companies, Tata group of stocks have corrected a lot.
Yeah.
So should I shift my money into that, or should I hold on to this?
Okay,
or
that's
average this? What are the good levels?
I got your question. So Swati, on the chart, since it's a 3-month query, and this is a stock, one of the stocks that is reacting to this overarching concern about implications of this Jane Street order. Is there another entity that is now being investigated? How large could this entire thing be? And so from that perspective, it's under a little bit of pressure. There are news-based events that are causing this. What levels should he watch out for? Where should he draw the line in terms of his stop loss? And should he hold on?
First of all, good morning, all of you. The view is a bit cautious on the BSE front, because why the counter today has given the breakdown of the 50 days moving average, which was coming at around 2560 levels. On intraday basis, it has given the breakdown. Now we need to keep an eye on whether it's maintaining a negative closing on the 2-day basis or not. If yes, then the selling pressure is likely to be continued, and Alex, this might counter will come down towards at least 2400 to 2380 levels. Up to that level, we might witness some sort of a corrections. Positive momentum terms cannot be seen unless and it doesn't give the breakout of 2650 levels on the higher side. So my view is little bit cautious. If you want to add on the quantity in this particular stock, I will suggest to wait for some more time. If the stock comes down towards the 2400 or 2380 level, that level will be the attractive levels to take a fresh long positions, but not at the current market price. So you should wait for some more of deeps on if you want to take a buy call on the downside.
Okay, so that's with regards to where BSE stands. Our next question is from Ramesh, who's writing in from Hyderabad. He says that he would like to invest 1 lakh each in Anantraj as well as ITC Hotel at the current market price from a longer term investment, and wants to know from a longer term perspective or view. Asa, hi, good morning to you, and I'll come to you on this one. Anantraj and ITC, what's the view like?
Hi, good morning to everyone out there. So we believe that Anantraj is looking good in the longer term perspective, but right now my idea is to wait for some more dips to arrive in and then make an entry into this counter, because what we believe, we are just going through all sort of Q1 figures regarding the reality companies and whatever developments are coming in. I think that all are signaling good pre-sales number. So same can happen to Anantraj, but we really need to see exactly that is happening, and hence would like to wait for some more time. My idea is to make an entry at the lower level of around 520 to 515 odd levels. Regarding ITC hotels, this is looking good to us right now. I believe that hotel industry as a whole is going through a very good phase, and we believe that ITC hotels is one of the beneficiary among them. One can make entry into this counter at the present moment of time, but for Anantraj, I would like to recommend wait for some more time before making any sort of entry.
Okay, Anantraj, wait for some time. ITC hotels you can buy right now. But Asta, just out of curiosity, if you were to invest 2 lakh rupees right now, what would the counters be?
Because I believe that power sector is looking good to us. In fact, today also we are seeing some sort of momentum in the power stocks. So in that space, we are very much positive on the counters like Voltamp transformer, although it is not pure power play counter, but I believe that is very good. So Voltamp is looking very good to us, and we are recommending it to our clients as well for the possible target of 10,000 and above. So first counter is that. Secondly, we are liking Hexaware Technologies in the IT space. I think that is one of the counter which after the IPO listing has not performed that strongly, but I believe there is more steam in this counter. So Hexaware is another choice with a price target of again 1,000 in this counter. So these two are some of the counters which we are finding attractive to play long-term bets on.
Voltamp and Hexaware Tech are the picks that Asta would go ahead and buy. All right, our next caller, Pradeep, is calling in from Bengaluru. Pradeep, hi, a very good morning to you. How can we help you today?
Very good morning to all of you. Ma'am, I am having 100 shares of Himadri Specialties.
Okay.
Bought at 415 rupees. I had expected this stock to go up quite because it is closely linked with, it's a proxy play to EV. So I just wanted to know whether for long term of, say, another 2 years, I would hold it or should I book profits?
Okay, got your question, Pradeep. I'll take this up with Asta. Asta, what's the view like for Himadri Specialty Chemicals and any other counter that you like in the specialty chemical space?
So yes, Navin Fluorine is looking very attractive. I think Navin Fluorine is one of the counter which today has also shown the momentum. Maybe the QIPs can be one of the reasons, but still that counter is looking very good to us. So Navin Fluorine is our preferred choice with a price target of around 50 to 100. Now talking about Himadri Specialty Chemical, what I'm seeing in this stock is that stock is looking good to me because whatever profits they have posted is 38% growth, which they have posted in the bottom line of Q4 numbers of the year gone by, financial year gone by. But I would really like to see how it's going to perform in the coming quarters. So for Himadri Chemical, just wait for some more downfall to come and then make entry. Meanwhile, I think the result season is also arrived only. So I think definitely we'll get the results also. So then there will be a better chance to make a good decision on this counter. But for Navin Fluorine, we are quite positive with a price target of 5,200 to 5,500.
Okay, the next question is coming in from Japan, believe it or not. This is, Alex from Japan. Interesting. And Alex wants to know about Sagility. So I'm coming back to you on the fundamental outlook for this company. Asta, would you invest in this at this juncture? What is the potential upside?
So yes, Sagility, the day the IPO came, we were very positive. In fact, we have recommended to subscribe on this. And the most attractive point was that the issue price, because the ticket size always matters for the retail investors, and it was only rupees 30 stock. So yes, we had a good time to recommend this counter. Now talking about this, I think yes, this is the counter which is again poised for some more returns from here. 45 to 48 are the immediate targets, because whatever we have seen is that they have shown a good growth in the mid-teen growths in FY25 number, and now going forward they are getting the benefit of the cross-selling of their products, as well as we have seen that there is a good reduction in their borrowings also. So looking after all the factors, the stock is looking good to us. Yes, one can invest in this counter with a price target of 48 to 50 in the longer term.
All right, our next caller is Raghuveer, who's calling us from Bengaluru. Raghuveer, very good morning to you. How can we help you today?
2400 से रहे पोकर पर मता.
Okay.
320 में हम लिया था.
क्या बात है?
2020 फर्स्ट प्राइस.
2020 में लिया था आपने? कोविड के बीच में.
21 में लिया था.
अच्छा.
21 में लिया था.
हाँ.
अच्छा, पिछले बार एक बार फोन किया था, अविनाश पर के पूछा था हमें.
हाँ.
अभी मैं परसों एक दो दिन के पहले 200 शेयर भेजा हूँ, 1750 में भेजा हूँ.
ओके.
उसके पहले 1416 में 800 शेयर भेजा हूँ.
ओके.
अभी 2400 शेयर मेरे पास है.
हाँ.
अभी नेक्स्ट टारगेट कितना, जैन के पास तो पूछना था हमें.
हाँ.
नेक्स्ट टारगेट कितना है, अभी कितना में बेच सकता हूँ.
अच्छा, आस्था जैन को पूछना है आपको?
2 साल रख सकता हूँ.
ओके, आपको फंडामेंटल व्यू चाहिए, मतलब आपको आस्था जैन को पूछना है ये सवाल?
हाँ सर, हाँ सर.
जी जी, ओके. तो आस्था, आपको ये सवाल है, उनको ये होल्ड करना चाहिए या जैसे कि वो कह रहे हैं वो प्रॉफिट बुक करते आए हैं, उनको होल्ड करना चाहिए या बुक करना चाहिए प्रॉफिट?
So regarding Wukhad, if you permit me, shall I answer in Hindi?
That is preferred, Asta. That is preferred. That is preferred. Yes.
हाँ, तो नमस्कार सर. आपने बहुत अच्छा किया कि आप टाइम पे इस पे प्रॉफिट बुक करते गए, लेकिन मुझे ऐसा लगता है कि थोड़ा सा अभी प्रेजेंट अगर हम बात करें टाइम की, तो थोड़ा ये और अभी मोमेंटम डाउनसाइड का दिखा सकता है. लेकिन अगर आप अपना धैर्य बनाए रख सकते तो प्लीज इसको आप कंटिन्यू करें अपनी होल्डिंग को. मुझे लगता है कि इसका जो नेक्स्ट पड़ाव आएगा वो इसे 1800 से 1900 तक आराम से लेके जाएगा. अब मैं फंडामेंटल्स की भी बात करूं तो जिस तरह से हम जानते हैं कि दवा बनाने की ये कंपनी है और इनका जो व्यापार है वो विश्व में काफी जगह फैला हुआ है, तकरीबन 12 जगहों पर इनका व्यापार फैला हुआ है और बहुत अच्छा, और इन्होंने विभिन्न तरीकों से, मतलब रीजन से इनका व्यापार आता है, तो एक ही जगह पूरा कंसंट्रेशन नहीं है, जो इनका सबसे पॉजिटिव पॉइंट है. नतीजे ठीक ठाक थे, नतीजों में कोई बहुत बढ़िया उछाल हमें देखने को नहीं मिला, लेकिन लॉन्ग टर्म के लिए, लंबे समय के लिए 1800 तक जाने की पूरी क्षमता रखता है. तो छोटे समय में देखें तो थोड़ा सा नीचे आ सकता है. अगर लंबे समय का ही नजरिया है तो सर बने रहें, 1800 से 2000 के भाव ये दिखाता हुआ नजर आएगा.
Wow, interesting. 18 से 2000 का भाव भी from longer term perspective possible है, is what Astha is saying. All right, Astha, thank you so much for that view. All right, the next question then, Satyanarayan is writing in from Vijayawada, Andhra Pradesh. He's got ASM Technologies, 100 odd shares, bought at 2,500 a piece, and wants to continue to hold this from a longer term perspective of 3 odd years, and wants to know a view on this. Astha, I'll again have to come to you for this one. Not sure if you have this under your coverage, but ASM Technology, if yes, what's the view like?
Yes, it is not under our coverage, so I would not be able to comment on this.
No worries. I'll take this up with Swati then. Swati, ASM Technologies, what are the charts indicating?
Yeah, but there is no such strong formations on the chart as such, but on the high side, it has a very crucial resistance of 2600 levels, 2700 levels, which is provided by its swing resistance levels. If it surpasses that level, then only we can see some strong momentum towards to 2800, 2820 levels. Whereas on the downside, as of now, the immediate support lies at around 2580 levels. So as long as it holds that level, we can keep a hope that the strong stock might perform very well on the higher side. So as of now, I would suggest to hold on your particular stocks, but please try to maintain the strict stop loss of 2480 levels on the downside.
Okay, so that's the technical view with regards to where ASM Technology stands. All right, our next caller, Narendra, is calling in from Hyderabad. Narendra, hi, a very good morning to you. How can we help you today?
Yeah, hi team, good morning, and panel team everyone. So actually I have 2 points. So recently I bought 361 and Access shares. 361 around 20% I'm in profit. Access gets around 70%. So today's market it's a little bit down. It's 4% is down and 361. Access gets 2% is down.
Okay.
Can we hold or can we sell or what is the process? Like this, apart from like I have like 5 lakhs as of now. Can we investment in this textile market? Like as of now, today's market is good in the textile.
So Narendra, I'll be able to take one question. You've given me 3 questions already. So the SOP is that you can ask us only one question. So you'll have to choose which question you want to get answered for, and then I'll take it up with the experts. So you have to make a choice now.
Yeah.
So which one would you choose?
Yeah, Access Gates and 361.
Access Gates and 361. Okay then, Narendra, I'll take this up with Astha quickly. Astha, what's the view like on Access Gates and 361? He's already made investments there.
Yes, regarding Access Gate, actually we have done a coverage on this counter way back in December 2024. So HEM Securities has released one report, and at that time it was only 586. So what we have seen a strong jump from there. Now this counter we are finding attractive because they have got the diversified offering along the aerospace and the other spaces also, like defense, automotive, energy, etc. What we believe that the management guidance was very, very strong, and in fact management has guided for a strong growth in their revenue and with a CAGR growth of double digit. So overall Access Gate is looking very strong to us, and we still believe that there is a more upside left in the counter, but in the shorter term maybe some sort of cooling off can be seen. So long-term perspective is quite optimistic for this counter. Remain invested with a price target of 1800 to 2000 in the longer term, where the time period can range from 6 months to 1 year.
Okay, and a quick view on 361 as well. Would you hold on to that as well?
Yeah, 361 is again a hold from our side, but right now we don't want to recommend a fresh buying in this counter, looking after the kind of valuation, and we are seeing also the price momentum is on the downside. So overall, in the longer term, it is a hold, but in the short term, we would like to recommend that one should not make a fresh entry in this counter at these levels.
Got it. Swati, I'm coming to you on the next one. Manjunath from Bengaluru wants to know about Chennai Petro, which has been under a tad bit of pressure in the recent past. Yesterday it was down, if I'm not mistaken. The stock is up about 0.2% right now. He's bought at levels of 728, which is not too far away from the current market price. And he's planning to hold for only the next 3 to 6 months. What is the potential upside, and where would you put the stop loss?
Alex, I'm really positive on this particular counter because from the last 3 to 4 months, the stock has started showing a very positive trend from the lower level. This month, we have seen almost a gain of 8.5% till the date. As of now, the counter is trading in the high tops, high bottom formations. I believe that it has a very strong potential to reach up to 840 to 900 in the coming 4 to 6 months duration. So you can definitely hold on the long positions. Downside, it has a very good support at around 670, 680 levels. Unless and until it doesn't give the breakdown of that support levels, the view will remain a positive for a target of 840 to 800 level, 840 to 900 levels on the high side. So my view is positive on this particular counter.
Okay, positive on Chennai Petro is the view that Swati has with respect to where charts are concerned, of course. The next question is from Sandeep, who's writing in from Mumbai, and he's asking about Trident Limited. He's got 1,000 quantity bought at 46 rupees and wants to know if he can hold, average or exit. Asta, before I take up the question with regards to where Trident stands, your quick view on all of these textile companies. They've been buzzing today, and this is because of the entire tariff play, because right now Bangladesh is at 35% tariff, Indonesia at 32%, Vietnam at 20%, but Indian tariff rates are yet to be decided, although the last negotiation was at 26%, which was at a pause, of course. But if these tariffs are higher for all of these companies, which are major textile exports, it's beneficial for Indian textile exports for sure. What's the view there? And then, of course, your view on Trident Limited.
Yes, we are quite optimistic, and that's why we have also liking the Gokuldas exports. Although in the today's trading session we have seen the stock is running like anything, But in the longer term, Gokuldas exports is still looking very solid to us with a price target of more than 1,050 to 1,100. Now, talking about Trident Limited, they have posted very strong set of numbers. The only problem is with the valuation because they have moved ahead of the industry price to earning multiple of around 25, while their price to earning multiple is more than 30, I suppose. So the valuation is a major issue with the Trident. But we believe that on the basis of the kind of macro development which is happening, definitely all these textile stocks are poised to show more upside from here. So remain invested in this counter. In fact, the results they have posted for Q4 FY25 were also very strong. So overall, just on the basis of valuation, maybe the stock may not run as fast as other counters are, but still it has a potential to move till the level of 38, I suppose 35 to 38. So remain invested in this counter.
Can we pull up the Dixon share, please? If we can just pull that up and see what the ticket price is right now. It's 15,330. So Karthik from Hyderabad has got a sizable amount of dry powder lying available, and he's saying he wants to buy 5 or 6 shares of Dixon Tech for the short term, and he's wondering whether he can buy the current price. So given that it has such a high ticket price, the question to you, Swati, is would you buy this, or is there another better opportunity in your opinion for the short term?
Yeah, Alex, as of now, this counter is really doing very well from the last few weeks. If we look towards the weekly chart, the counter is on the verge of the formations of a W-shaped pattern, which gives an indication that on the technical front in the near-term future, we are likely to witness a very strong momentum rally. Today, the counter is down by almost 0.5%, but I believe this is the very good levels to take a fresh bet as well, because it's well placed above the short-term moving averages, which gives the positive indications. Momentum indicators are also very positive. So at the current level, at least you can buy 50% of quantity, whatever you're planning to buy. Upside, it has a very good potential to reach up to 16,500 to 17,000 levels. So up to that level, I'm looking a positive rally on the high side. So it's definitely a buy call from my end.
Okay, buy for Dixon and probably half the quantity right now, and then later buy on dips is the view that Swati has. All right, with that, it's time to slip into a very short break, but we'll be right back answering more queries on the other side, so do stay tuned.
That's huge. That is a biggie. It's out.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
back. You're watching Ask Profit, the show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, Jagdish is calling us from Bengaluru. Jagdish, hi, a very good morning to you. How can we help you?
Hi, good morning. So I subscribed this Hyundai Motors during the IPO, have about 98 allocation, bought at 1960.
Okay.
Wanted to know what is the medium to long-term view. Should I hold or should I sell it off and book some small profit here?
Okay, got your question, Jagdish. I'll take this up with Asta. Asta, he's been holding the Hyundai shares since the IPO time. What would you suggest? Should he book the 9,000 odd profit that he has, or should he continue to hold for further upside?
So if the time horizon is long term, definitely a hold is recommended. First of all, kudos to his patience, because I remember the time the IPO came, it was not able to perform strongly. It went below 1900 also, but now the stock has yielded results. My idea here is on the basis of the kind of management guidance we are seeing, because management is guiding about the growth of more than 5 to 10% in the FY26 numbers as well as in their top line. And they have quite a strong portfolio of new launches, because for these auto companies, launches always play a very important role, and they have got a very strong portfolio of new launches by FY30. So although the time period is long, but still I believe that in the long term, this counter is well poised to move upwards from here, because this is a global company, and I believe that it will be there in the mutual funds portfolio. So definitely a hold is recommended from my side. Let the stock rise till the level of 22,200 to 2,300, and then again review your query. Right now, remain invested.
Okay, remain invested is a view on Hyundai, and hold on with the patience that you've displayed so far, and it will reward you. Parag Milk Products is the name of the counter we're talking about next. And Swati, this is a question for you. Neha from Bengaluru is asking this. She's saying that she's making 25% profits at this point, but she needs targets and a view for the next 2 to 3 months. So a stop loss from this point, and also the target that you would suggest.
Alex, my view is definitely positive, because after a long period of time, the stock has showing a performance on the daily as well as on the weekly charts. The interesting formation that it has given the breakouts of a rounding bottom formations and trading in the pattern of the high tops, high bottom formations. I believe that it has a very strong potential to reach up to 270 to 280 levels. So for the short term to medium term, the target lies at 270 levels. If you want to keep a profit stop loss, 220 is acting as a very strong support level. So by maintaining that as your profit stop loss, you can hold on your long positions for a target of 270 to 280 on the high side.
Okay, so considerable upside still available in Parag Milk from this point. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hey, good morning. So I have 4 lakhs of corpus, and I just want to invest on 2 stocks. One is Sun Pharma and the other one is TCS.
Okay.
So I just want to know, is this the correct level to, move into that stock?
And what is your time frame? When you say that you've got 4 lakhs to invest, you currently don't have any other shares, or do you want to add on?
No, I do.
Okay.
No, I don't have any shares of Sun Pharma and TCS.
But you want to add to your portfolio. I got it. So,
yes,
but what is the time frame that you have in mind?
Months.
Oh, 3 months. Okay.
3 months.
Swati, I'm coming to you on these 2 large cap stocks. Of course, TCS is going to be in focus on account of its earnings. I'm just wondering if you would suggest waiting for that to come through, because there could be quite a degree of volatility based on what is announced, and Sun Pharma.
Yes, Alex, you rightly pointed out that due to the results, upcoming results, we might witness some sort of a volatile trading session into this particular counters. The very good levels lies at between the 3,300 to 3,250. So those are the very strong support range for the TCS. So if you want to take a long positions, wait for some more time, and if you're getting any dips towards 3,300 to 3,250 levels, that will be attractive level, and the risk reward ratio will be also favorable. The short term momentum target will lies at around 3,550, 3,600. Up to that level, we can witness some sort of a pullback rallies. Coming towards the Sun Pharma, my view is a little bit cautious not to add the long positions at the current market price. This counter looks positive if it's getting a deeps towards 1,600 to 1,550. So those are the very strong support zone for the Sun Pharma. So wait for some more time, let the stock correct more, and if it's find out the supports nearby 1,550 to 1,600 range, then you can take a long positions. Upside upside is limited. Initial targets will lie at around 1750. If it surpasses that level, then the trend will change and the counter will lead its rally towards to 1900. So the view for a medium term for both the counters are a little bit cautious to negative. Hold for some more time, and if you're getting any dips, then you can definitely add on.
Okay, add-on dips for TCS is the view that Swati has. All right, the next question is from Rajiv Bhatia, who's writing in from Bengaluru. He's holding 590 odd shares of Thomas Cook at 176 and wants to know if he can hold or book losses at the moment. And this is from a very short term perspective, 15 or 30 odd days. Swati, I'll stick with you again for this. Thomas Cook, what are the charts indicating?
See, today we are witnessing a pullback rally in this particular stock because the counter has made a cluster formations of a support at around 152 to 155 levels. So as long as it holds that level, I believe it has a potential to lead a rally towards to 168 to 170 levels. So I will suggest to hold on this particular counter. Please maintain the strict stop loss of a 154 rupees on a downside and carry your long positions. Immediate targets will be a 168 and beyond that level, 175 levels can be tested. So hold the long positions with the strict stop losses.
Got it. All right. We've got the next question from Palakkad in Kerala, and Murli's got this question. Genus Power and Infrastructure. He's purchased 1,100 shares at a price of 1,250 rupees per share. And he's saying that despite the best results, quarterly and yearly, the share price has fallen. He says it's a good management, guidance and orders are in hand for the next 5 years. He's wondering why there is a significant loss, and it is a significant loss for him, Asta. He's sitting on a loss of nearly 10 lakh rupees. What should he do in your opinion?
So he's absolutely right. Results were fantastic because Q4 numbers were like, bottom line more than 100% up. In fact, what we have seen that yes, they have got a very, very strong order book as well. But what we believe that major issue might be with the valuations because it has already risen a lot. So that can one of the reason that we are not seeing this stock performing now. And let's wait for some more time. Let's wait for another quarterly results to come in. So meanwhile, our idea here is to stay invested in this counter till the next quarterly results arrive, and then again review your query in the show.
I'm not certain that Murli's gotten the, or at least maybe we're interpreting it wrong, because I've pulled up the max time frame for Genus Power and it has never been at 1,250 rupees per share, unless he's talking about a split that has occurred at some point or some other corporate action, but I don't think so. And so therefore, Murli, I would invite you to just check and let us know what the actual price is that you bought this share for. And so therefore that 9-10 lakh loss may not be appropriate. Let's go to the next one.
Okay, the next question then is from Neelam, who's writing from Jaipur. She's making a 35% profit in AU Small Finance Bank and wants to know the strategy and target for the next couple of months. Swati, I'll come to you on this one. What are the charts indicating for AU Small?
See, all the PSU banks are really doing very well because whatever the bank nifty rally we have seen in the past, all the larger caps has been participated, but the PSU has not taken a participation in those kind of rally. Now it is the PSU bank who will take a nifty on the higher side, bank nifty on the higher side. My view is definitely positive in this particular counter's downside. It has a very good support of at around 740, 750 levels. So as long as it holds that support levels, upside I'm looking for a target of 900 to 940 levels. So it's a hold from my end. If you want to keep a profit stop losses, you can hold on as long as it holds the support levels of a 750 on the downsides.
Okay. There's an interesting question from Lalita, who's writing in from Kerala. And Adore Welding, the name of the company is ADOR Welding. Asta, I was looking at what this company is because frankly I was uncertain. It is 1,885 crore market capitalization. Apparently it's involved in providing customized solutions for contracts related to refineries, oil and gas, petrochemicals and certain other sectors. So she's been holding this for a period of 10 years and she's got 209 shares. I'm just wondering if you have any view. I won't blame you if you don't, and if she should hold on.
In the past, we used to track, but right now we are not very much, into this company, so not able to comment on this.
Okay. So, I mean, she's been holding for a long time. So, what is the view on the charts? At least if we can provide that, Swati. Adore Welding is the name of the counter. It's currently trading at 1084.7.
Sure, Alex. The view is positive because from the last 2 to 3 months, we are continuously witnessing upward rising channel. The counter is trading in that formations. As of now, it's well placed about the short-term moving averages 20 DMA, which is a very positive indications. From the last 2 days, we are witnessing some sort of a selling process, which we cannot be denied as such because already we have seen a very strong rally from 800 to almost 1150. So the profit bookings cannot be denied, but it has a very good support at around 1032. So as long as it maintains that hold support levels on the closing basis, the view will remain a positive. I'm looking for a target of immediately back towards to 1150 to 1200 levels. So you may hold on the long positions by keeping the strict stop loss of 1050 rupees on the downside.
Okay, so that's with regards to where Adore Welding stands. The next question is from Rohan, who's talking about LTTS. He's bought at 4405 a piece and has a target of 5458 and is willing to hold for the next 6 odd months. Should he revise his target or should he just exit is his question. Swati, again come to you on this one. What are the charts indicating?
See, as of now, from the last few 7 to 8 weeks, if we look towards the weekly chart, it is under the consolidation phase. It's trading within the range of 4200 to 4400 levels, not giving any clear idea about the directions. I believe the consolidation phase is likely to be extended and it will come on in a positive directions once it manages to give the breakout of 4450 levels on the closing basis. We need a sustained on the closing basis as such. Then only we can see the upward rally towards to 4700 to 4750. So view is positive, but the short term period of time it is under the consolidation phase. If you want to hold it for at least minimum 6 to 8 months, then you can definitely hold on. Downside, it has a very good support of 4200 levels. So as long as holds that levels, the view will remain a positive.
Okay, Pakshal Jain from Bellary in Karnataka is asking this next question. AB Capital is a stock that he has identified and he sees that based on the charts, it seems to be giving a multi-year breakout. Is that true, Swati? And he's looking at it over the course of the long term, which he's defined as 4 to 5 years. Could it be a multi-bagger in that time frame?
See, Alex, definitely the counter has given multi-year breakouts. We have seen levels of 2030, 40 in the 2010, and after that, even those levels has been tested in 2024. Now in 25, we have seen the breakout of those cluster resistance, but already the counter has given a rally from 160 to 270 levels. So for the shorter period of time, we may witness profit bookings, and the counter will likely to trade in the higher tops, higher bottom formations. Now we might witness some sort of a profit booking which might take a counter towards to 250 levels, and again it will lead to the new high towards at least minimum target would be a 340 to 350. So if you have any longer positions of a low levels, try to book your at least partial profits because the counter is trading at a very much high levels. Even it's trading in the overbought zone, so we might attract some sort of a profit bookings at a higher level. So at least partial profits are recommended at the current market price, or another partial you can hold on by keeping a profit stop loss of a 250 for a target of 340 to 350 levels.
Okay, all right. Swapan is calling us from Kolkata and asking about a company that has flown into rough weather. Dream Folks is the name of the counter. Swapan, very good morning to you. How can we help you?
I want to know what should I do? It is continuously falling.
Yes. Okay. And when you bought it, did you buy it for the long term?
Yes.
Okay. I'm presuming that you have looked at the recent updates that the company has shared. It is said that it's certain projects that it had taken on for large private sector banks have been closed. You've seen that update, right?
Okay.
Okay.
What should I do now?
Yeah, let me ask
it is
Asta.
Continuously falling.
Yes. Let me give Asta a chance to give you an opinion on this. Asta, the latest updates that it shared, it said that there would be material impact on account of the closure of the packages with ICICI Bank and with Axis, if I remember correctly. It's seen quite a bit of erosion. Should he hold on or should he exit?
So right now, yes, the news flow is not positive, but we are getting, in our daily times news flow from this counter, like some where before 10 days also, I suppose on June 18th also, probably a month, they have said that they have tied up with some other, corporates also. So, I mean, the news flow has continued to flow in this counter, but what we believe that it is not able to perform strongly. And yes, the financial performance has not been so great. So my idea here is to exit partially and to remain invested in the partial quantity. Let's wait for the results and then make a decision regarding the full exit. But right now, I recommend to exit partially from this counter.
Okay, partially exit from the counter is the view that Astha has on Dream, folks, considering everything that's going on around the company. All right, the next question is from Narsima Reddy, who's writing it from Hyderabad. He's saying that Reliance has appreciated 19% in the last 2 months and wants to go ahead and buy right now for short-term gains and wants to know if this is the right time to make an entry or not. Swati, do you think for the next 2 odd months, making entry into Reliance makes sense?
Yes, definitely. Reliance has given a very strong breakout of rounding bottom formations on the weekly chart. And the breakout was at around 1440 levels. And already we have seen 100 points move after such kind of a breakout. I will suggest to buy at the current market price always, but not 100%. At least 30-40% can be accumulated at the CMP. And if you're getting any deeps towards to 40-50, you can take again a bet on the buy side. Upside, I'm looking for a target of 1620 to 1740 levels on the downside. So view is definitely positive if you want to chase the rally by at least 30-40% at the current market price.
And let me ask you to repeat that again. Are you saying 30-40% from here?
Yes, the quantity, whatever the quantity is planned by, for example, 100 quantity, at least 30-40 shares he can buy at the current.
Sorry. I thought you were talking about potential upside from this point. It took me a little bit by surprise because then we're talking about 28,000 on the Nifty 50. All right. All right. Anyway, so let's go to the next question. Varun from Dehradun has got CDSL at a price of 1615 and bought again at 1780. He's wondering whether to add more the current price of 1736 or thereabouts, or wait for more correction. What's the view on the charts, Swati?
My view is positive, Alex, but the only concern is today we are witnessing some sort of a profit booking and it's on the verge of giving the breakdown of 20 DMA, which is a little bit cautious point. So today's closing will play an important role. If it gives the breakdown of at least 17-20 levels on the downside, then more selling pressure is likely to be seen. So I will suggest to wait for some more time. If we witness a correction, then 1650 levels are the good levels to take a fresh long positions, but not at the current market price. And if the stock find out the reversals from the support levels on a higher side, I believe that if it gives the breakout of a 1770, then you can take a fresh long positions after the breakout. Upside, I'm looking for a target of at least 1900 to 1940. So the view is definitely positive. A breakout on either side will decide the short-term trend of this particular counter. So if you're finding any support zone on the downside, then you can take a long positions.
Okay, positive view on CDSL is what Swati is indicating. The next caller, Sidesh, is calling in from Bengaluru. Sidesh, hi, a very good morning to you. How can we help you today?
Yes, hi, good morning. So is it the right time to invest in Jio Finance? Recently I bought around 50k shares. I just wanted to know, is it the right time to invest in Jio Finance for the long term?
Okay, got your question, Sidesh. Astha, do you think that's the right thing to do, buying Jio Finance right now?
Yes, Jio Financial is looking very, very strong to us. So I think, yes, one can make a entry into this counter because what we believe that there are certain innovative products which this company will going to launch. In fact, rising interest income is also helping the company boosting good numbers, and they have taken certain strategic initiatives also. So overall, I think this counter is well poised to move more upside from here because one important point is that, in fact, the customer base has also tripled. So overall, this counter is looking good to us, recommending a buy for this counter with a price target of 350 to 375 at the initial levels.
Got it. Okay, so Ashok has got the next question, writing in from Bengaluru. Praj Industries is the name of the counter. He's bought at levels of 1,280. No. Okay, it's the other way around. Flip it. Okay, 450 is the buy price. He's got 1,283 quantity. So I can see how that might have gotten confused. So therefore, he's in the green, in fact. He bought at levels of 450. It's currently at 496. And he's wondering what the view is. Swati, on the charts, what's the view on Praj?
view is a bit cautious. Alex, I will suggest to book the partial profits at the current market price. Second partial, you can hold on by keeping a strict stop loss of 480 rupees on a downside, because the counter is trading in the low top, low bottom formations, and it's trading below the 20 DMA as well, which is a little bit cautious sign. So we might witness some sort of a selling pressure in this particular stock, which might take a counter towards to 470 to 460 levels as well. So that's why 50% can be booked at the CMP. Another half you can maintain the long positions by keeping a profit stop loss of a 480. Upside momentums can be seen only if it gives the breakout of 510, which is the previous swings low. So unless until it doesn't give the breakout of 510 levels on the high side, a positive move cannot be witnessed. So it's as of now, I will suggest to book your partial profits.
Okay, book partial profits for Praj Industries where technicals are concerned. The next question is for you again, Swati. Arun from Tamil Nadu is writing in. He's bought 1,000 odd shares of Kelton Tech at 122 a piece and wants to know the target price for the next 6 odd months. What are the charts indicating?
Yes, as of now, this particular counter is really doing very well from the last few weeks, Maima. I believe it has a strong potential to up to 150 to 160 levels for a shorter period of time. So you can hold on your long positions. Downside, it has a very good support of 130. So by keeping that as a stop loss, you can hold on the long positions for immediate target of 150 levels.
Swati, sorry, I've gotten a clarification from Ashok, and he says that his buy price was not 450. It was in fact 690. And so therefore he's incurring a loss at this point. What is the advice? Does it change? You had initially said book partial profits. What would you suggest now?
I will suggest to hold on, because at the current market price, you can't book so much losses. If we look to on a larger degree formations, the stock is under the consolidation phase on the weekly chart. So 480 is acting as a very crucial support levels. So as long as holds that levels, the view will remain a positive. On a higher side, as long as it doesn't give the breakout of 510 levels, a positive momentum cannot be seen. But for a longer term duration, I will suggest to hold on. If it manages to give the breakout of that levels, then definitely 550, 580 levels can be seen in the near term future. But you need to keep a patience and you should hold on the long positions, because the counter is already trading nearby the oversold zone. So the downside risk is limited compared to the on the higher sides. So I will suggest to hold on for the longer period of time as well.
Okay, so that's with regards to where Praj Industries stands. The next question is from Ram Rao, who's writing in from Pune. He's holding 175 odd shares of Datamatics, bought at 53.8 a piece, and is saying that he's already sold around 25 odd shares about a year back at around 600 odd rupees. Wants to know as to what is the upside that is being seen on the charts from next 6 to 8 months perspective. Swati, Datamatics is the counter. 6 to 8 months, what's the target that you're penciling in?
My view is positive on this particular counter, Mahima, because on the weekly chart, the stock is on the verge of giving the symmetrical triangle formations breakout, and there is a lot of cluster resistance at around 680. I believe it has a potential to give the breakout. I'm preempting the breakout at the current market price, so you can hold on the long positions. If it manages to give the breakout of those levels, 800 to 850 levels can be seen in the near term future. So you should definitely hold on this particular counter. Downside, it has a very strong formation, or we can say the support it lies at around 600 levels. So as long as it holds that level, the view will remain a positive for immediate target of 800 rupees.
Okay, all right. The next caller is from Pune. Ranjana is calling us. Ranjana, namaskar. How can we help you today?
Yes, actually I'm holding a share of STL Tech around 58 shares with an average price of 84 rupees.
Okay.
So I want to know whether I have an investment horizon of 6 months, whether I should invest more in this company.
Okay, okay. So congratulations, first of all, for making the profits that you have. Swati, she's got a 6-month time frame, bought at levels of 84. This is a stock that has gained quite considerably, but she's got 58 shares. Gains, therefore, are limited. Would you suggest booking out or adding more?
I will not suggest to add more at the current market price, because the buying prices will come up. But definitely, if you are getting any dips towards to 95 to 100 levels, those are very attractive levels, because the counter is on the formations of the flag pattern. It's on the verge of giving the breakout. Upside, I'm looking for a target of 130 to 140 levels on the higher side. So you can definitely hold on your long position. If you want to add the quantity, let the stock find out a support back towards 200 to 95 levels. Those are the very attractive levels to take a fresh long positions. So it's a definitely hold from my end.
Okay. It's time now, ladies, to hit the rapid fire round, and you know what that means. We'll throw as many questions at you as possible over the course of 2 minutes. The first one is on Adani Energy, and we've got Satish, who's bought at levels of 1,250 rupees. He's asking whether to hold or sell. Swati, on the charts?
I will suggest to hold on this particular counter with a trailing stop loss of 860 levels. Upside, we can see the target of 940.
Okay, one more. Titan, coming at you. Swati, Dikshit is wondering whether to buy at the current market price for a period of 3 months, considering the drop of 5%.
No, I will not suggest to take a fresh long position. Fresh long positions can be added if stock finds a support at around 3,300 to 3,250. Those are the attractive levels to take a fresh long position. So, as of now, avoid.
Okay. Hero MotoCorp holding 50 shares at a price of 4,818. Prasenjit wants to know whether to hold for the long term. Asta?
Yes, a hold is recommended for this counter for the longer term. However, initial price target can be set at around 4,500 levels.
Okay. Prajwal Gowda wants to know about Techno Electric Engineering. He's bought 890 quantity. I'm not sure of the price, but he's looking for a long-term view. Should he add more at the current price? What's the view, Asta?
Long-term view is positive. Only problem is with the valuation, but the growth is very strong. So yes, buying is recommended for the price target of 1650 to 17.
Havels is the name of the counter. Mutuarasu from Madura is asking about this. He's bought at levels of 1520, which is very close to the current market price. Would you hold, Swati, at this point?
Yes, Alex, you can hold on by keeping a stop loss of 1480 on a downside. Immediate target will be a 1600 to 1640 levels on the high side.
Reddington, technical advice is being sought. Suman wants to know, view is for the very long term, 5 years. Would you buy this current price, Swati?
No, not at the current market price. If you're finding any dips towards to 270 to 250, those are very attractive levels. And upside target can be seen at least 440 to 500 levels.
Okay, Muiz wants to know long-term prospects for EID Parry. He defines that as 10 years. Asta, would you buy?
I would buy at the lower level of around 1040 to 1030, not at the current point.
Okay. Asta and Swati, thank you so much for joining us today. Incidentally, I'm told that we have answered 34 queries today over the course of the 1 hour that we have had Ask Profit. So thanks so much for answering all the questions that you have. Viewers, we're completely out of time. Hopefully, the 34 stocks that we have discussed have benefited you in some way. Do stay tuned. We've got lots lined up, starting with Know Your Company. That is up next. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and we've started to pick up on larger trends as well and discuss it with specific companies. And today is one such company. Could this possibly be a larger trend all the way through FY26 and beyond is really the question that we'll be asking. We're going to talk to a microfinance company, or predominantly microfinance lending company, and we're going to talk about Satin Credit Care. Why is that so? That is the biggest question, of course, that we'll be asking today. Is the worst over? And if so, what are the trends looking like? Q1, we may not get specific guidance, of course, fully understand that because companies will be on silent period, but we've been able to manage to at least get a perspective as well. That will also go a long way in helping us understand where this goes in terms of opportunity in the microfinance space and whether investing in it is good at this point of time, whether you're finding bargain buys or not. So that's really the first question. The second one, they have exposure in southern facing states, Karnataka being one of them, Tamil Nadu being the other, and therefore are they reducing exposure there? Is credit quality improving in certain pockets? Is growth coming back? So all of those questions around concentration, because they do have a decently large concentration in some states, and that is the other thing that we'll be picking up. The third piece is with regard to rising competition in saturated markets. Now, mind you, everyone's gotten into microfinance in a big way. I'm not saying that microfinance is saturated, but there are certain markets which already look saturated. So is the low-hanging fruit over, or are we going to continue to see growth in the next cycle like the way we saw in the last? Has that at all changed is what I'd want to understand. The fourth one is macro tailwind visible? Recovery in rural, is that visible? Because that could well drive both asset quality recoveries as well as how growth kicks in going forward. So we'll try and understand both of those. Fifth piece is goals. FY26 guidance not disclosed. Unlikely that it will get disclosed either because we are still on silent period. But what is the goal like for FY27 and beyond? Let's cut out the clutter for FY26, maybe look at FY27 and beyond. What is the outlook looking like? And last one, is there over leveraging still in the system? If so, how much? And what are the bureau gaps like? Outside of this, of course, rate cuts, we'll try and understand what that and how that impacts someone like a Satin Credit Care. As well as how is growth impacting the industry as a whole. So we'll try and understand all of those macros. But let's first start off with what the company is all about. I'm not going to take too much time on this, but I'm going to try and keep it as detailed as possible at the same time. NBFC MFI is what this one is. It's basically a regulated lender in the microfinance space and has an NBFC MFI license. Right? Again, not getting into the explanation of that, it lends mainly to low-income women through joint liability groups model, the JLG model. That's what it's called. And what exactly is it? I'll explain that very quickly. So what is the JLG model? Important to understand. A JLG, or a joint liability group, is a group of individuals who actually form this group to borrow money. Right? So all of them will come together, borrow money, and the group guarantees each other's loans. So they know each other well, and they'll be a guarantor for the other's loans. Typically, it's individuals who may not qualify for your traditional loans, something like a secured loan, someone who already has a decent credit history. So both of those pockets of people would likely not qualify. And therefore, what will happen is you will opt for something like this, a joint liability group, where there is a lesser likelihood for lenders to be worried that they will default on their loans. Obviously, this cycle has shown otherwise, but at least that is the perception, and that reduces the risk to a certain extent that there is little doubt on. Who takes joint liability group loans? Well, it's small farmers, people who don't have, or rather there is a lack of credit history, people who need to be brought in financial inclusion. It also enhances social capital, but it's small farmers, entrepreneurs, individuals running small businesses. All of those people are essentially the group that is targeted when it comes to JLG. Now let's talk about the nature of joint liability group loans. And this will probably explain better as to what a JLG actually warrants. Each individual is responsible for the other's loan as well. So the other making the repayment, you're the guarantor for it. So that's one. Even if one member defaults, others are responsible for payment of the loan. Loans are offered without collateral, so you don't need an underlying collateral for opting for these loans. And it's typical for persons in similar businesses to make a group, and because they'll understand each other's businesses. But this also, of course, leaves you open to the risk that if that business were to be failing, then pretty much all the loans are exposed. It also, Satin in particular, is also diversified into other lending, because this is obviously slightly more risky. So the other lending they do is to housing, MSME, and they provide software as a service, but that's relatively smaller. So we'll probably talk very little to nothing about some of these things. But housing, MSME is large, and we'll talk about that. Around 1,700 odd crore of their loans are housing, MSME. Now let's talk about scale. Geographies. They are in 29 states and union territories. They are in 529 districts. They have around nearly 1,600 branches, 33.5 lakh customers, and the concentration will also come up on your screen. The top 4 states are 56% of the loans. The next 6 are 27%, and then the remaining 19 states are just 17% of the loans. So that's how really the loan mix is structured. Now let's talk about the type of loans that they give out, and that's how the loan mix is. It's microfinance predominant, 87%. Then you have housing finance, secured MSME and retail is just about 6%. And then there's a business book, which is relatively small. But broadly, it's these three. And if you club these two, it's roughly 1,700 crore, nearly, in terms of size. And that one is the one which is growing fast. That's what they're focusing in on. Now, let's talk about metrics. This is a lender, and therefore the metrics will obviously be slightly more nuanced. For those who have watched us will know. We'll start off with the income statement, the balance sheet, the asset quality, and the key metrics for lenders. We'll break that up in that fashion. Thereafter, we'll look at shareholding, street cred, street coverage, and valuations. And we'll evaluate the company on the basis of these parameters. Let's start off. Let's talk about the income statement. In terms of growth, well, it's been a decent 3-year CAGR. They've done around a 27.5% growth on the net interest income number. Your operating profit too has grown or ballooned 52%. So there's an OPEX play which is playing out on the numbers there with regard to where operating profit is concerned. Your provisioning has gone up, but it's also a tough cycle, and therefore this one is where all of the profit cyclicality will come from. Look at the profitability in FY24, look at the profitability in FY25, and what you'll see is that cyclicality comes in only when there is an asset quality issue, or when there is expected credit loss, which actually translates to provisioning on the income statement. So that's how the income statement shapes up. We're giving this a thumbs up only from a perspective that there is definitely going to be some lumpiness in where credit costs are concerned, but your top line growth and your operating profit growth, plenty of levers to play both of those. Profitable nonetheless, and that's the only possible reason why we're giving this a thumbs up. So we'll give this a thumbs up for now. Let's look at the balance sheet now. And when you see the way in which the balance sheet has moved, we've not seen substantial growth over the last 2 years or so. From 9,000 crore odd in terms of AUM, the AUM has gone only to around 12.5 odd thousand crore. Now that's a decent growth, there's no doubt, but it's a 2-year CAGR that we're taking. So growth has come in, but would you want it to grow faster on a low base? Definitely. Also try and understand it's a bad cycle and therefore growth has been curtailed to a certain extent. So that's the other thing at play. Now you look at FY23 and 24 and look at the growth there. Nearly 20%, right? Or rather over 20% growth. In fact, nearly 30% growth there. And then thereafter you look at FY24 and FY25, there's just growth not visible. It's not even double-digit growth. So that's where some of the concerns start to crop up, that it's a highly cyclical business, but that's the nature of the business. And we'll talk a little bit about that going forward as well. You look at the capital adequacy, fairly healthy in that sense, above 25% across all 3 years. So no concerns with regard to where capital adequacy is concerned. Now let's talk about asset quality for a bit. You see how asset quality has moved over the last 3 years. This is basis the company presentation itself. So we've picked it up straight from there. There's plenty of movement with regard to your NPA ratios. There's no control over that. At least that's what it seems to suggest. We've given this a neutral only from a perspective that it's not ballooned in significant fashion. We've not seen your GNPA go above 5% or 6%. And therefore, we've given this a neutral. It's a bad cycle that it's been through for sure. Asset quality a concern for sure. So that's something that you want to keep on your radar. But that's the nature of the business. Again, that's what I'm trying to say. Microfinance by its very nature is that way. And if you're invested in it, that cyclicality is part of what you're invested in the business for. So, and that builds into valuations as well. So you want to keep in mind all of those factors when you're looking at this particular metric. Now let's talk about key metrics. And again, you'll see some bit of that cyclicality on the ROA. While the margins are fairly steady to a large extent, look at the ROA. Flat or rather near zero at FY23 levels, FY24 sharp rebound, and FY25 at 1.7%. So that's the nature of the business. When you're investing in something relating to microfinance, you'll get very good yields. So you're getting an 18.5 to around a 21% yield on your product, which you'll probably never get anywhere else. But look at the margins as well, nearly 11 to 13% on the margin count as well. So again, it's a very, very healthy margin. You won't see these kind of margins, especially in the NBFC space, in too many places. So what you want to therefore also judge is the fact that you will always have a better margin, but there will always be a credit cost built into the margin, which kind of will impact your ROA, and that the worry is the chunkiness of the credit cost that comes into the margin. It should not dilute your ROA to such an extent that it wavers so much, which is exactly what is happening. But again, to a large extent, that's the nature of the business. But you have to keep in mind that this is very, very high margin to try and build in for that credit cost. Lending is always a business where you have to take care of credit cost with the top line that you're making, and thereafter arrive at your ROA. And if you're able to do a decent ROA even in bad cycles, then that gives you leverage. So that's the way one needs to think of microfinance and lending in general as well. If there is very, very low credit cost on your lending, then of course your margins will be lower, right? And therefore it's a mix of those two, which you have to judge on the basis of. And look at the OPEX to assets as well. There's been a bit of a taper in FY24, which has aided the ROA. We've seen a bump up with regard to cost to assets as well, or rather OPEX to average AUM as well in FY25. So that's how we're looking at all the key metrics. It's a very, very neutral set of numbers that we're seeing. We've given this a neutral as well. More to wait and watch on with regard to consistency of performance. That's something I believe the markets will be looking out for. Let's look at shareholding pattern now. The promoter ownership is around 36%, around nearly 5% owned by FIs. They've sold a bit of stake in March of 25 in terms of that quarter. DIs have bought an equal amount, and the public holds the rest. It's a small company, sub 2,000 crore in market cap. So some things that you need to look out for. Now let's talk about street cred. Last 1 month returns is just 3%, 3 months is around 17%, 6 months is around 8 odd percent, and the 1 year is negative 23%. So there's clear pain there, at least over the last year or so, for those who have invested over the last year. But you look at the last 5 years, it's a doubler. We've again given this one a neutral as well, because the last 5-year performance over the longer term, it's done okay. It's been a doubler in the last 5 years. And we're at the bottom end of the cycle, almost. And we'll find that out, obviously, when we speak with management. Now, let's talk about street coverage. There's one buy, there's one hold, there is no sells, 5% upside. One is there are very few people covering the stock, or very few analysts covering the stock. Second is the upside isn't not looking too attractive. Well, unless we get better information from management, we won't be able to understand exactly what is it that is being penciled in, which doesn't offer a decent upside. And if it doesn't, then maybe we stay away. What also we have to look for is valuations, and let's pull that up. Look at the way your price to book is currently. It's trading at 0.7 times current. It's trading at 0.6 times 1 year forward. This is basis the two analysts who have made forward projections. And you look at some of the others. This is looking likely the best among all the others in terms of valuations, but you must keep in mind that it's a smaller counter, point number one. It's got less coverage, and therefore the 1 year forward valuation may well get impacted. And point number three is that you want to be cautious in a tough credit cost environment. So all of those three factors, we've been cautious about this, given this a neutral. Let's quickly pull up all the metrics that we've just spoken about and try and sum it up. So income statement, balance sheet, asset quality, key metrics, shareholding, street cred, street coverage, and valuations. And that gets us a rating of 4 out of 8 on our KYC. But let's bring on board Mr. H.P. Singh, Chairman and Managing Director at Satin Credit Care, joining us live. Welcome, sir. It's a pleasure speaking with you. I want to first understand from you, how is the industry as a whole playing out? Is lending returning? Are you starting to see recoveries trickle through at all? Has the cycle bottomed? Is the worst over?
Oh, yeah, I think, if you look at the asset quality metrics, definitely, I think the worst is over. I think that's probably one positive statement which I would like to enumerate, When I say the worst is over, I probably say that the peak was somewhere last October, November. I think, from there on, I think the asset quality has improved, the collections have improved. And definitely, if you really look at it, the last half of a year, financial year, is always very good in terms of microfinance, because the first half is very, very slow because rains, heat waves, and everything takes a toll on the disbursement and the collection. Now, having said that, I think for us, if you look at the entire landscape of the industry has not fared very well. And just to give us perspective, I think you explained it very well, and I was looking at that. The matrix, the income statement, everything which you probably brought out to be. We were probably one of the only institution which was 4 quarters in profit. If we give a complete landscape of the last 16 quarters, we've been profitable in the last 16 quarters. Now, that is probably one very big positive in the entire industry. So where we probably are able to see our institution as compared to the other institutions, I think we've been able to handle asset quality, we've been able to handle our credit costs, we've been able to handle our growth. In fact, we are probably one of the only company which would have grown 7% from the last year. If you look at the entire peer group of MFI, everybody has degrown. In fact, the degrowth is far more sharper for a lot of institutions. We in that even phase have grown by about 7%. So I think if you look at the complete mixture of asset quality as well as disbursement as well as our growth, I think we've performed I think, the best in the entire industry, and that is what I can probably say it right now.
Point taken, Mr. Singh. So things definitely improving. So I know you have stayed away from giving guidance for FY26. Can I push you for a guidance on this forum in terms of growth for FY26? And I'm not talking Q1. Let me make it very, very clear. Growth guidance for FY26. And is there a credit cost guidance I can get for FY26? What's the thought? You've said it'll shrink from 4.5%. How much?
Yeah, I can give you a guidance. We are in the silent period, but the guidance will definitely come in. But the only thing which I can say is that it's going to be positive. Okay. That's probably a reply which I would like to place it on record right now. In terms of credit, our credit cost as well as our collections efficiencies, all put together, I think, we are at a place where we've actually, we've seen the peak happen probably last year. Now it's a way how we are able to really address that. And my sense is that, even the credit cost, which was about 4.6 to 4.7%, will definitely go down. That's for sure during this FY26, and that is probably two things, which I can put it on the table right now. Now, the guidance will come definitely. I think we said it that it'll come post the first quarter. I think it'll come at that point of time.
Sir, talk to us 3 years. What is the book size going to be maybe 2 to 3 years from now that there is better visibility, at least with regard to asset quality? Do you double book in 3 years? Is that a reasonable expectation?
Yeah, I think doubling a book is not what we want to really concentrate upon or look upon. For us, the biggest matrix is your asset quality. I think even if the growth is in, let's say the early teens as such, or whatever it is, I think for us, what is important is our asset quality good enough for us to generate an ROA of about 2.5 to 3%. That's what our final goal is. For us, growth will come because there is technically there's nothing which probably gives us any kind of a reason why we can't grow. We can grow, but the point is, can we grow in a fashion where our credit cost doesn't take a hit, where our GNPs don't go down, where our profitability is related to the ROA, which we really like to put. As I said, 2.5 to 3% ROA. And if I have probably, we have got I think a 6-year horizon, and this is, since we are a listed entity, you can probably see it, see the numbers of all across, 6 years on a trot, even in this cyclical, non-cyclical phases of our, we've maintained an average of about 2% ROA. And 2% ROA for a financial services company, and that to a microfinance company, where the cycles are very, very, very tough to really handle. Last 6 years, average ROA of 2%. I think that's a very huge statement, which I would like to say that, having a 6-year trot of 2% ROA, I think is fairly good for us.
So, Mr. Singh, what gives you the confidence to guide 2.5 to 3% ROA? Where's the kicker going to come from in the next 3 years?
The kicker is, again, since we were practically different from the other peer group, and when the credit cost has definitely hit, I think, double digits also for a lot of players, Over there, if we've been able to be, let's say, we are 2.5, 3 times better than, the peer group, I think, for us, when all this probably dies down, when the cyclical matrix will probably be on a stable level, I think, there for us, it's very easier in terms of our growth as well as our credit costs, as well as based on our asset quality, we'll be able to generate a 2.5 to 3% ROA. Along with that, I would also like to place on record that for us, I think, technology, we are probably one of the one of the institutions which has got a great fallback on technology. For us, technology is like the key. It's an enabler, definitely, yes, but we follow a lot of technology. That's the reason why we opened up our subsidiary, which is a technology company, because for us, we believe that the growth or the future probably for microfinance will also lie, maybe to a large extent, how your technology also enables your acquisition of a customer, your disbursement cycles, as well as your collection efficiency. So I think that's a key matrix also to be looked at.
Mr. Singh, what is giving you the confidence that we've bottomed in terms of asset quality? or rather credit cost. The worst is over. Are you seeing a pickup with regard to rural? Are you seeing better rural income? And what is it that you're doing in terms of geographic concentration?
See, I think, and I'll give a couple of things which probably will lead to it. I think one, the disbursements have started picking up. It was not like the way it was before because it was an election year last year. It was probably the heat waves were very massive, as well as I think if you look at the complete cyclical stuff, people have degrown, but our disbursements have picked up from there on. Even our collection efficiency are better. Now, if you look at the last quarter of the financial year 25, I think we were probably one of the best ways we could probably do it. Our PAR was completely under control. Collection efficiency of X bucket was close to about 99.8%, which is pretty good if you really look at it. Based on all these factors, and where if you look at the general environment as such, the monsoons are fine at this point of time. I think they're talking of a normal monsoon this year. That also gives us a key insight into that the rural income, the farmer income, as well as agri and agri-allied income will also probably see an uptick. That is also one of the key reasons where Kharif crops have been sown properly. I think it's probably 100%, and even the crop acreage has also increased over there. So my sense is, based on all these factors, I think we will probably look at a much better quality and a much better disbursement growth moving ahead from here.
Mr. Singh, I have 30 seconds. A quick take. What changes in the next cycle versus the current? I have just 30 seconds, sir.
So I think all our focus on credit quality, technology, as well as our acquisition, the way we acquire a customer based on credit bureau and the score systems which we have inherently of our own company, I think that will give us an edge over probably a lot of people going forward ahead.
Okay, thank you so much, Mr. Singh, for coming in, speaking with us, giving us that perspective. For me, the headline, essentially, viewers, is that the worst is over with regard to where microfinance is concerned. We're going to see a likely kicker in FY26. That's what he's hinted towards. We'll have to wait and watch as to how Q1 pans out, and thereafter will come the key commentary which markets will quickly start pricing into. So keep your eye out on this one. It's an interesting space. But thanks so much for tuning in. That's all from our side, folks. Thanks for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true. And today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Markets trade as flat as a pancake. Nifty hovers around the 25,450 mark. Sectoral action makes Nifty bank and finance lead. IT posts minor gains. Meanwhile, it's Titan that is tumbling about 5% after posting a disappointing first quarter business update. Kotak Mahindra Bank, on the other hand, rises as advances and deposits show a healthy uptick. Textile stocks are abuzz. Gokuldas Exports, Trident and Vardhaman Textiles all trade with at least 3% of gains. This after investors see Trump tariffs on Bangladesh and Vietnam as a boon for Indian exporters. And select AMC stocks see some smart moves. This after Antique releases a bullish note on the Indian mutual fund industry. Separately, positive outlook by Jefferies sends Bell rise 2% higher. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. Let's take a look at how the markets are faring at this point in time. Of course, we'll get you an update on the stocks that are buzzing away in trade a little later on the show. But right now, when you take a look at the markets, quite a muted day of trade coming in. Range-bound trade is what you're looking at. Whether you look at Nifty, that is hovering around 25,400 levels thereabout, or even when you take a look at Sensex also, not doing all that much. That's Sensex clinging on to a little bit of green at this point in time, but around those 83,400 levels thereabout. So that's Sensex that we're talking about, but let's also take a quick look at some of the top losers from within the Nifty 50 pack. So it's Titan, Dr. Reddy's, Trends, Cipla, Bajaj Auto, Sun Pharma, Maruti Suzuki, as well as M&M that make it to that list. On the flip side, when you take a look at the gainers, it's Kotak Bank on the back of that Q1 business update coming in, Eternal, BEL, Grasim Industries, NTPC, as well as Asian Paints. So those are some of the counters that are buzzing away, gaining at this point in time. In terms of the sectors, you have finance, bank, as well as IT holding on to a tinge of green. So finance is your top sectoral gainer, followed by bank, IT as well. Doing quite well at this, just somewhat, in fact, holding on to a tinge of green at this point in time. On the flip side, there is Pharma that is tanking away from within this pack. Of course, there is Aurobindo Pharma that is down about 4%. Like I mentioned, some of those other names, DRL as well as Cipla, that are not doing quite well from within this pack as well. Media, Auto, PSU Bank, Consumption, as well as Realty that are also not doing all that well. But let's also take a look at Kotak Mahindra Bank, because that counter, in that stock, in fact, the company has come out with its Q1 business update. The stock is buzzing with advances and deposits showing a healthy uptick. Let's bring in Harsh with more on this one.
Well, it's the fastest growth among mid as well as large cap banks that it's clocked, and they've put out disclosures. First time in a long time that we've seen Kotak Mahindra come out with quarterly growth numbers. And in terms of that quarterly growth number, the net advances grew 4%, while the total deposits shows only a 3% growth. But mind you, it's generally on a Q4 base, which is slightly elevated anyway. So for perspective, your quarterly average balance is a better way to look at it. And on that metric, the deposits on a quarterly average balances basis has grown at 5% sequential, which is extremely strong. And therefore, that's an impressive growth number. Even the quarterly average CASA has grown at 2% on a sequential basis, even though it's just 4% on a YOY basis. There you go. So on both of those metrics, it's a strong performance. Now, of course, focus shifts to margins. How are brokerages looking at this one? Macquarie is saying that the Q1 pre-quarter update is better than expected. both as on the loans as well as on the deposits front. CASA decline can be attributed to Q1 seasonality. They are now focused in on margins as well as ability to manage credit cost. Now, Jefferies, they are also saying that the numbers look very, very healthy at the outset, and they're saying that the healthy loan growth, despite a moderation of 200 bips in system loan growth over the past few months, is the impressive part of it. So, positive all across.
Alright, then positive all across, and it looks like a tinge of green. That's quite positive for the stock as well, up about 3%. That's Kotak Mahindra Bank that we're talking about. But let's also take a look at AMCs that are also buzzing in trade. Harsh, while you're with us, talk to us about this entire pack, because you do have brokerage firm Antique, in fact, that has released a bullish note coming in on the Indian mutual fund industry, projecting a 15% compounded annual growth in assets under management or AUM. Tell us a little more about the key takeaways from this note.
Well, yes, they talk about SIP flows being strong. They also talk about passive flows being good, and both of those will likely aid the industry as a whole. And within it, the players also not looking too unattractive in relative terms. You have an HDFC AMC which is currently trading sub 5200, but the target price given, for example, by an Antique is 6,000 rupees. So that's a strong strong mid-teen kind of return that they are penciling in. They're calling it India's second largest asset manager, of course, but strong fund performance will likely drive the numbers going forward. The SIP flows have grown 35% CAGR over the past 4 years for this one. That's what will drive numbers. They also have a positive coverage on Nippon Life India, 950 being the target price on that one. Also an Aditya Birla Sun Life where the target price is 900, and the UTI AMC where the target price is 1500. Again, strong SIP flows is the case that they are making where UTI AMC is concerned. 24% CAGR on that SIP number is what they have penciled in. Of course, the upside cap on this one, given that the target price is 1500.
Alright, then UTI AMC as well as HDFC AMC up about 2%. So those are some of the counters that we're looking at. But let's also take a look at Titan, because jewelry major Titan has reported a 20% year-on-year growth in its consumer business for the first quarter. But when you compare their performance with peers, it's not coming in to be that good of a performance. Mahima, of course, you had predicted that the stock is not going to be doing all that well in terms of the comparison coming in with peers. Tell us a little more about the updates there.
Right, so as you rightly mentioned, overall, two disappointments there in terms of jewelry growth. One, the street was expecting the growth to be around that 22% mark, which has come at 18% mark. So that's the first disappointment. And the second one being, as compared to peers, the growth has not been that impressive. Counters like Kalyan Jeweller has seen a growth of 31% in their revenues versus that of 18% for Titan, and that is why we're seeing the downtick in trade today, with Titan down 5% as we speak. Overall consumer business, however, grew by 20-odd%, but in terms of jewelry, Carrot Lane saw a growth of 38-odd%, buyer growth was flat, studded low ratio was at a lower price point, and overall plain gold grew in mid-teens. The like-for-like growth is in early digits is what they're saying, but overall I think watches is the one segment that stood out for me. Watches saw a growth of 23% and added 9 new stores. This was led by analog watches, and this was both in terms of volume as well as value. Fast Track and international brands have clocked double-digit growth is what the management has said. Eye care business saw a growth of 12%, but they have closed 30 non-performing stores and added 12 new stores. Emerging business, good growth again this quarter, 36% growth. Fragrances grew 56%, women bags grew 61%, and Taneira, for the first time, grew in double digits of around 15%. In terms of international business, that grew around 49%. They added one new UAE store, and Tanishq business doubled in the US markets is what the management has said. Now, what are brokerages saying about this business update? Well, Citi has maintained neutral with a target price of 3,800. They're saying that the studded mix continues to decline. The like-for-like growth was driven entirely by the ticket size growth, and margins will be the key to sustain the kind of valuations it's sitting on right now. In terms of JP Morgan, they're saying that jewelry shine fades in Q1 FY26. They've maintained neutral with a target price of 3,350. They're saying revenue growth moderation is worse than what was feared actually, and moderation in like-to-like growth is too early in terms of double digits, and being lower than peers was a disappointing. Lastly, they're saying that the next catalyst could be the earnings print, and margin delivery and management's growth outlook amid the early festive period will also be something to keep your eye on. So this is the overall view as to what has happened with respect to Titan, and of course where the first quarter of business updates are concerned.
Well, absolutely. So that's Titan. That's down about 5% as we speak as well. But tell you what, let's take a look at some other buzzing counters before we zoom in on the textile space. Jasmeet, in fact, is joining in with that entire list.
Well, right. Yes, thank you for that. First on my list is Krishna Diagnostics. While the Rajasthan High Court passes the order in the favor of the company and its subordinate, while the government also issued a new letter of acceptance for the company. This particular order is for providing laboratory services under free diagnostic initiatives on hubs and spokes model, while this is also under the initiative of National Health Mission of Rajasthan. The second one is by a brokerage that's Morgan Stanley on Schools Bangalore, while they initiate a buy overweight rating with a target, initiates overweight rating with a target price of 549. They say one of the limited ways to play with Indian luxury story, while they also mention overweight rating driven by higher for longer upcycle. They see a strong demand in the industry going forward, while they also mention iconic assets with low net debt position of the company, which is attractive valuation, while steady execution can drive a re-rating going forward if the risk is a key to watch, while these are the stocks to watch for the hour.
Some of the counters that are buzzing away in trade, in fact, on one of those counters, Bangalore, you have 4.3% uptick coming in on that counter. But let's take a look at Belrise, because even this one is buzzing away in trade, 3% uptick coming in on this one. It has come off highs from what it had eked out previously. But let's also take a look at this one, because Jefferies, in fact, has now initiated coverage on the auto ancillary with a buy rating. Puneet is joining in with some more updates.
It's an initiating coverage on a recently listed company in the auto component space, Belrise. 135 is the target, a 20% upside from the current levels. Now, the key aspect is that they're maintaining that 12 to 18% growth in terms of revenue, and profits could continue for the company. They're largely getting 60% of the company's revenue from the two-wheeler space. So they are diversifying into four-wheelers, and that has 3x more components than the two-wheeler space. So hence, it could be a growth trajectory as well. But there are two key points that you need to know. One is that 20% of the company's revenue is coming from commodity trading, which is a very marginal business in terms of profit. So that is one, and that was a concern at the time of IPO as well. And the second aspect is that Jefferies was also the investment banker. So take it with a pinch of salt. The other aspect is that valuations are at 18 times price to earnings, are very, very favorable compared to other peers with niche businesses which are operating above 30 times price to earnings. So those are some of the key highlights, but definitely valuations are in comfort, and business diversification to four-wheelers could aid growth for Belrise going forward.
All right, and thanks for that update coming in as far as Belrise then is concerned. But let's go across and listen into an exclusive reaction from whole-time member Kamlesh Chandra Varshne, who said that the regulators' actions were in line with the violations found.
The Jane Street order came today, and it is quite a shocking order with a big quantum. What is the regulator's stance against something that is so big in quantum, especially in terms of manipulation of Indian markets from a foreign player or entities like that?
So as we say always that we don't generally react on individual cases, but as a general, as I have said earlier, whenever SEBI sees violation taking place, we enter the picture. We try to correct the violation, we take enforcement action, but all our enforcement actions are without any bias, completely on merit and proportionate. So we make it a point that all of our enforcement actions fulfill these three criteria, completely on merit, without any bias, and proportionate. So I think with this I will leave it over there, and it is for all others to judge.
All right, then since we've managed to recap that conversation, let's also, in its first response, in fact, since last week's scathing order, you did have Jane Street in a communication to its employees that has rejected SEBI's findings in the strongest possible terms, and those were their exact words. In fact, Sajid joins in with some more updates on this.
US-based investor Jane Street has decided to take on the regulator directly. In a letter to employees, it has rejected the assertions made by the market regulator in the strongest possible terms. It has told its employees that the SEBI order is based on erroneous and unsupported assertions. It also went on to say that Jane Street engaged with SEBI and exchanges since August 2024 and modified trading after meeting both their exchanges, which is NSE and BSE. Jane Street also made this available to the employees that it has made multiple requests to discuss concerns, but was consistently rebuffed by the Indian exchanges and authorities. On its part, SEBI has made it very clear that the July 3rd and 4th order, which it asked Jane Street to impound nearly 4,800 crores in an escrow account, is a speaking order, and the further investigations are underway, and it doesn't want to comment at this point in time beyond what it has stated in the interim order. This entire thing is now almost heading to a legal face-off, with Jane Street expected to move the Securities Appellate Tribunal, seeking a stay or an interim relief from the Appellate Tribunal. SEBI would be requiring to make the entire investigation. It will have to complete the entire investigation, but we understand from our sources that it will take between 6 months to a year before this investigation can be completed, because the current interim order is just based on the gains which was made in 21 days from Jan 23 to March 31st, 2025. And in that sense, it will take some more time before they can arrive at the final conclusion, and the process would be a little lengthier in that sense. So it's now Jane Street versus SEBI, and SEBI is sticking to his guns, and Jane Street is trying to contest what SEBI has to say with respect to the interim order.
Well, absolutely. Thank you so much for all of those updates. So that is what sources had to tell NDTV Profit. But tell you what, let's take a look at, as promised, let's take a look at the textile space, because some of those counters are buzzing away in trade. Mahima, I'll come to you with this one.
Right. So, all of these textile companies are buzzing because there is higher tariffs that is being imposed on Bangladesh, Vietnam as well as Indonesia, which are amongst the biggest textile exporters to the US. Now, higher tariff on Bangladesh and Vietnam and Indonesia could slow down their textile exports to US, and that could be beneficial to India. India is the 4th largest textile exporter, and as of 2025, it did an export worth almost rupees 34 billion US dollars. And currently, the rate at which we have agreed to, not agreed, but 26% was the tariff that was last laid, which was on a pause, of course, which is still on a pause and still under negotiation. But tariffs have been fixed for countries like Bangladesh at 35%, Vietnam at 20%, and Indonesia at 32%, which is still much higher than that of 26% for India. Now, companies that could benefit from this could include counters like Trident, Welspun Living, which 63% of revenues come from the US. There's KPR Mills, 21% revenue coming in from the US. There's Alok Industries, 45% revenues coming in from the US. Gokuldas, almost 77% coming from the US. So all of these counters could benefit on the back of this. Now, to take this conversation ahead, we are joined by Rajinder Gupta, chairman of Trident Group, joining us now. Rajinder, hi, very good afternoon to you, and thank you so much for taking out the time and speaking with us at NDTV Profit. Just want to get your sense, we're seeing a lot of buzz around the textile space, and considering that there's higher tariff in terms of both Bangladesh as well as something like Indonesia and Vietnam, that is certainly a positive for the textile sector. What is your reading there?
Well, thank you very much for asking me, join. I'm just traveling, so I may not be knowing how good is my connectivity.
Sure, no problem. You're loud and clear.
Yeah. So let me say, first of all, everything is going good. I am not sure when we're going to get the Indian part of that. Yes, of course, the tariff coming on those countries is giving some ray of hope to us, but obviously we enter the home textile business, which possibly are not a very major share of those countries. But we're very optimistic, and I think we are all going to have a much better business propositions in the US in times to come. That's my quick read, but let's wait for the timing. This is what I can make out is in a very positive and optimistic state for all of us.
Gupta, just want to get a sense, there's lots happening in the textile space. There's UK FTA, which is positive. There's tariffs, which could be positive. The entire China also having higher tariffs is a positive for the Indian textile sector. Just want to get a sense as to what's the kind of growth that you're penciling in the entire industry, because I read somewhere that, recently textile exports amounted to around $34 billion US, which, by the way, India plans to, increase to almost $100 billion US by 2030. What do you think will be the levers that will, make us achieve that number, and is that a very possible number on the cards?
I do agree with you that these are very possible numbers on the card, and you rightly asked what the levers, how we really work on the much better productivities and larger, bring our own brand to the marketplace, how we really move from a private label to our own brand. That's one area. And how then we work on a larger capacities to build in India, how we put larger capacities, much bigger capacities, which can really serve and get the market on. So if you really want those numbers, one really also needs investment of that kind in the Indian space.
All right, Mr. Gupta, this is Shreyansi as well joining in the conversation. I also wanted to understand what you think about the roadmap going forward. Now, of course, you've talked about the growth roadmap, but I also wanted to understand in terms of the key challenges that you're penciling in when it comes to this entire industry, because India, of course, is the 4th largest exporter. We already have cemented our position. Is there anything that you see threatening sort of that position at this point in time? I
see. Possibly, we always, always really look for a betterment, and although we're doing much better in many, many areas, but always there is scope to improve. I think complete supply chain has to be more simpler, leaner and cleaner. Logistics is the other part, and then how we really automate and getting more productivity per person instead of having now how we sweat the assets and how we get more productivity and larger modernization or automations instead of depending on too much of human capital. How to build a capex, then only depending on too much of manpower. I think cheap manpower is no more a very common buzzword for Indian industry, to my mind. It could be very individual, very personal experience.
Mr. Gupta, I have a two-part question for you. Considering everything that's working in the favor of the sector, just want to get a sense how much of an outflow are you expecting from Vietnam and Bangladesh that could possibly shift to India because of the tariff differential or UK FTA? Just a brief round figure number that you might have in your mind. And secondly, do you think that the Indian textile right now has the capacity to take up that load, or there will be capex expansion plans for these companies going forward? You can also talk about Trident if you can.
Well, you have a very right question. I think there's a very core question you're asking me. See, on the garmenting front or on the spinning front, there could be a upsurge of even 20%, even 30%, or even could go much better on that. In terms of home textiles, there could be a surge of about 10% plus, and I do believe that technology upgradations and the capex is needed, and the way the government is promoting the PM Mitra Park and various states, that's going to take a very, very quick pace, and they're going to move much faster in that. I think that's a great thing done by Indian government, the PM Mitra Park, and how to really build the assets, capex on that part will be a complete supply chain coming there, could really going to help grow our numbers, what we had in mind. And the way Indian government is working on the Kasturi cotton, their own branded cotton, will bring a very strong brand for Indian cotton, going to help the farmers all around.
All right then, Mr. Gupta, thank you so much for taking time out and joining us this afternoon. So looks like textile exporters are all set to spin yarns of growth, but moving on then with markets trading flat and uncertainty looming, it's no longer about riding the tide, it's a stock picker's game now. So how do you navigate this bottom-up approach, and which are the sectors that you should be zeroing in on? My colleague Neeraj, in fact, is speaking to S. Narain, ED and CIO at ICICI Prudential AMC to talk about markets, sectors and more. Let's dip into that conversation.
Still not come. So we keep on doing work. See, in defense, frankly, it's a completely, it's a very difficult sector for us to understand, because no one is going to come and explain to you all the technologies involved. It is stupid of any government to come and say, here is the technology, I'm going to explain what I'm doing.
That's true.
It makes no sense for them. So what happens is we have to buy on incomplete information. When you are going to buy on completely incomplete information, we are capped to the extent that we can buy. Because it is illogical for any company to explain what they're going to do in defense. If they start doing that, then we would distrust this, because if that company is going to come and explain this is what you're going to do, then I wouldn't trust that company in defense at all. The less the more ambiguous they are on what they are doing, actually it means that they are actually doing defense. That is where the dichotomy comes for us. That's why I think it is very difficult for us to actually do proper research in defense. It has to be somewhere, you say, okay, we'll take this risk in this company, although this company is not explaining things to us properly, and then take that bet on a few government companies, on a few non-government companies, and then move on. You can't expect them to explain to you anything transparently. It is not fair on our part to expect our companies to explain to us anything transparently.
Okay, my final question, Naren, because can't end this, and I should have asked this to you earlier maybe, but this whole thing around tariffs and trade deals, etc. India doesn't have a very large exposure to US, but parallelly India is also signing FTAs with other countries. What do you make of this whole global trade realignment and what it could mean for Indian economy and markets?
See, I think, what we first learned was we thought we should react to it in a big way. Then we later realized that India is such a strong economy and much more domestic than most economies. And we are not affected so much. So if you look at it, once that initial phase happened, after that India has become not very worrying, because at the end of the day, if you look at it, everyone needs India's consumers. Beyond a point, I don't think India is going to get as affected by trade in goods as much as what it would happen to a Vietnam or a Cambodia or all these countries. I think what is important is how do we make use of the fact that we are the world's biggest consumer nation soon, and how we can use that strength. And that's why I think we are less affected by all these things. What is needed, however, is we should become stronger in manufacturing. And that is a task that we have. The way we have managed to become strong in services, we have to become stronger in manufacturing. Is there any country which has become strong in both? The answer is no. There is no country which is strong in both. It's either strong in services or strong in manufacturing. That is the reality. And that is why I would say I won't over worry about it. That is why I am more worried, am I allocating money which is given to us by investors well? Are we doing it carefully? A little less return, but carefully, I'm happy. And given the amount of money that we are getting today from so many investors, that is what worries us, not these trade, because every day morning we wake up to some tweet, we look at it, then how much to worry about it? We have to worry, are we managing money well? Are we not managing very well? That's what worries us every day.
Alright, and that's the slice of the exclusive conversation that NDTV Profit had with S. Naren, where he talks about how to navigate Trump's tariff storm as well as finding pockets of value. But with that, we're completely timed out on this edition of Markets at 12. Thank you so much for tuning in.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. This is Hiral Dadia. Let's quickly take a look how markets are panning at this hour. Interesting day of trade. No major up moves that you're seeing. You're seeing a marginal 65 points up move in terms of the Sensex and Nifty 50, which is absolutely trading flat but below the 25,500 mark. Again, a pretty flattish move is what you're seeing. Let's quickly pull up Bank Nifty as well, and then we'll see what the VIX is doing, because the way the VIX has been panning out has also been very interesting. Bank Nifty seeing gains of around 0.4%, clearly outperforming the benchmark indices. VIX again down 2.5%, but that's not relevant. What's relevant is that it's in that 12 to 13 kind of a band, which is absolutely interesting as well. Apart from that, if you see in terms of individual sectors, let's have the sectoral heat map, and then we'll look at the broader markets as well. If you see in terms of individual sectors, you have the private banking space, which is up in trade. IT is also seeing some positive moves, and this is ahead of TCS numbers that will start trickling in towards the end of the week. And oil and gas, which is absolutely flat. But consumer durables is taking a beating today, seeing cuts of over 2% coming in there. Media is under pressure. Pharma seeing cuts of around 1.3% as well. And if you look at other sectors, you have defense, which is also seeing profit booking along with auto. Let's quickly look at the mid-cap and the small-cap index in trade as well. If you see the mid-cap, 150 at the day's lowest levels, cuts of 0.5% coming in there, and the small-cap 250, which is seeing similar moves, but the cuts are deeper, 0.7% lower. So your broader markets are seeing a deeper correction as compared to what's happening in the benchmark indices. Advanced decline ratio also, you can see on the screens, absolutely in favor of the declines. Versus a 744 number in terms of advances, 1,500 stocks that are declining in trade. Let's look at the heat map in terms of individual sectors on Nifty 50, because that will also give you an idea of what that stat is looking like. There you go again. That's just the heat map of the sectors. Nifty 50 heat map, if we can get that one to understand the individual sectors, that will be important. There you go. Stocks, Kotak Mahindra Bank, the top gainer, and that's on the back of the quarterly update that has come in. Eternal is seeing some good moves. Grasim, BEL, NTPC are the ones which are in the positive. Titan, again on the back of the quarterly update, is down 5.5%. Dr. Reddy's, Trent, Cipla, Bajaj Auto and Sun Pharma, these are the ones which are under pressure. If you see in terms of broader markets as well, in terms of individual counters, let's quickly highlight a few of them. Alok Industries, 14% up move. Gabriel, 8.5%. Yatharth, Avaz, Venus Pipes is another one which is seeing some smart moves. Sharda Motors, PC Jewelers, Fusion and Galaxy Surfactants are a few of the other names which are trading under pressure. But let's also get in Lancelot Dicuna, CIO at ValueX Wealth Connect. Lancelot, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Seeing the way that the markets are reacting right now, and the kind of letters that have gone to other countries from Donald Trump, the expectation in terms of India is that probably India will not get a letter because US is looking to strike a deal with Modi. Clearly from this aspect, if you have to recommend 2 or 3 top picks which could become good investment bets ahead of the earnings season that will start trickling in, what would you recommend?
So I think it's very difficult to figure out, what Trump has in mind and what kind of a deal is going to get structured between India and the USA in terms of trade. And based on that, what would be the companies that would benefit in that kind of a scenario? So I think, if you look at the broad parameters of what kind of deal everyone has been talking about, the companies that could get affected a lot are the companies that export, commodities like steel and copper, etc., to the US. And they have already got some tariffs imposed on them, so I think they will be negative. I think if the services sector is not touched, then that would be a positive sign. So maybe I think I would look at some of the companies in the IT space, which can be looked at as an investment, because from a valuation perspective, a lot of these companies had corrected quite a bit. And given that, the last year has been a little bit volatile in terms of, the global scenario has been volatile, and most companies have been, postponing their IT spends. And so I think that trend may get over because people will start to see this as the new normal, and then, companies would get back to business.
Okay.
So that's something which the space you can look at.
Sure. So lots of factors to watch out for. IT is what we're looking at. In fact, the earnings season for IT will kick off this week, but the street is bracing for a divergent quarter. The key trend is expected to continue, with Tier 2 IT companies likely to outpace their larger Tier 1 peers. We have Jasmeet, my colleague, who will be joining us to tell us what brokerages are expecting from IT in the first quarter of FY26. Jasmeet, over to you.
Well, right, here is a preview for the Q1 FY26 with regards to IT. There are 4 key trends for this particular quarter to watch out for. Firstly, macro environment has not deteriorated further since March 2025. Well, that's a good news. Secondly, almost all companies have announced a solid large deal wins in this quarter, while for trend for Tier 2 companies is better when compared to Tier 1, and it shall continue. While brokers also suggest that demand remains healthy in BFSI vertical, and they maintain that tech spends cannot be held back for much longer. But let's understand on company perspective about what the preview looks like for Q1. While for TCS, primarily due to ramp down of BSNL project could impact a bit on their revenues, while the brokers expect Infosys to upgrade their FY26 earnings from 0 to 3% CC growth to 1 to 4% on CC YOY basis, while the brokerages also are divided when it comes to HCL Tech to see a 2 to 5% CC YOY growth. Wipro guidance for Q2 would remain on the focus and could be disappointing yet again as we have for Q1. While Tech Mahindra's management, also management's comments for FY27 will be something to watch out for. But when it comes to Tier 2 IT companies, here are the things to watch out for. While the LTI Mindtree's strategic priorities under the new CEO, firstly that. Secondly, Persistence targeting $2 billion by FY27. Their commentary on that will be very important. While the brokerages see a 15% CC growth when it comes to Persistent Systems. While Coforge to have the highest revenue growth in the complete IT cycle due to the Sabri deal which it's undergoing. While lastly, Emphasis margin could remain flat on QOQ basis, while the deal wins are likely rock solid yet again. So here's a quick IT review for the coming quarter. It'll be interesting to watch out how the results turn out.
Thank you so much for that, Jasmeet. In fact, we did speak to Mark Matthew, Head of Research Asia at Julius Baer, who's now bullish on IT as a sector, who earlier had a pretty gloomy outlook about it. Let's listen in as he explains the reason why.
The outlook for Indian IT was very gloomy just a couple of months ago. The online betting platforms were suggesting something like 70% probability of the US entering into a recession. Now that's down to about 20%. And apart from housing data, where you've got softness in house prices, generally speaking, I think the data in the US is still favorable. We saw that with the non-farm payrolls last week, which beat expectations. So I would say that the outlook for the U.S. Looks better, and that's not yet been reflected in commentary from the IT companies, but I would expect them to start to speak more positively about their operations in the U.S. So generally, I think it's looking better than it did a few months ago.
Well, that was Mark Matthews, the voice you don't want to miss, at least in the sectoral aspect. But let's focus on a corporate conversation now. TVS Infrastructure Trust has listed today on the exchanges. We're now joined by the management, Mr. Ravi Subramaniam, who's the founder, Ravi Swaminathan, I beg your pardon, who's the founder and vice chairman of TVS ILP, as well as R. Dinesh, who's the chairman of TVS Supply Chain Solutions. Gentlemen, thanks so much for joining in, and congratulations to you on this particular listing as well. Let me first start off, first question on the business itself. I don't think there's any kind of direct peer comparison, to say the least, with your company. If you can just give us a little bit of, introduction about what the company is actually all about, and what was the key purpose of listing this particular entity.
TVS Industrial and Logistics Parks Limited is a 20-year-old logistics and warehousing company. We are amongst the first corporate developers of warehouse. Hitherto, this was in the unorganized sector. Till about 20 years back, most of the warehousing was either in the unorganized sector or in the government sector. We are one of the first participants in this sector from the corporate segment. Our journey in the last 20 years has been very positive, both from the market perspective as also from the regulatory perspective. At the time when we got into this business, we were looking at warehousing as a standalone business. Today, we look at it in our company, we look at this business as an infrastructure solutions provider. That is, we have warehousing as one of our products. We also have a slew of other products which we offer to our customers. Most of the customers that we have in the company are sticky customers, in as much as they have been with us for in excess of 5 to 7 years. That's one. Two is, when we got into this business, we knew that logistics was a very important and integral part of the industry. At that point in time, the country was going through a positive economic upturn, and we identified TVS SCS as a credible partner to take this journey forward on the logistics.
Thank you, Mr. Swaminathan, for that. Just to understand the schematics between TVS ILP and TVS Supply Chain Solutions. Firstly, how is the entire management team expected to look like, taking into consideration it's going to be a different setup? And number two, how is a business going to be taken forward from here on? Are there any, because this is an investment trust, right?
Correct. Just to set the record straight, TVS Supply Chain Solution is an investor in TVS Industrial and Logistics Parks.
Okay.
It was not part of the business. Okay, that is one part of it. TVS Infrastructure Trust, which has been incorporated, and TVS Investment Manager, it's a 100% subsidiary of TVS Industrial and Logistics Parks. TVS Supply Chain supports the company as a true shareholder.
So from TVS Supply Chain side, we don't operate, or we don't have a direct involvement in the operations. Of course, we are also one of the people who use these warehouses, but we are a very small percentage user, if I can say that. So TVS ILP in its journey has had many corporate clients.
Okay.
And the supply chain was, I would call it maybe the seed client when we started this way back in 2005.
Swaminathan, you mentioned that warehouses is not the only business that you have currently. If you can delve a little bit on that aspect as well specifically, and also for warehouses, how many do you have currently? And you mentioned about occupancy is also very strong. So is that long-term contracts that you have with your clients?
Correct. Let me take the second part of your question first. We have 21 warehouses in 9 states spread across, it's pan-India. Right. What was your second question? Sorry.
No, I think from an occupancy perspective.
Yeah, from an occupancy perspective, we have in the last 5 years we have almost 100% occupancy, which is in this industry is a unique feature.
And the total square feet?
We have a total platform of 20 million square feet in TVS Industrial Logistics Park. Out of this, we are transferring to the infrastructure trust around 11 million square feet of warehouses. It is not only warehouses, these are all logistics parks. Let me just differentiate between the two. Warehouse is a construction where you have, let's say, 50,000 square feet and only storage is done there. Whereas in a logistics park, there are more than storage. That is, it's almost semi-manufacturing in that sense of the term. So there are activities other than storage which we do. Warehouse management is one of them. There's a lot of value-added services that the customer requires, which we offer them.
Your EBITDA margin profile is very, very strong, over 80%. Is that because you're currently also offering these value-added services, or is that something that will come in the future?
It is a mix of both. The fact that we have such a high occupancy helps in improving the EBITDA margins. That is one part. Two is because we have a slew of products other than only rental income which comes into our balance sheet. That also goes towards helping in absolute numbers the EBITDA margins as also percentage of EBITDA margin.
You had in terms of profits also in terms of the 80% EBITDA margins, profits compared to the revenue is quite low as a percentage. Is that also because of the high debt of the company? Because the finance cost has actually risen steadily over the last 3 to 4 years. So from roughly about 1,300 crores that you are raising, are you also pairing off a lot of debt from the fresh issue component?
Yes. The purpose of having an InvIT established, an infrastructure trust established, and having investors in that infrastructure trust is to pair off the debt. In fact, after this issue, I would safely say that TVS Industrial and Logistics Parks would be a zero debt company.
That means automatically the the finance cost will go down, and that will lead to increased profitability as well. If you talk about operations, the revenues have been on a downward trend to an extent. Your EBITDA and the margins also have been in that range of 80% to 87%. And in terms of profitability, you've gone down to around 15-16 odd crores. What is that growth that you're expecting in terms of FY26 and 3 years from here on, taking into consideration the plans that you have?
Let me put this in context. The reason why there was lower EBITDA percentage over the last 3 years is 3 years back, we were a 7 million square feet company. Today, we are a 11 million square feet company. 3 years back, we had a platform of 12 million square feet. Today, we have a platform of 20 million square feet. So there is increased output, shall we say, which is not reflected in the revenue, because in this industry, it takes between 9 months to 12 months to set up a logistics park and to earn revenue from there. So the mismatch between setting up a logistics park and earning revenue is what is the difference you're seeing in the EBITDA margins.
And very lastly, in terms of expansion plans, how are you looking at expanding from here on? Because you have a lot of global investors like Blackstone, ESR, GIC who are increasing warehousing investments as well. So there is competition which is building up. What is your strategy, 3 years from now? Where do you see the company? How much capex will you need for that? And will that be through internal accruals, the IPO money that is raised? How are the dynamics expected to work out?
There are two aspects to this question that you've asked. One is we don't consider financial institutions to be our competitors. For those names that you just mentioned, this is another asset class for them. In this business, we are amongst the one and probably very few corporate developers in the trade. That's one. Two is, with regard to our capital requirement, if you see 5 years back, we teamed up with British International Investment, that is BII, originally CDC. As also 2 years back, we got in XR Group as a strategic partner. All these global investors were introduced into the company only from a long-term capital requirement point of view. That is one. Two, coming down to the InvIT, we had various options of choosing anchor investors. We could have had any of these pension funds or these private equity funds as our anchor investor. But we chose to go in with a developmental financial institution like IFC, the World Bank Group, and L&T as a strategic investor, only because they have deep pockets and they will satisfy our hunger for growth.
One last question. In terms of growth over the next couple of years, because I can see your revenue trajectory has been between 150 to 180 crores over the last 3 years. From FY23 onwards. So in the medium term, at least in the short term, FY26, what is the growth aspiration for you in terms of revenue only? And secondly, in terms of competition, how do you see in terms of increasing your business for value-added services? Is it that the companies are existently doing these functions on their own and they outsource this to you? Is that the kind of business model that could help you grow much faster since these functions are getting outsourced to a specialist like you in this field?
Correct. The basic idea was in this last 20 years, what we've done is in the first 5 to 7 years was our knowledge gaining phase of our business. We gained knowledge of the industry. In the next phase was our capability building phase, in which we created capabilities or we bought capabilities to ensure that we are an infrastructure solution provider, not just a warehousing company providing warehouses on rental basis. All these efforts that we have put in the last 15 years have started bearing fruit now in the last 3 to 4 years, where you're seeing our percentage of rental revenue to value-added service revenue is progressively going up. Over the next 3 years, we expect the value-added services to be a significant portion of our total income. To answer your question in terms of are the customers using our services for that? Yes, we are a very customer-centric business company. So we provide all the services which a customer requires. We are not thrusting any product on them. One of the latest products that we are offering the customer is on the sustainability part. We have got rooftop electricity.
So I think a lot of value-added products that come in as well. But thank you so much, Mr. Swaminathan, Mr. Dinesh, for joining us on the show and sharing the views. So that's a new listing that we have been watching out for as well. But let's quickly shift focus to some of the business updates that have come in. Titan, one of the biggest losers today. The sales have disappointed. On the other hand, if you talk about a PN Gadgil, a good show. Mahima is here with us to tell us more. Mahima, what has worked and what has not worked for both of these?
Right, so for Titan, I think two things that have not worked. First one being that the the jewelry growth that has come in at 18% was expected to be at around 22%. So that is one thing that the street is disappointed with. And secondly, with respect to how peers have fared, something like a Kalyan has seen a revenue growth of 31% versus that of just 18% for Titan, and that is something again that the street is not happy with. In terms of the overall consumer business growth, that was at 20%. Overall, CaratLane grew by 38%. Buyer growth was flat, so a disappointing front there. Overall, studded ratio was also lower, and plain gold grew by around mid-teens. The like-for-like growth is expected to be in early double digits. In terms of watches, good growth this quarter, around 23%, and added 9 new stores, mainly led by analog watches and Fast Track. iCare saw a growth of 12%, but they closed down 30-odd stores which were not performing and added 12-odd stores. That is of Titan Eye Care. The emerging business, however, was a decent growth. Overall business grew by 36%. Of course, it's a very small part of the business, but fragrances grew by 56%, women's bag grew by 61%, and Taneira for the first time grew for double digits by around 15%. International business grew by 49%, and they've added 1 new store in UAE, and Tanishq business in US markets has doubled. So that is also a good thing. In terms of PN Gadgil, well, good growth excluding the refinery sales which shut down in October 2024. Retail segment saw a growth of 19%. Revenue excluding overall refinery segment grew by around 30%. Studded ratio came at 10% of overall sales, so that is increasing for them. Same-store sales growth stood at around 8%, which is slightly disappointing. But overall, because of the new store additions plus the overall gold prices going up, the same-store sales growth was impacted. They launched 2 new stores this quarter, and in terms of non-retail, e-commerce saw growth of 126%, of course, on the back of a lower base as well. And franchisee operations grew by around 109%. So this is the overall view as to how Q1 business updates stack up for these jewelry companies.
For that, Lancelot, a quick view in terms of PN Gadgil and Trent. Trent seems to be more interesting. Titan, I beg your pardon, Puneet, just thank you for that. But Titan, a disappointing set of numbers on Titan. Do you think this becomes an opportunity to buy from a longer term perspective, taking the kind of cuts that you're seeing today, or would you say it should become an avoid now?
Well, I think, one has to look at the numbers in a bit of a larger context. Like when you say it has grown by 18% and the size of Titan's jewelry sales is almost 4 to 5 times any of its competitors. So 18% growth is still a significantly large number. And the other companies like PN Gadgil has grown by 19%, but obviously on a much smaller base. So that's one aspect which I think needs to be given in view. Second is Titan also has a much wider range of other products, which are all lifestyle products. And you are seeing some growth. While it does not constitute a significant portion of the sales and profitability, over a period of time, these products are also going to start to contribute. And as long as they are contributing on an EBITDA basis, you will see growth, and in terms of it also justifies a higher valuation as compared to pure play jewelry companies. So I would think, that when you're making an investment, if there is a market correction, then valuations do come off, and that gives an opportunity for you to accumulate the stock for the longer term.
From a longer term perspective is the word coming in there. But staying with business updates, a whole host of real estate companies have also come out with their first quarter business update. Phoenix Mills, they've seen a retail mall sales growth of around 12% on a year-on-year basis. The stock also trading in the positive. If you talk about the occupancy, a 1% dip as compared to the previous quarter. And in terms of the sales growth, this quarter sales growth has been higher as compared to what they saw in the first quarter of FY25. Moving on, if you see in terms of hospitality, St. Regis has seen a dip in terms of occupancy. And if you talk about Courtyard Agra, that has seen a good uptick in terms of occupancy as well. Moving on, if you in terms of the other names that you have apart from Phoenix, Macrotech, again, the pre-sales, a good growth of around 10%. Collections have seen a growth of around 7% as well. And what's interesting is if you have to look at the last three first quarters, Q4 was 17% growth, Q1 of FY25 was 20%. So this first quarter is the lowest amongst the last three first quarters of the financial year. So that is something that we need to make a point of. Note, and the management has said that they are on track to achieve FY25 guidance of around 26 guidance of around 21,000 odd crores, and this accounts for 90% of the FY26 guidance of 25,000 crores, which is the new 5 projects that they've added worth around 22,700 odd crores. Lancelot, quick view in terms of Macrotech as well as Phoenix.
I think, if you're studying Macrotech, you are seeing that, while there was stupendous growth in the last couple of quarters and last years, that growth seems to be now, tapering off. And you are seeing a bit of impact, of, I wouldn't call it a slowdown, but the rate of growth is now starting to reduce. And obviously then the high valuations that the company has, doesn't justify that kind of high growth ratios. Similar, but on the whole, it is a strong company and it will perform well. It will give growth. But question is whether one should buy into it when the valuations are high, given that the rate of growth is slowing down. So I think one needs to probably wait and watch on this. As far as Phoenix Mills is concerned, I think we will see some improvement in the next 6 months as far as its as far as the sales etc. is concerned, because there has been easing of liquidity in the system. So you will find that credit growth is a lot of times drives sales. So you see credit card spends will improve if liquidity improves in the system, as well as a lot of unsecured loans and then tax benefits that come in. So I think Phoenix Mills should see improved growth levers coming in over the next 12 months.
Got it. So Phoenix should be in focus. Soba is what we've missed as well. If you can just quickly pull up a Soba on the screens, because if you see in terms of their Q1 updates, the total sales has seen a growth of around 11%, not doing much because in the first quarter of FY26, in fact, the growth has been highest as compared to the last 3 first quarters, but still Street not rewarding it. But let's quickly slip into a short break. In fact, we spoke to Keystone Realty as well, and they have said they remain on track to achieve FY26 pre-sales guidance. Let's understand what the company had to say.
By and large, first quarter normally is a slow quarter, and we have grown 75% year on year. So, and quarter on quarter also, we have seen a 25% growth. So in terms of doing our numbers, we are well on our way. We have given a guidance of about 4,000 crores for this particular financial year. We have already done 1/3 of it, 1/4 of it in the first quarter, and we are well on our way to surpass our guidance.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, And increasingly, we do almost, last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What?
Markets trade absolutely flat. Nifty hovers around the 25,450 mark. Sectoral action mixed. Nifty bank and finance lead. IT posts minor gains.
Well, Titan tumbles 5% after posting a disappointing first quarter business update. Kotak Mahindra Bank, on the other hand, rises as advances and deposit growth show healthy uptick.
And textile stocks buzz. Gokuldas Exports, Trident and Vardhman Textiles all trade with at least 3% gains. And this is after investors see Trump tariffs on Bangladesh and Vietnam as a boon for Indian exporters.
Select AMC stocks see some smart moves. This is after Antique releases a bullish note on the Indian mutual fund industry. Separately, positive outlook on Jefferies sends Bell rise 2% higher.
Welcome back. You're watching Profit Buzzers on NDTV Profit. But let's quickly take a look at what Nifty 50 and Bank Nifty are doing in trade as we speak right now. Because markets are slightly coming off lows, and especially individual stocks. And there you go, Nifty 50 as well. We've hit a day's high of around 25,495. Pretty much hovering around those levels. But let's welcome in Kunal Sharma, Head of Marketing and Business Head, Modern Trade and E-Commerce, and Ayush Gupta, I beg your pardon, Business Head India at KRBL. Welcome to the show, gentlemen, and a pleasure to speak to you as always. Firstly, the key question that we have is IndiaGate entering the cooking oil space. What is the plan? Why this step? And how are you looking at strategy from here on?
Yeah, see, IndiaGate Uplife is a brand that is born from a deep understanding of evolving consumers. One who seeks not just food but functional nutrition. It's our bold step into KRBL's mission to empower everyday wellness through trusted, purposeful products. So, oil, for that matter, is one of the first categories that we happen to enter, while the overall strategy is to enter into more and more health and wellness products which provide functional nourishment to our end consumers.
Ayush, good afternoon. It's Puneet this side. Thanks so much for joining in. As a segment, though, cooking oil, has seen a lot of competition within India, as well as the margin profile is also very weak. So, what differentiates KRBL into entering this hyper-competitive space, where you think that you can have a moat as well as increase your competitive strength within this space?
Yeah, that's a great question. Thank you. While we've evaluated the edible oil space, what we've seen is that the market largely has, over the past 2 decades, only been monopolized by one player in the health oil space. And that proposition also connotes to a very, I would say, an audience above 40 or 45 years of age. India in the last decade or so has transformed. There are a lot of young, emerging 25 plus consumers who have disposable incomes, are much more aware, are much more health conscious. I think with that vision in mind, we figured out white space in the healthy edible oil space. And both our products, which are Weight Watchers, which is the Weight Watcher Special, and the Gut Pro Oil, kind of resonate with the young India's need when it comes to health first functional foods.
And
you rightly said about the margin profile. While the margin profiles are a little bit bleak in the oil space, but our positioning and proposition will definitely help us gain a premium over the category. However, as I told you, India Gate Uplife is not just an oil brand. We look at it as a platform for health and wellness products. Hence, the overall margin profile for the brand will be margin accretive for the company as a whole.
Got that, Ayush. So essentially, if you're looking at it as a platform, can we also expect other adjacencies that you can enter with this particular platform as well going forward?
Definitely, we are looking at fortified staples. We are looking at other pantry essentials where we can bring in clean labels. We can bring in better nutrition, depending on the considering the lifestyles that have become so sedentary for the young India. We want to give them products or food which which fit into their lifestyles and bring them functional nourishments.
And specifically within the cooking oil space, you have entered a niche segment, which you have mentioned that it's been largely been ignored by the current competitors as well. So what is the medium-term plan in terms of if we can put some numbers as well, because in terms of your the main business is well over 5,000 odd crores in terms of revenue. So while the newer business might take some time to shape up, if you have any 3-year plan essentially where you're seeing this business sometime by FY28 in terms of numbers, if you can give us some context.
Right. So as I told you, Uplife is a health forward platform. We have put down some numbers for us. I think about a 250 to a 300 crore top line is what we are envisaging by year 3 with multiple products in the portfolio.
And just, since we have you here, one specific question I had was also on exports as well, because currently we're seeing a multitude effect of tariffs amongst other geopolitical tensions that are hampering the growth prospects of industries. And one of them is yours. How are you currently dealing with that aspect? And if you can also update us in terms of customers, what are the current conversations that you had on the ground? I know you're currently on silent period, so for quarter purposes, we don't need any kind of numbers, but what is the kind of conversation that you're having with the customers? Has it impacted your business by any means? Is there any kind of delay that you're seeing in terms of delivery as well?
See, as KRBL, our major exposure remains in the Middle East for exports. Those countries are untouched because of tariffs. So business there continues to run as normal. But we've seen great numbers in the quarter 4, and we continue to see an uplift in the export side of the business. On the other markets where tariffs have been imposed, I think it's a category-wide aspect. So largely, I think we are untouched because we also deal in the premium space. We are not the price-conscious product provider in that sense. So I think tariffs, since it's universal to everyone, it's really not affected the business.
And specifically, we've seen an end of wars, especially in the Middle East as well, with what's happening with Israel and Iran as well. So currently, was there any kind of delay at that aspect when this was awarded? And have you, completed these orders right now by the end of June and the start of July? Have any of these pending orders already been completed and delivered now?
So Iran was a little bit of a conversation that we had lately, but because of the war situation, actually the need for shipments to arrive early has emerged. So that's something that has kind of pushed early deliveries, and by I think mid of July we are planning to complete our shipments to Iran.
And one final question on freight costs as well. From the previous quarter, we did see a steady rise over the last year, and that's largely on factors beyond our control. So specifically, has that increased as well? And have you seen actually any kind of decrease in freight cost over the last 2 to 3 weeks post ending of these wars? And currently, where do the freight costs stand compared to the same time last year?
So same time last year, I really don't have the numbers with me, but in the past 2-3 weeks, the freight costs have remained kind of stable. And now because of this ongoing issue on freight costs, it's kind of inbuilt in the overall commodity prices itself. So it's now part and parcel of the business.
Well, Mr. Gupta, thanks so much for joining in, as well as we'll speak a little bit more on numbers as well as what happens with Q1 results for your company. But thanks so much for joining in and filling in his berth for the new launch, as well as for essentially the export aspect that we spoke about as well. But thanks so much for joining in to both of you.
Thank you.
Well, one key aspect, and let's quickly build up Tata Motors very quickly as well, because that was also in focus on the back of Jaguar and Land Rover numbers as well. While it was expected to be a disappointing quarter for the company, the reason it could be in the green today is largely because of numbers being in line with estimates, to say the least. So it's reported a 15% drop in its retail sales. But that's largely because it was expected to have an impact because of tariffs, and because the company exports a lot of its products from Slovakia, which has the higher tariff of 27%, which is the Defender product to the US, and that is exported to the US, and hence we were expecting an impact of 10 to 15% on that. Now that the numbers are out, a 15% degrowth is what they've shown. Hence, I think the market is not giving too much of a reaction, but at least positive, to say the least as well. We spoke to the management of KRBL on what's happening with tariffs amongst other factors. There's also another sector that's buzzing because of the tariff impact, and that's the textile sector. Now it's a buzz on the back of steep tariffs imposed on textile producing companies by US, but in countries such as Vietnam and Bangladesh, which are much higher compared to what we're seeing in India. And we're seeing a positive reaction on a whole host of stocks in India within the textile space. Let's get my colleague Mahima to give us more context on this. Mahima.
Right, so basically what's happening is that there's higher tariff that's being imposed on textile exporting companies, textile exporting countries like Bangladesh, Vietnam, as well as Indonesia. Basically higher tariffs in Bangladesh and Vietnam indicate that the exports that they do will generally flow to India if they are at the lower end of tariffs, and any slowdown in sales of Bangladesh and Vietnam could be a positive for India textile exporters. Now, India is the fourth largest textile exporter in the entire world, and they've crossed the $34 billion mark in 2025, FY25. And currently, the last tariff rate that was imposed on India was at 26%, which is still of course at a pause. But compared to that, Bangladesh at 35% of tariff, Vietnam at 20%, and Indonesia at 32%. So if our tariffs are lower than that of 20%, we'll get advantage that is coming in from all of these three countries. Now, companies that could actually benefit from this include Trident, where 39% of revenues come from US, Welspun Living, 63% of revenues come from there, KPR Mills, around 21% revenues coming from US, Gokaldas, where almost 77% of the revenues come in from the US, and we are seeing up moves on all of these counters on the back of this today. Now, just to give viewers a perspective on what Indian textile outlook looks like, overall textile exports have remained strong amongst the global shifts that are happening. Plus, there is UK FTA that could be positive for the entire space, and India is aiming to reach $100 billion by 2030 in terms of the textile export market. So, combining all of these things together, overall textile industry is set to have a lot of tailwinds going ahead.
Well, thanks so much for that, Mahima. But let me toss this question to our guests as well. We now also have Vinay Rajani joining in into the conversation. Vinay, on charts, we've seen a very strong move on a lot of these textile makers, amongst others, Gokaldas, Vardhaman being some of them. How are you viewing? Do you see a little bit more leg up continuing on the back of this positive news flow for the textile companies?
Yeah, so some of the companies were already showing strength with the previous the news which has come out. If we go by the primary trend, some of the stocks were already into uptrend. If we talk about KPR Mill, it is looking very strong on the chart and has been trading above the key moving averages. So strength was already there, and now the news is coming out, which is positive for the sector as well as this particular stock. So yes, KPR Mill is looking very strong on the positional charts, and we can expect some more upside to come. The another stock is Vardhaman Textile, which is also looking very strong, so we can expect further up move. Vardhaman Textile has been a good company and has good liquidity also. So overall, we feel that this KPR Mill and Vardhaman Textile kind of stocks can continue to do well, though there could be some profit booking in between. But primary trend is bullish. So if we are thinking for the positional viewpoint, then definitely we have a bullish view on the stock like Vardhaman Textile and the KPR Mill.
Got that. Lancelot, to you as well on textile, because we are still awaiting what's the tariff rate that could come for these Indian textile companies, but we're seeing the positive reaction already on some of them. How are you viewing this specific news flow coming out of US for these, tariff on countries like Vietnam and Bangladesh?
So, while I do believe that yes, we would benefit if the tariffs are higher on Vietnam, Bangladesh, because that would give us a bit of a pricing edge. But at the same time, I think many of these companies have already moved up, in anticipation that India will do far better, and we are seeing, for profit growth, you need to look at not only the revenue going up, you also need, improvement in the margins as well as in the profitability. And many of these companies have to do a lot of modernization. They have to improve their product range, and they have to actually make investments in their business before they can actually take up the additional slack that would come up from these countries. So I think end of the day, when you consider that the investment needs to be made, and then only you'll start to see, the companies getting a major market share, it could impact the profitability in the near term. And hence I would rather wait to see how it plays out as far as profitability is concerned, and then look at buying into these stocks, from this point of view.
Got that, Lancelot. But we had a slew of brokerages coming out on a lot of stocks today. Let's pull up one of them. Morgan Stanley came out with a note on Schloss Bangalore recently, which is the Leela maker. And they've come out very interesting notes. Stocks also up almost up 5% now. Let's get my colleague Mahima to give us more context on this. Mahima.
Right. So, as you rightly mentioned, Morgan Stanley has initiated overweight for Schloss Bangalore with a target price of 549. I think what they're liking about this particular counter is that it's a good luxury play to play the entire hospitality theme. They're also saying that one of the limited ways to play the Indian luxury story is via this particular counter. The overweight rating is driven by a higher for longer upscale journey that the company has, and they're seeing strong demand for luxury experiences as well, which could aid top line growth for this particular counter. The company also has iconic assets with low net debt position, and that is also available at an attractive valuation. So that is something that Morgan Stanley that in fact makes Morgan Stanley bullish on Schloss Bangalore. And lastly, they are saying that steady execution can drive re-rating, but concentration risk is something that one should watch out for most certainly. So this is the overall view as to what makes Morgan Stanley bullish on the Leela maker, that is Schloss Bangalore.
Well, thanks so much for that, Mahima. But the other brokerage also called very interesting was on an initiating coverage by Jefferies on Adani Power. Now, they have given a target price of 690 rupees per share on this one. Stocks currently, in the green by just a bit, but off the day's high as well as the lows, trading right in the middle as well. So they highlighted that there are multiple triggers ahead for Adani Power. They mentioned that it's poised for strong capacity addition on comfortable balance sheet strength as well. That's one of the key positives that Jefferies is highlighting. They've also gone on to say that the risk profile is easing as the new capacity secures profitable PPAs. And these are power purchase agreements that they signed with the states as well. So that's another key positive. And finally, they mentioned that the timely capex aided by BHEL, the tie-up which they had with BHEL is also one of the key positives, putting in focus the in-house execution of the company as well. Vinay, let me come to you on both these stocks, Adani Power as well as Schloss. We've seen the strong reaction on Schloss already. Any view that you have on either of these?
Yeah, so the Leela is having a lesser history because it's a new listing and we don't have that much data to comment on. But yes, looking at the short-term chart, 410, 412 is a very strong support. So trader can look those levels as a support and stop loss in the existing long position. The highest level since the listing we can see is around 440. So the trend has changed today. It has gone up with a good volumes also. So the only thing I can comment on the Leela is around 410. There is a strong support. As far as Adani Power is concerned, it is gradually getting strength on the chart. The stock is trading above key moving averages and it looks like that it is headed higher. The immediate resistance which I see positionally is around 680. So 680 is a very strong resistance going forward in the coming months. So for last 3-4 months, it has been gradually improving and technical setup is looking strong right now. As far as support is concerned, I see strong support around 550. So 550 is a strong base for the counter and immediate resistance is around 680, 685. So yes, the setup is quite good for the Adani Power if we think about the positional terms. So looking strong on the charts.
Got that, Vinay. And just a standard disclaimer, the channel that you're watching is part of the NDTV group, which is also owned by the Adani group as well. The other stock that's really rising in trade is Bellrise, actually coming with the name, almost an 8% reaction. And we've seen immediately a very strong reaction over the last hour or so on that. And that could be because of another brokerage note, Jefferies as well. They've also initiated coverage on this one as well. So it's interesting because they've mentioned that it's a recent listing. Company has good growth as well as attractive valuation at 18 times price to earnings, which is compared to the other auto component makers where the company operates, it's quite cheap to say the least. It's one of the leading companies in the two-wheeler space. They make chassis for two-wheelers and they almost get 60% of their revenue from the two-wheeler space as well. Jefferies is estimating a 12% growth in revenue over the next 3 years, while profits could grow at a high of 18% in the next 3 years as well. They've also mentioned that the company is foraying into the four-wheeler space with the components as well, amongst chassis, amongst other things, and they see as key positives as visible on your screen as well, increasing the content per vehicle as well as increasing focus on the four-wheeler as well as the export part as well. Lancelot, on Bellrise, I know it's a recent listing, but anything on these three brokerages that we just spoke about, Bellrise, Adani Power, as well as something like a Schloss Bangalore, any view that you have on either of these stocks?
Yeah, so I think as far as Schloss is concerned, I think we are seeing a trend that the extra luxury segment is growing and there's more spending happening in that segment. So yes, the outlook looks good for Schloss Bangalore. However, there is a big concentration risk in terms of the segment that they're catering to becomes relatively narrow, and these can be subjected to sharp moves both on the upside and the downside. At the moment, we are witnessing the upside and we're trying to factor that into the valuation and trying to say that, okay, you extrapolate the current trend and extrapolate it longer term into future. I think that can be a little difficult proposition as far as valuations are concerned. So one needs to be very cautious when you're looking at the extra luxury or extra high, ultra high net worth spending patterns, because that could change over a period of time and it can result in re-rating significantly. So I think that's a big risk which one should be aware of and looking at buying into these at a higher valuation. As far as Bellrise is concerned, it did come out with its IPO recently, and it's basically an auto component manufacturer. But what happens is that while you are seeing auto component manufacturers, the others are maybe trading at a higher multiple than Bellrise. It's also because the others may have a larger range of products and the acceptability with more customers. So I think Bellrise is fairly priced at this point in time, and while you are looking at growth, I think the growth will come if the entire automobile or auto ancillary segment grows. And at the moment, it seems fairly valued, so it really doesn't, give you much risk return in terms of buying it at these levels.
Got that, Lancelot. Vinay, any very quick view on Kotak as well, because they came out with their first ever quarterly business update of 14% growth in advances. Anything on the chart that suggests this positive move to continue?
Yeah, it looks like that it has one of the outperformer. It has been one of the outperformer, and looks like that the data has come out positive and the stock is reacting. The sector has performed very well. It has outperformed the Nifty. So Kotak Bank is one of the key leader, we can say, in this market, and looks like that it should cross the recent high, which is the all-time high around 2300. So and if I go by the pattern, On the weekly chart, I can see a clear-cut bullish inverted head and shoulder pattern on the chart. So it is a very good continuation of the bullish trend, we can say. So yes, in the coming times, we can expect Kotak Bank to outperform the banking stocks also, and overall we can expect a good outperformance as against the Nifty.
Got that, Vinay as well as Lancelot, thanks so much for joining in, giving us a whole host of views on a bunch of stocks. But with that, it's a wrap on this edition of Profit Buzzers. Stay tuned to NDTV Profit for more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, not much of an action that we're seeing, at least when it comes to the benchmark, but the broader indices, be it the small cap or the mid cap indices, they have been underperforming the benchmark.
Yeah, absolutely. It's been a lackluster day in terms of where the Nifty 50 is. Currently, if you look at it, flattish moves is what we are seeing. In the green, however, let's pull out the point contribution table to see which are some of the stocks in focus over here. So in terms of the Nifty 50 contribution table, if you look at Kotak Mahindra Bank is buzzing, and this is on the back of its business update is what we are looking at. Infosys, HDFC Bank, other stocks in focus contributing positively to the index, while what is leading to that pressure is Titan, and this is on the back of its first quarter business update as well. Reliance Industry, Bharti Airtel, some of the other counters which are in the red is what we are looking at. But in terms of the heat map also, if you are seeing, just to get a sense of the overall moves which is there in where the sectors are concerned, Nifty IT is the top performing sector for the day, up over 0.7%, while Nifty Realty also not that behind it, about 0.6% of gains is what we are seeing. But it's the Nifty Media and Nifty Pharma wherein we are seeing higher cuts over here. In fact, Nifty Pharma is down over 1.3%, 2%. Also some bit of pressure coming in from what is happening on the global side with tariff concerns remaining on the large. So that is on the sectoral side of the index is what we are looking at. But in terms of where the broader markets are concerned, as just Samit pointed out, there is some pressure building it here as well. Nifty mid cap 150 in fact is down over 0.3%. And if you look at Nifty small cap 250, even more pressure over here with cuts of over 0.5%. However, some bit of recovery after the last 1 hour wherein it was at the day's low point. But also let's see BSE 500 to get a gauge of the individual stocks and how they are faring in trade. Right at the top we have Alok Industries up over 14%, Sonata Software up over 7%, Aavas Financials and Ciat are some of the other couple of stocks in focus, while Titan, Jubilant Pharma, Aarti Drugs are seeing cuts of over 3 to 5% in trade today. So Samit, that's the overall picture that we are building in for the broader as well as the benchmark indices. As you just rightly pointed out, not much of an action that we are seeing in the broader benchmark indices.
Well, yes, volume seems to be missing from the benchmark index, but Ventive Hospitality is another stock that we need to keep an eye out for. It is making a major tie-up with Marriott International, unveiling 7 new hotel projects across India and Sri Lanka, and part of its expansion, ambitious expansion strategy. Mahima is joining us with the key highlights of this acquisition.
Right, so as you rightly mentioned, these are the expansion plans that Ventive Hospitality has laid out, and a strategic partnership with Marriott International. They've signed 7 luxury upscale and upscale hotels, out of which 7 hotels will comprise of 1,548 keys, and this will be in India and Sri Lanka, so 6 hotels in India and 1 in Sri Lanka. The partnership will also mark multiple brand debuts in the key locations like Sri Lanka, Varanasi, Mundra, Pune as well as Navi Mumbai, and the company has also announced its plans to develop a hotel on existing leasehold in the Mundra land as well. Now in terms of the breakup of these 7 hotels, 3 hotels will be developed by Ventive Hospitality and its subsidiaries. That includes your Ritz-Carlton, Varanasi Marriott and Courtyard by Marriott in Mundra, and the 4 other hotels will be taken up by the promoter group, which includes the proposed JW Marriott Navi Mumbai, Moxie Navi Mumbai, Moxie Pune Vakad and Pune Kharadi as well. Lastly, in terms of how this stacks up against the guidance, the management had said that they'll double the number of keys in the next 4 to 5 years post listing. They were at 2,000 odd keys and now they're going to add 1,500 plus odd keys. So that takes their overall number to more than the 3,500 mark in terms of keys. So very close to achieving the 4,000 keys guidance. But overall, this is the view with respect to where the entire announcement of Ventive Hospitality and strategic plan of expansion stands.
Okay, so that's the view that we are seeing for Ventive Hospitality. In fact, the stock is up over 4%, and we did speak to the management as well. It's Atul Chaudia, Chairman and Executive Director of Ventive Hospitality. So do listen in.
Just want to get a sense as to what are the exact plans with regards to these 7 contracts, and what is the kind of idea behind going ahead and getting into these contracts.
Hello Mahima, good afternoon. So we listed our hospitality platform on 30th December 2024, and we have had a great year. We have posted almost 1,012 crore EBITDA for 24-25. And as per our commitment during the listing process, that we would expand, we'll double up our inventory over a period of 4 to 5 years. So this is our first step. We have we are signing up almost 1,550 keys with Marriott across the different brands, different cities, and being our background being construction company, we wish to do these rooms very quickly. We'll get them to the market very fast, and we'll make sure that this portfolio is up and operational very soon.
Okay, Mr. Choradia, just want to get a sense. You did mention that you had committed that you'll grow your keys from that 2,000 mark to 4,000 mark, and considering that you'll already be adding over 1,500 odd keys with these 7 contracts, just wanted to get a sense that already takes your room keys to around 3,600 odd keys. So then, do you think that guidance of 4,000 keys will change and maybe a higher target for the next 4 to 5 odd years?
We don't know, maybe, but first we'll try and achieve our 4,000 mark, which all these hotels are greenfield and few brownfields. and we'll still looking out to acquire some ready hotels also, and we'll make sure that we achieve our target.
Okay, and when you plan to acquire these hotels, will that be through internal accrual?
Absolutely, absolutely. So our company is a very different financially, because we have about 1/3 annuity income, and on the hospitality on the hotel side we don't have any debt, so we have huge headroom for greenfield and for acquisitions also.
Got it. Mr. Choraya, talking about these 7 hotels, 3 hotels are being developed by Ventive Hospitality and its subsidiaries, and the other 4 will be taken up by the promoter company. So just want to get a sense as to how this entire thing will pan out. What are the execution timelines like, and when do you think these will start to become operational?
See, most all the hotels what we are signing, they have most of them are approved. All the lands is acquired on the books, and few hotels have already started the work. Few hotels will start the construction in next quarter, maybe in 3 to 4 months time. But the process of design is completed. The process of signing with Marriott is completed. So we have taken almost a year to get to this stage. Marriott does not sign the contract unless they have approved each and every design. We have to design the interior, the architecture to their standards, and all are in. Everything is complete, and now we just have to execute the hotels.
And what are the execution timelines looking like?
Execution timelines will depend from city to city. So, but we target to deliver at least from next year onwards 200 rooms a year.
200
minimum.
rooms a year. Okay, that's
Minimum.
interesting.
Between 200 to 300 will deliver.
Okay, so considering the entire expansion plan into picture, from a longer term perspective, let's say 4 years down the line, when all of these hotels become completely operational, what is the kind of revenue that you're targeting? As compared to FY24, FY25 was a huge jump when it comes to your top line. That was over that 1600 odd crores. 4 to 5 years down the line, what's the kind of revenue growth that you're penciling in?
See, the revenue growth is all depend upon, I cannot give you the exact numbers, but looking at India's growth story, and hospitality is an undersupply market. We are very, very less supply in the cities where we are operating, and we feel we will keep achieving good numbers, good EBITDA numbers going forward also, the way we have done it in the past.
Okay. In terms of your margins, you've said that the guided range of margin will be around 40 to 42%. Will that be disrupted in the near term because you'll be scaling up your hotels, or do you think you'll maintain that kind of margins going forward? Right now, it was at around 37 odd percent, but the guided range of 40 to 42 odd percent.
We feel we'll be in the same range from 40 to 45%.
40 to 45%. Okay. In terms of the overall, doubling of revenue also, which was one of the things that you'd guided. What's the kind of time period that you're looking at from that 1600 crore mark to doubling of revenue to almost at 3,000 to 4,000 odd crores? What's the timeline looking like?
It will take me at least 4 years from now.
Okay, 4 years from now in terms of doubling the revenue. Lastly, Mr. Choraya, in terms of this entire 7 hotels being, being contracted and being executed, the entire thing again will be funded through internal accruals, as you rightly mentioned, in terms of annuity income that you receive. But any plans in terms of fundraising on cards, anything of that sort that's on your mind?
Not at the moment. We'll take that call a year down.
Okay, but that is on the cards, is what you're saying?
Yes.
That's the management of Ventive Hospitality that we are seeing, and the stock is up on the back of this new update that we are looking at. But before we move to the next story, let's focus on the flashes that are on the screen below, wherein sources to NDTV Profit are now indicating what is happening with the current India-US trade talks. Now the deal now hinges on the political will and not technical negotiations. That's something that what we are seeing. But to discuss more about this, we are in fact joined in by Rishabh, which is on the phone line, who's covering this story closely. But But India's offer so far has been finalized. The ball currently is in Washington's court on whether to approve this deal or not. On what is we are seeing for the sectorals, now the US is unlikely to offer exemptions in terms of where the key sectoral tariffs are concerned, which is in steel or aluminium, auto parts, etc. So that's the overall update that we are seeing, and this is all the source-based news that we are seeing between the India-US trade talks, right, Somit?
Let's also go across to Mahima to understand the recent Okay, Rishabh has joined us. Let's get in Rishabh with more details on this.
Right. What's up from surface is that the deal is in final stages. It all depends on political will now, not about what chief negotiators are offering each other. It's not about what the countries are offering to each other at the moment. It's more about political will and whether it gets approval from the highest chair in the country. Now, what we've been also seeing is that the ball has been in Washington court for a while now, and India's key focus with regards to many deal of this interim trade deal remains securing preference and also increasing its competitiveness vis-a-vis other manufacturing economies like Vietnam, Thailand, Bangladesh, Cambodia, Laos. Some of them already got slapped with tariffs last night, so that is something that is seen as some sort of a win for India, but we don't know until we see what deal we have cracked in terms of tariff exemptions. Remember, there is a threat of a 10% BRICS tariff, there's a 26% reciprocal tariff, and also a 10% baseline tariff being levied across all countries. That brings India's total to 46%, and that is something that India is now aiming to get down to favorable levels. Also expect this mini or this trade deal to cover only goods. Don't expect broader issues like digital trade, IPs, and services. That will be kept out of the ambit for now. That will be discussed at a later stage in the first tranche that might come out in September or October this year, and then a full bigger tranche will come out later, maybe next year. So that is what we have currently, and we are keeping our eyes on Truth Social as well as any commentary coming in from governments of both countries.
Right, Rishabh. Thank you for filling us with all those details. Moving on, or in fact, sticking to this trade, US trade data and in fact the US tariff data. And textile sector is one thing that has been buzzing in trade on the back of the steep tariffs imposed on textile producing companies by US. Mahima is joining us with more details on how India stands to benefit with more taxes on countries like Vietnam, Cambodia, Indonesia.
Right, so as you rightly mentioned, there's higher tariffs that's being imposed on Bangladesh, Vietnam, as well as Indonesia. These are the countries that are, big exporters when it comes to textiles as well as garments. And any kind of higher tariffs on these countries could benefit for India because the exports from these countries will flow into India. Overall, India is the fourth largest exporter of textile in the entire world, and it's done, in fact, crossed textile exports in FY25 by around $34 billion. Currently, the tariff that is paused and then the rate that is fixed for India is at 26%, though it's paused right now. But Bangladesh plus Vietnam plus Indonesia have already received their letters with respect to the tariff rate. Bangladesh stands at 35%, Vietnam at 20%, and Indonesia at 32%, which is still higher as compared to where India stands. So India could definitely benefit from any lower tariffs as compared to what tariffs have been imposed on these companies. Now, small cap, textile stocks that are buzzing on the back of this include something like a Siaram Mills, Nitin Spinners, as well as Nahar, and some big names also include counters like Trident, Welspun, KPR Mills, Alok Industry, Gokuldas, which almost has 77% of its revenue coming in from the US. Lastly, to just give perspective to viewers as to how big the industry is, textile exports have remained resilient throughout the global shift that's been taking place. Plus, a lot of tailwinds happening in the sector. There's UK FTA, there's China Plus One strategy that's working in, and India also is aiming to reach the $100 billion mark by 2030 when it comes to the textile exports. So all of these things combined together definitely should work in the favor of the entire sector.
Right. Well, Avinash Gorakshaka, the Director of Research Profit March Securities, is joining us. Avinash, coming to you on this news that has come in globally, obviously Indian textile companies could stand to benefit. What is your view coming in, and which company among the small caps would be better placed from this?
Yeah, I think good afternoon. My sense is, companies which are integrated, typically which add the actual, right from the yarn to the final product. These are companies which would benefit the most, and companies which largely operate in the home textile space. Typically companies like Arvind, or for that reason, Gokuldas Exports, Indocount Industries. I think, we have been quite positive on companies which have been tapping the US market for home textiles, which is a very large market for Indian companies. So typically, at least on the face of it, because of this tariff now announced on Bangladesh for textiles, I think typically you could see a lot of demand now getting routed to Indian companies, and that could possibly be seen, maybe from the second quarter of this financial year. So I think, these could be the immediate kind of beneficiaries. We'll have to wait for the final details to come in. But I think broadly, Indocount, Gokuldas could possibly be, very well positioned going forward.
Right. Earlier, we also spoke to Rajendra Gupta, the Emeritus Chairman of Trident Group, on the textile industry, on how much inflow is expected from Vietnam or Bangladesh in case there's a done deal between the US and India. Listen to what he has to say.
See, on the garmenting front or on the spinning front, there could be a upsurge of even 20%, even 30%, or even could go much better on that. In terms of home textiles, there could be a surge of about 10% plus, and I do believe that technology upgradations and the capex is needed, and the way the government is promoting the PM Mitra Park and various states, that's going to take a very, very quick pace, and they're going to move much faster in that. I think that's a great thing done by Indian government and the PM Mitra Park, and how to really build the assets, capex on that part will be a complete supply chain coming there. Could really going to help grow our numbers, what we had in mind. And the way Indian government is working on the Kasturi cotton, their own branded cotton, will bring a very strong brand for Indian cotton, going to help the farmers all around.
Well, Avinash, coming to you on Ventive Hospital, in fact, we spoke to the management a while back, and if you remember, they had earlier given this guidance of achieving 4,000 crore revenue in the next 5 years. How are you looking at this stock? The hospitality space at this moment, it's too crowded. There are a lot of players in the industry. Would you bet on Ventive Hospitality?
No, I think from a longer term perspective, if you're taking a time frame of next 12 to 18 months, I think the kind of number of new room additions which they are planning to make, I think would make a significant impact to their operating profitability and revenue going forward. But I think in the near term, the stock appears to be, fairly valued. So my sense is, yes, I think somebody who is looking at the next 12 to 18 months, the hospitality sector is growing very well. Ventive has a very large room inventory which is planning to add in the next 6 to 12 months. So, this definitely can be a good trigger point for the stock, but definitely not for the short term. Only, investors who can stay invested for the next 12 to 18 months can expect a decent risk reward here.
Okay, so that's the view for Ventive Hospitality is what we are seeing. But another counter in focus is PC Jeweler. In fact, if you look at the 5-day move of the stock, it's up over 49% in trade. And now the company is in focus on the back of its fundraising plans on July 10. Mahima joins us with more details on this one.
So basically, it's a turnaround story for this particular counter. We've seen a significant rally in the counter since the past 5 days, and today is the day when we're actually seeing profit booking on the counter, and that's one of the reasons why the stock is down. Plus, they've also announced that board is set to consider approving of fundraising on 10th of July. The amount is not mentioned yet, but it will be a preferential issue. We'll have to wait and watch out for us to how that fares. But overall, in terms of their overall business update, also the company did saw a good growth of 80-odd%. But the interesting part here is that the fundraising could be, could be in alignment of the debt reduction plan. Overall, they've already reduced the debt by 50-odd% in FY24 to 25. Q1, they further reduced it by 7.5-odd%, and they've also said that they aim to reduce the debt and become debt-free by the end of FY26. Now, in terms of Giving viewers a perspective, as of 27 September 2024, Bank of India had approved a one-time settlement for the outstanding dues of this particular counter, and 14 consortium members of the bank had approved the settlement of total outstanding amount of around 4,000 odd crore. In terms of stock performance, yes, despite of today's correction, the stock is still up almost 45% in the past 5 days, 1 month almost up 50%, and 1 year up almost 200+%. So this is the overall view as to what's happening with PC Jewellers.
Okay, so that's the view that we are seeing for PC Jewellers. Avinash, coming to you on PC Jewellers now, here we have seen a strong set of update in terms of the Q1 performance. We also have the likes of Kalyan Jewellers and Titan, which came out with their business updates. Just want to get your overall sense in this particular segment. Which is your favorite pick over here?
No, I think clearly, I think within the segment, I think, larger players like Titan and Kalyan Jewellers appear to be more stable, considering the fact that, I think they have the tenacity to withstand any near-term kind of temporary slowdown in demand. What we have seen in Titan's business outlook is that the quarter outlook has been a slightly mixed quarter, not very great. Kalyan, on the other hand, has shown decent kind of growth despite a tough quarter for the industry. We would like to stay away from PC Jewellers and would like to wait for maybe a couple of quarters before we get little clarity on the visibility of the business and the extent of dilution now, which will happen post the preferential offer which they are planning. I would be more comfortable on Kalyan Jewellers and Titan, I think, from a medium to long-term perspective.
Avinash, quickly, this 5% fall in Titan, would you advise investors to buy?
I think, again, it's a matter of, what kind of time frame you have got. I think in the short term, the stock is going to, display a negative trend because the business outlook was not encouraging. But if somebody has a couple of years in mind, I think any dip should be used as an opportunity because, the legroom for growth for the gold jewelry segment is very large in India. And I think, it's a matter of time when growth will pick up again, maybe from the second half of FY26 onwards.
Right. Hariom Pipes is another stock that remains in focus. The stock has gained after the company came out with its quarterly updates. How are the updates? Let's get in Jasmeet with more details.
Well, right, the stock is up 13% in trade today, while in last 5 days it's up 22%. Let's understand what does the...
Well, I guess we have lost Jasmeet's voice here, but if you look at the Hariom Pipes data that we had come in for Q1, if you look at the sale volume for value-added products has grown nearly 36% on a YOY basis, 4% on sequential basis, and total sales volume grew nearly 35%. Value-added products contributed nearly 96% of the total sales volume. Generally, these value-added products are expected to be high margin products, so company's margin could be higher in first quarter of FY26 as well. Now, if you look at what does the company do, the market cap is around 1,500 crore rupees. It is a manufacturer of iron and steel pipes. It has plants in Telangana, Tamil Nadu and Andhra Pradesh. Avinash, coming to you on Hariom Pipes, have you looked into this counter? The stock is up around 15% in trade today. Do you expect this kind of a growth that the company is seeing, this 35% plus growth that is sustainable over a longer period?
No, I think clearly, this 35% growth has largely come off because of incremental volume expansion, which the company did some time back. And most importantly, most of the pipe companies have been doing very well. They are sitting on a very large order book. And my sense is that, the business outlook, which has been shared by the company, clearly indicates that the quarter one is going to be pretty solid with such a strong kind of volume growth. My sense is that the contribution of value-added kind of mix in the products will make the margins more accretive. So I think, yes, maybe on a slight decline, one could look at accumulating the stock. Today, the stock is up by about 12-13%, but possibly, once you get the stock slightly lower level, that could be a good addition to the portfolio for the next 12 to 15 months.
So, say among the pipe manufacturers like Venus, Hariom Pipe, then there is Ratnamani Metal, which would be a top bet here?
No, I think Venus Pipes and typically, I think Ratnamani could possibly figure out as larger, well, broad and diversified players. We are also positive on Maharashtra Seamless, which is a large player to the oil and gas sector. I think Maharashtra Seamless is one of the older players. So obviously, their fixed costs as well as their margins are much better. I think overall, one can definitely look at Ratnamani and Venus Pipes because these look to be decent bets at the current price levels.
Okay, so that's the view we are seeing. Ratnamani and Venus currently placed attractively. But that's all the time that we had on this edition of Profit Top Trades. Do stay tuned for India Market Close coming up next.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching India Market Close with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, the Nifty is largely flat, not much of a volume that we are seeing. On the loser side, we have the pharma and the auto stocks that have been dragging the index, while on the gaining side, it's IT and banks which have been holding the fort here.
Yeah, absolutely. It's been a lackluster day in terms of where the benchmark indices are concerned. If we are looking at the Nifty 50, currently flat in trade is what we are looking at. In fact, if we see some of the stocks which are in focus currently, over 0.05% of an uptick is what we are seeing for Nifty 50. If we pull out the point contribution table to see which are some of the stocks in focus, we have Kotak Mahindra Bank right at the top, seeing about a 3% of gain, and this is on the back of its Q1 business update. But it's HDFC Bank and Infosys also positively contributing, while Titan is something which is not doing so well in trade today, and it's on the back of its Q1 business update. Reliance Industry, Axis Bank and Bharti Airtel, some of these other counters which are leading to some bit of that pressure on the Nifty 50 is what we are looking at. But in terms of where the sectoral picture is concerned, let's pull that one out as well. We have Nifty Realty right at the top. 0.8% of gains is what we are looking at, while Nifty Finance, Nifty Bank up over 0.3 to 0.4%. While on the losing end, we have Nifty Pharma and Nifty Healthcare down about 1% in trade today. Also seeing some bit of pressure in terms of where the US deals are, tariffs have been concerned. So some bit of pressure building onto that front. But if you look at the broader markets now, we are seeing deeper pressure over here. In fact, if you look at the small cap and the mid cap 150 seeing cuts of over 0.3%, while for small cap 250, we are seeing cuts of over 0.4%. So some bit of recovery in the last half an hour or so we are seeing, but still in the red is what we are looking at. In fact, let's also see the BSE 500 to get a sense on some of these stock specific action that we are looking at. Right at the top, we have Alok Industries, Sonata Software up over 7% to 12% in trade today. Other counters like Aavas Financials, Lemon Tree are also in focus, seeing gains of over 4 to 5%. While what's not working out so well is clearly Titan. Now it's down about 6% in trade today. In fact, we'll go in more detail in what's happening with Titan and why it's seeing this kind of a downtick in terms of where the Q1 business update is. But Jubilant Pharma, Galaxy Surfactants are also some of the other counters that are seeing about 3 to 4% of cuts today. So that's the overall sense that we are seeing in terms of where the benchmark and the broader market indices are concerned. But with that, let's welcome in our guest for today. That's Kush Bora, the founder of kushbora.com, joining us. Kush, clearly it's like, as we said, it's not much of an excitement in terms of where the benchmark indices is concerned, but broader markets seeing some bit of pressure. That talk to us about the overall market activity which is taking place today and your picks as well.
Hi, Anushi. First up, a very good afternoon. Big set 12 and slipping lower. What else do we expect in the markets, right? So I think this is par for the course. We've been discussing how markets could consolidate until you get this one big trigger. VIX also starts to spike and the markets, get a new burst of life. Could be either way, but our guess is that this will be on the higher side given the kind of the data setup and the support that the Nifty has been taking for some time. So 25 400, 25 500. This is the range where this is in fact the support zone, and we've seen consolidation within this band. In fact, if you tie this up with the weekly options expiry data, for this week, then 25 500 calls have seen a fair bit of writing, and then 25 400 puts have seen a fair bit of writing, and we're seeing consolidation. And one just wonders, with everything that's happened with Jane Street, are we going to have a quiet weekly expiry at least this time around? In all likelihood, we just might. So yes, consolidation for some more time, par for the course. View remains bullish. Once we get a breakout, it could well be on the higher side. And then 25 700, 25 900 are your targets on the upside. This view will be negated if 25 250 on the downside is taken out for whatever reason. So all in all, still bullish. Plenty of stock specific action. So I think the action and focus should shift, on stocks rather than the indices, Nifty, Bank Nifty, both.
And Kush, what's your view when it comes to Nifty Bank?
Very similar, Samit. If you see the moves that Bank Nifty is made, now I talk medium term. You look at the you look at the recovery that started in March. Bank Nifty currently is actually taking support and has taken support multiple times at this rising trend line. That started in March. Even now, it's taking support at that. If that gets broken, then maybe immediate test of downside will be 56 400, where the 20-day moving average is. But all in all, if you see the constituents also consolidating, after a good run, private banks are also consolidating, except for Kotak. Not too many banks have done well in the private space as well for the last couple of sessions. SBI and some of the other PS unions also consolidating. So I think the view and the bias here also remains positive. Same story as Nifty. The lack of momentum might just keep it within a range, and that range is 56 400 on the downside, and on the upside you've got 57 600, the recent highs that the the recent all-time highs that the Bank Nifty had made, you could see consolidation within this band for some more time to come. But yeah, the view remains biased. If you have a long position, keep your stop losses in place and stay long.
Okay, so that's the levels that we are seeing for the Nifty Bank. But Kush, coming to your stock picks of the day, talk to us about that as well.
Sure. Two of them. The first one is Sansera Engineering. The stocks had a very good run in the last 15 odd sessions. The golden crossover about to culminate with the 20-day moving average surpassing the 200-day moving average. It's a little soft today, but the overall medium-term trend is bullish. Hence, 1450, 1490 are your targets. 1370 on the downside remains your stop loss. Plenty of action in D-Link. It's had a good run, been fairly volatile. But on the whole, here too, the medium-term trajectory has been north. There have been good days where it's seen some accumulation. Even today, trading with a positive bias. So 600, 620 being your targets, 560 being your stop loss. This is the second call. And if I can just take a quick minute, and mention a couple of other stocks. Orion Pro. This was a stock that we discussed yesterday, and now, as usually, I've made a tradition. Mondays we discuss, pick of the week kind of weekly stocks. Orion Pro yesterday was up almost about 13% or a little more, at one point in time. The second target on this one that we gave yesterday was 1615, and the stock had hit, much higher levels. Cooled off a bit yesterday, cooling off today as well. But if someone did take a position, depending on the discussion that we had, we should continue to hold. And I believe even Somit had, an update on this, in his Heard on the Street segment. So yeah, all that ties in. Amber Enterprises also seems to be doing well. 7500 was the first target. It's trading above that. If you do hold it, continue to hold for 7650, which was the second target, and now keep your trailing stop losses close to the 7425 mark.
Right, Coach. Orion Pro was one of the stock in the Heard on the Street. There's a buzz that there could be an order win announcement. But I wanted your view when it comes to the IT sector, given the fact that there will be numbers that will be coming out this week. Any top picks in the Nifty IT index? How is Infosys and Tech Mahindra looking like on charts, specifically?
So, as far as the IT pack goes, we've seen the kind of flip-flop, the IT pack has been doing for some time. Infosys maybe, would have bucked the trend a little in the sense that, it's consolidated with a positive bias, much unlike the peers. If you see a TCS, it's had a fairly negative kind of a run. So if you have a position, not a bad idea to hold on to Infosys. I wouldn't, encourage a fresh long addition. Anyway, 1660 is a level where Infosys has resisted for the last month and a half, and the volumes are shrinking. So maybe the investors are also waiting for results to see, which way they go, and then take a directional play. As far as current positions are concerned, like I said, I wouldn't initiate a fresh one on Infosys, but if I did have one with a stop loss around the 1600 mark, I would continue to hold. If you do get a break above 1660, then yes, the higher levels of 1700, even 1735 are very much in play. Tech Mahindra had a very good run, was actually a shining light in the IT space, but even that is now started seeing gradual profit booking. 200-day moving average support near the 1615 mark, will act as an immediate support. If that's broken, you could see lower levels as well. So yeah, no fresh trades on the IT space. Just wait for the results to come out, see what kind of direction the stocks take. Anyway, we've seen a lot of flip-flop in the IT space for some time.
Right, Nifty Pharma is another index which remains in focus as one of the top losers, though it has recovered from day's lowest point. But this was triggered post Macquarie came out with their note where they have downgraded, or in fact downgraded their rating on a couple of stocks and have cut target price on most of them. For Dr. Reddy, they have downgraded the rating to neutral from outperform and have cut the target price to 1,190 from 1,450. For Aurobindo Pharma, they have downgraded the rating to underperform from an outperform and have cut the target price to 1,010 rupees from 1,700 rupees. For Zydus Life, they have maintained their outperform rating but have cut the target price to 1,110. They believe that the shifting US generics dynamic is making them cautious, and hence they have reduced their target price on most of them. They believe that the best of the US generic pricing cycle is behind, and going forward there could be more pressure coming in given the fact that there is tariff, which will also be a key overhang on the pharma stocks. In fact, on the flip side, HSBC had upgraded their rating on Divi's Lab, and that stock is holding in green, not much higher, it's just up 0.6%. Kush, coming to you on the pharma space, any topics here? Do you see this 3% fall or 3.5% fall that we are seeing currently in Aurobindo Pharma could be a good opportunity for for any investor to buy the stock?
So within pharma also, we've got a lot of stocks and rather subsectors, doing their own thing. Healthcare broadly, would be perhaps a more suited, index to look at. But Aurobindo Pharma was in a rising channel, if you see, for the last about 10 odd sessions. And today, with the kind of drop that it's had, it's given up that one. It's fallen out of that channel. Now the 20-day moving average has been the low that the stock has made today. It's attempting a recovery. While yes, the medium-term trend remains intact, I would wait and watch for one more day, see if this selling has some more follow-through, because the recovery hasn't really been as substantial. As far as some of the other picks go, two names that stand out for me. One of them is Divi's Lab. The stocks had a good run. What you're seeing today is, along with the other pharma names, some profit booking. Also, the 7,000 level acting as a resistance. If you see, there'll obviously be some call congestion here. So this is one stock that you could look at accumulating or buying. And here 68.50 will be your stop loss. On the higher side, you're looking at 7,000 and then 7070 as very near-term targets for this one. But the other standout stock in this case is Laurus Labs. Had a near vertical run, consolidation for the last two sessions with a mild negative bias, for the volumes on the way down haven't really been as high, suggesting that investors aren't really even in a mood to book profits on this one. So Laurus Labs is a standout trade in this one. Keep a stop loss near the 750 mark. On the way up, 795, 820 are the targets that you're looking at. So this one stands out for me.
Right. So we're breaking this programming a little bit and bringing you a special conversation. Actually, this is the person that we're speaking with, Mayank Bansal. He's a hedge fund options trader based out of the UAE. He's, of course, now very well known in the broader media, primarily because he's being tagged as a whistleblower who actually directed SEBI into the entire scandal that is happening at Jane Street and the kind of trades that they undertook in India. Mayank, welcome to this conversation. My name is Vishwanath Nair. I just wanted to first start off this conversation with the conversation with SEBI, right? You've claimed previously that you wrote, of course, to the top management at SEBI and you got a response from Anant Narayan, who eventually went on to write that order against Jane Street. He had invited you for a meeting. However, sources are telling us that SEBI was not actually acting on any whistleblower complaint specifically when it was looking into the Jane Street issue. But if you can tell us a little bit about how that conversation went and what exactly was SEBI looking at when they were discussing this issue with you.
So basically, I had reached out to SEBI in December, on 17th of December 2024, which is when SEBI actually, as per the report itself, they've started investigating then itself. And then I did a presentation on 6th of January. And basically the patterns that I've pointed out to SEBI are part of the interim order that SEBI has released. So also I would like to just mention that I am not a whistleblower per se, as in I'm not internal to Jane Street. Obviously I've raised this for the industry, but I'm not internal to Jane Street. And yeah, so SEBI has been, initially it was handed over to NSE and they could not find anything, I think, which is when, as the extent of manipulation was increasing all through 2024, in December, I reached out to SEBI and they picked up the issue and they started investigating. Right. Since then, I've been in touch over mail. I'm sure I know a couple of brokerages also who reached out, after my reaching out. And there might be other people also who reached out to SEBI. It might not be solitarily me alone. But yes, a lot of the things that are mentioned in the interim order are from, the things that I presented to SEBI in the PPT, which is public now.
Okay, let me get into the findings themselves. Specifically with regard to the kind of trades that they undertook over 2024. Now, I've read an interview you did with a newspaper where you talked about two kinds of trades that they were undertaking as part of their strategy. One was silent options, and then I think the other one was a volatile expiry. Could you tell us a little bit about what exactly it is that you found there?
Yeah, so options have a parameter called implied volatility, which is a measure of how cheap or expensive the options are. Now, in the two kinds of constructs, what would happen on expiry day is that IVs would either completely get crushed, which is a measure of the expensiveness or the cheapness of the option, or they would just go through the roof. I will cover each of the constructs in greater detail. By the way, these constructs have been observed by practically all market participants across the industry. So it's not as if I am the only one who's experienced it. This is a far wider acknowledged phenomena that has been hampering Indian markets over the last 2 years. So just to sort of get into each type of expiry, the first kind of expiry is a quiet expiry, wherein the manipulator sells options in bulk. This leads to the options becoming extremely cheap. The IVs go through the floor. It's like a house or a real estate which typically sells for multiple crores, selling for 1 lakh or 2 lakh. They are absolutely bizarre and nonsensical IVs which end up sort of materializing when the manipulator sells options. So as he's selling, the options become cheap, which is reflected in the cheap IVs. Now, you would appreciate that in case a real estate property were to be selling at 1-2 lakh as opposed to multiple crores, you would be tempted to buy it, which is what a lot of people in the industry, in options trading and the wider industry, were tempted to do because something so cheap ought to be bought into. But what would happen then is that now short options make money when the market stays absolutely quiet. So what the manipulator would then do is that it would keep the market in an extremely tight range so that it pockets all the premium from the options that it has sold. That was the common mechanism in the quiet expiry, wherein it would pocket all the premium and keep the market in a very narrow range. The other kind of expiry was a volatile expiry, wherein he would pick one side, either the upside or the downside. Let's say he's picked the upside. He'll buy calls in absolutely humongous quantities. He'll buy ATM calls, OTM calls, deep OTM calls, all of these calls, which would be reflected in the options becoming nonsensically expensive. Once again, imagine a bottle of water selling for 20,000 instead of 20 rupees.
Right.
Okay, and then in the last 2-3 hours, you would create a move in one side, a big move on one side, which would lead to all the options becoming in the money.
Okay.
This is a widespread phenomena which has been observed in every index on every expiry practically, on 90% expiries practically, through the last 2 years. Multiple people will validate for this. So there is no question around this happening. And what is happening is extremely bizarre. It is extremely, extremely bizarre. It's like, a currency suddenly becoming a Bitcoin. A currency you would know, like a USD INR, is extremely less volatile. It's suddenly beginning to move like a Bitcoin. So it's very apparent that, these things were happening.
Okay. Mike, if I can take you through 2 quick questions. The first one is with regard to a lot of buzz that is going around the street. I know you've already clarified that if, you cannot call yourself a whistleblower considering that you have no relation to Jane Street. However, when they see options trader, I think there is a buzz in the market and there is some conversation about your past alliances with this group. I just wanted to get that clarified on your end.
No, there's no. I have absolutely no alliances with Jane Street whatsoever. There should be no doubt.
Okay.
And I have never, in any capacity, been involved or have had any interaction with Jane Street. So just to be absolutely emphatically clear.
Understood. Okay, I want to ask you one last question now. So when you're looking at the kind of responses that are coming from Jane Street, for example, this morning we reported that in a letter to their employees, Jane Street has claimed that this order is bereft of any reality of the markets, and that it seems that there is a general lack of understanding of how hedging works around the globe. I wanted to just you to respond to that.
Yeah. I'll give you my views on this. That is absolute nonsense. When you are establishing an arbitrage position, as Jane Street has claimed it is doing, you can't do a cash arbitrage position with the forwards. They are arguing for basically cash and forward arbitrage. Now, cash and forwards cannot be in a ratio of 1:8, 1:7. For an arbitrage position to hold forward, it should be a 1:1 ratio so that you can lock in profits. You can't be having X position in cash and 7 to 8X position in forwards and calling that arbitrage. That is by no means arbitrage. So that is, I'm sure SEBI will see through it. That is a very, it's sort of a conversation that Jane Street is releasing so that it can mislead the public, is my view on it. And I'm fairly certain that this is no form of arbitrage. Plus the market dynamics. Okay, there'll be multiple people now who will validate that the market dynamics were absolutely not fundamentally linked. They were absolutely off. They were completely corrupted. not me. There'll be multiple people who are as senior from the options trading industry itself. So there is no question around this happening.
Understood.
Chain Street can clarify whatever it wants.
I got that, Mayank. Thank you so much, actually, for joining us on this conversation and taking us through all of your points here. It's actually been quite eye-opening. And that was Mayank Bansal. Of course, he's been one of the earliest voices in this space, warning against the kind of manipulation that he claims Chain Street has been doing over 2024. We'll take a short break and come back to India Market Close.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Hello and welcome. You're watching India Market Close. I'm Harsh Saita. With me is Neeraj Shah. Let's pull up the index, the Nifty, as well as have a look at the Bank Nifty. It's flat as ever, and this has been, in fact, the case for now nearly 7 trading sessions where we've seen a prolonged sort of consolidation. The Bank Nifty showing some bit of outperformance, some zing today. That also is actually an exception to how it's played out over the last 5 to 7 days. Let's pull up the intraday chart on both the Nifty as well as the Bank Nifty. See how that has gone. Again, it's another very range-bound day of trade. In fact, more range-bound than yesterday. And I didn't expect to be saying that, but that's exactly what it is. Just 70-point band in which the Nifty is trading at. And let's pull out the Bank Nifty as well. Get that perspective out of the way. There you go. It's quite a tight band where the Bank Nifty is concerned, maybe, but relatively apart. If I take that initial spike out, It's again very, very range bound, even on the bank nifty, but 0.25% higher. Let's pull up the heat map and see where the possible positive is. Kotak is of course standing out in trade. No surprise there. And so is Titan. Both of those on the back of obviously their quarterly updates. Dr. Reddy is also on the back of a note. But some consumer trend is languishing. Bajaj Auto also, if I can call it, consumer type or consumer facing stocks seeing some pressure. But outside of that, you're seeing largely that the breadth is even Steven, 1:1 nearly. Let's pull up the breadth on the NSE and that'll give us perspective on how the broader markets are doing as well. Very similar to yesterday, where we've reversed somewhere in the morning, and thereafter currently the declines lead the advances, and it's around 3:2 in terms of the ratio. Last off, let's pull up the mid cap and small cap indices, and there you go, 0.5% lower on the Nifty mid cap. We've seen a bit of a bounce from those lows. Small cap also very similar texture. So there's been that underperformance for now the second consecutive day where the mid cap and small cap indices are concerned. Neeraj.
Yeah, if we can pull up the BSE 500 or the NSE 500 winners and losers, and you will see that there is 2 or 3 standout pockets of weakness today. One, there is Titan, which is amongst the top losers. In fact, the top loser, 6%. Then the capital market plays, which might probably be impacted by volumes coming off post the Jane Street decision, are right up there. So Angel One and MCX stand out. And then a lot of pharmaceutical names stand out today. From a Jubilant Pharmanova to a Granules to a Lupin, Aurobindo Pharma, Aarti Drugs. That list of stocks in pharma is very large. But I was surprised when Kush Bora spoke about Laurus Labs as one of his ideas, because pharma is not particularly having a great day. But of course, he gave his rationale too, and we'll go to Kush in just a moment from now. But the other bucket on the gaining side, you're seeing some bit of strength, for example, in CEAT. So that one about 5.5% higher. KPR Mills and all of these textile names are having a really good day. So Trident is up about 3.5%. KPR Mills is up. Gokaldas Exports at a point of time was up in trade today. So that cohort of textile companies has had a decently good session, let's put it that way. Gokaldas, in fact, off the highs of the day. Well, in a moment, we'll get in Somit to talk about the key, things to be heard from the street. But Kush, thanks for staying by. And like I said, I was surprised that you mentioned Laurus, right? Because pharma as a bucket isn't quite doing well. But I buy your logic. You're seeing distribution out there. You're not seeing the stock buckling down the way the rest of the pharma pack might be. What is your view on the rest of the pharma pack? The names that I spoke about, like an Aurobindo, etc., all of them are down in trade today. How do you view that bucket?
So, hi Neeraj, first up a good afternoon, very good afternoon to you and to the viewers. My original ideas were Sansera and D-Link. Laurus Labs was in conjunction to a question that, Somit asked me as to what do I like, in this space, if at all. And Laurus still, and I maintain that, Laurus stands out because it's had a very good run. And, the last 2 sessions, including today, the profit booking, if we can call it that, is on the back of very thin volumes. So any kind of dips, in Laurus should be bought. But can't say the same for the rest of the names, that you just discussed. So, an Aurobindo, a Lupin, some of these names, they were just starting to pick up and it's starting to show some kind of steam. And then they've given away, that lead, and on the back of very high volumes, or rather relatively high volumes, at least more than the last 20 days average. So I would wait out on some of these names that testing support levels. If I talk about the Lupin in particular, 1920 was a strong support zone. It's slipped below that, so I would wait and watch. Maybe the street is sensing something for the pharma stocks in the deal. Maybe it's just some sort of moving away from safety. Could be anything, but for now the setup in some of these names doesn't look as exciting, and it's not really a buy on dip kind of a situation, the kind of setups that you're seeing in a lot of these.
Okay. So not a buy on dip strategy, bear that in mind. Some other stocks, and Nectar Life, because of that API business sale, and that stock is down some 20%. There are a lot of weak hands today. I mean, look at the kind of moves that, for example, Kirloskar Brothers has 5.5% lower. Sharda Motors some 7.5. So a lot of these stocks have really cracked and are continuing to be lower in the session today. So bear that in mind. On a flat day, maybe IT is bucking the trend, but otherwise it's kind of slightly iffy. Pipe companies are not doing too badly, by the way. Venus Pipes, Hariom Pipes, and something that I think 3 days back, Somit had done a small piece on why some of the pipe companies could do well in today's session too. Some of them are really packing a punch. Now, speaking of Somit, he joins in right now for our standout and standard segment at this hour, which is what is being heard on the street and what's the chatter from the dealing rooms. Somit will talk about pipes as well, but first, let's start off with what's tawa garam from the dealing rooms.
Well, it's Asian Paints and Varun Beverages to start off with. What dealers are indicating that there are buy flows on FI at desk for both these counters. In fact, Varun Beverages is something that dealers have pointed out. The stock is down in trade, but there are buy flows on FI desk at lower levels. In fact, dealers are also saying that after the 29% YTD fall that we have seen in Varun Beverages, investors now believe that a lot of positives are now being overshadowed given the fact that Africa is one of the key emerging and growth market for Varun Beverages, and India business is still, despite the competition, continues to remain steady, and this is being overshadowed, and hence we could see a bounce back that could come in for Varun Beverages. Keep an eye out for that counter. Asian Paints is also one counter that dealers have pointed out where FI flows are quite steady in trade today. When it comes to Aditya Birla Lifestyle brand, the buzz on the street is that there could be some positive corporate development that could come in anytime soon. Dealers are also indicating that a potential fundraise could also be on cards for Aditya Birla Lifestyle brands. When it comes to Aurobindo Pharma, despite the Macquarie downgrade that we have seen that has come in, a double downgrade, in fact, the stock is down 3.5%. Dealers are indicating that there are still buyers at lower levels for Aurobindo Pharma. That continues, given the fact that valuations continue to remain very cheap for Aurobindo Pharma. Apart from that, India Shelter also remains in focus. There was a big block that happened in trade, around 50 lakh shares changed hand. Dealers are indicating that Nexus Fund was one of the seller here, and quite strong demand was seen when it comes from insurance and mutual funds. So it will be interesting to see how India Shelter, whether what names come up in the bulk and the block deal data. And lastly, it's Velar Estate, which also remains in focus. Dealers are indicating that the record date regarding the hotel demerger could be announced in the next 3 to 4 days. So keep an eye out for Velar Estate as well.
It's interesting, and certainly this is something. Velar Estate viewers, remember the erstwhile DB Realty. So keep that in mind. Somit, while you are with us though, because I remember you on the morning show, India Market Open, spoke about the pipe companies, right? Some of them.
Right. Well, yeah.
Very active today. Just kind of rewind it for us. What is the whole piece around that, and why is it that some of these stocks could be active?
So given the fact that this anti-dumping duty that Saudi Arabia had imposed on pipes that had come in that were coming in from China and Taiwan, this could be a good export opportunity for these domestic companies like Venus Pipe, Hariom Pipe. So that opens up a big market for them, and that was the key reason why the stocks have been buzzing since then. And also given the fact that Hariom Pipe came up with an quarterly update, where it was around 30-35% jump in volume and sales is what they have indicated in the first quarter, which is more than what the company's guidance was of 30% growth. So that is also one of the reasons why the share prices of this company has perked up in trade, basically. Yeah.
Okay. Well, keep an eye out for some of these stocks as well. And Kush Bora, can I quickly ask you for a view on some of these pipe companies? And secondly, Kush, Velar Estate is something that Somit highlighted. How does it look on the charts for a trade?
So, Neeraj, I'm sure you'll recall, we've had this one as one of our top picks in the realty space for some time now. Right now, it's on the cusp of a breakout. So 245 is a zone where the rounding bottom formation breakout will be complete. Some of the technical parameters are suggesting that, this break is around the corner. Volumes have also been fairly healthy. So yes, I still maintain that positive view on Velar Estate. I think the swing highs that it made about a year and a half ago will very much come into play, which is at 285. So if you have a position, you should continue to hold. If not a bad idea to accumulate some more. A positional stop on this one, come close to comes at 220. So with that as a stop loss, you could very well accumulate Velar Estate at current levels also. As far as pipe names go, there has been an uptick, and definitely there's a good bit of relative strength given the given the market situation that we are in. But if you see, they've started to come off the highs. Even a Hariom pipes, for that matter, 494 was the high point of the day. A Venus pipe had about 1609 as the high point of the day. So yes, the trend is intact, but this is more of a hold kind of a situation rather than a fresh addition, and not from a momentum and overheating perspective. Just from the fact that they've not been able to hold their ground and at the high point of the day. So yes, if you have a position, you should continue to hold. In something like a Venus pipe, it comes close to 1525. Your stop loss for Hariom pipes, 455 is a good stop loss. That should act as your stop loss or your trailing stop loss. But I wouldn't suggest a fresh long addition. I would like to see how the markets play out. In fact, if I can just take a quick second, you mentioned how the small and the mid caps and some of the names in this space were actually starting to crack. There is a negative RSI set up on the small cap index, on the mid cap index. So some caution is warranted. We're already seeing some of that play out, today and in the last couple of sessions. But I wouldn't rule out some further downside before you start seeing some positive turn in the small and the mid cap space.
Okay. All right. So that's with regard to how Kush is viewing markets. But electricity futures, and of course we're shifting tack. We're trying to go stock specific now. Electricity futures in focus. They've debuted on MCX, or rather they are going to debut on MCX on the 10th of July. This will usher in a new era for India's power sector risk management. My colleague Charu Singh caught up with the MD and CEO Praveena Rai on the sidelines of their launch event. She spoke exclusively about the importance of electricity derivatives and more. Listen in.
So I think for everybody, understanding the benefit of a commodity derivative is important. And this is a product which is widely used. We are all users of electricity. We understand the product very well. And it's hence easier to understand how it works and also understand what is the benefit that this can give us. Either by way of hedging, which is typically could be an SME, a large industrial house, and so on when it comes to the user side, or it could be an institution or a retail participant as an investor. So the market is fertile, the market is large, and this is a product that will need activity to create awareness, to bring various participants from the electrical ecosystem as well as the financial ecosystem into its fray. So I think there is a role for everybody, and we will all play the role to create and develop this market. Now, MCX is the Commodity Derivatives Exchange of India, and we have done our study. We've understood the need of the hour when it comes to what really is required by both participants, and we believe that the contract does the job. Grateful again to our regulators, SEBI, the financial regulator, and of course CERC as the regulator of electricity at the central level for supporting this.
All right, so that's of course MCX, that one in focus. Stock of obviously not reacting positively as you saw on your screen. But jewelry major Titan, it's reported a 20% year-on-year growth in its consumer business for the first quarter. Mahima here to tell us more with regard to that stock. That counted down 6%, Mahima.
Right, absolutely, and it's trading at its day's low point. And I think there are a couple of reasons as to why that has happened. To take a look, first of all, the jewelry business was, the growth in the jewelry business was not as per what was expected. The jewelry business growth came in at 18% versus an expectation, street expectation of around 22%. So that's the first thing that the street is disappointed with now. And also, just to take a view as to how jewelry growth overall has fared in Q1 FY25 was around 9%. And Q1 FY23 was around, FY24 was around that 23% mark. But of course, this time 18% jewelry growth is also mostly on the back of rising gold prices as well. Secondly, I think what has not worked is that the growth is not as good as how the peers have performed. I mean, for example, Kalyan saw growth of around 31%, Senco 24%, PN Gadgil also saw growth of 19%, but jewelry growth for Titan only stood at 18%. So these are the two major factors as to why the stock is under pressure today. Plus, the buyer growth in the jewelry business was flat. Overall, customers are preferring lightweight and lower caratage jewelry because of rising gold prices. Studded mix continues to be lower, and this could overall impact the margins as well. And Tanishq, Mia as well as Zoya brands grew around 17%, and CaratLane saw a good growth of around 38%. Now, there's the other side where some segments of Titan, though not as big as jewelry, have worked well. Watches, strong performance this quarter, grew 23%. Analog watches is something that has seen growth, and Fast Track and international brands did clock a double-digit growth. In the eye care business, the business is fairly stable, growth of around 12% seen this particular quarter. International business grew by 49% on the back of lower base as well. They added one store in UAE also. And Tanishq business in US has doubled is something that is on the positive sides. Now, quickly to wrap up with respect to what brokerages are saying about this particular performance and Q1 business update, Citi has maintained neutral with a target price of 3,800. What they're saying is that margins will be the key to sustain the kind of valuations that Titan is trading at. And JP Morgan again has maintained neutral with a target price of 3,350. They're saying that the next catalyst could be the earnings sprint, and margin delivery and management's growth outlook amid an early festive season will be a key thing to monitor for Titan going ahead. So this is the overall view of what's worked and what's not worked for the counter, and why, of course, it's under pressure today.
Okay, so that's with regard to Titan. Thank you so much for that perspective, Mahima. Sudeep Bandyopadhyay joining us at this hour, IndiTrade Capital, giving us perspective on the fundamental side of things. Sudeep, welcome. How are you seeing Titan's numbers? And contextualize this for us. There is a Kalyan as well, which has delivered numbers. There's Titan as well. Is there a trend playing out that gold prices, which have gone up 30+% on a YOY basis, there's still some catch-up to do where demand is concerned at that price?
Well, good afternoon, Harsha. I think, we have to analyze the Titan results more minutely.
Okay.
Yes, the smaller jewelry chains have grown at a faster clip compared to Titan, but one has to look at, is it the same store sales growth, or is it they have grown by adding new stores or adding more franchises? Now, then probably we will have a like-to-like comparison. Beyond that also, Titan, the base for Titan is significantly higher compared to the, whether it's a PN Gadgil or a Senco or even a Kalyan. So on that base, growing 18% is definitely not bad. Of course, the expectation was 20+% growth, and that has come as 18. So yes, there's a bit of a worry. I'm more worried about the challenges which they may have on the margin front, because the studded volumes haven't really gone up, and it's the low-priced jewelry which is going more, which is selling more. So the margin pressure may be visible when they announce the financials later in the month. So I'll wait for that, because there is very little room for error as far as the valuation is concerned, because it's not a cheap stock. It is quoting at a significantly elevated PE multiple, and at that multiple, if the margin is not supporting, we may have a problem. But otherwise, sheerly based on these sales growth numbers on a quarter-on-quarter basis, I won't be too perturbed at this stage.
Okay, Kush, your take with regard to a Titan in particular, and any others within the jewelry space that you have observations on?
So to begin with, Titan has a support around the 3,400 mark, which is a 200-day moving average. We've seen the stock rebound from those levels in the recent past. Could well do so. So give it one more day. I wouldn't venture a trade today, but tomorrow, if it does test 3,400 and hold above that, I think the risk-reward ratio for a fresh long trade, a fresh entry or a re-entry, as the case may be, will become very interesting. So I will give it a day. 3,400 is the key level to watch for. As far as observation goes, I think the one on PC Jewelers, the stock has had a vertical run in the last 5 sessions. If you don't include today, the stock actually went from 12.5 thereabouts to almost 20. So a significant rise in this one was seen. Some profit booking along the way today, and the gap that was there around the 16.5 mark, that's being filled today. So this is actually more of a trading bet. If it does consolidate around these levels, then you could see a retest of 19.5 and 21 in the coming days, and 15.5 thereabouts becomes your stop loss. So highly volatile counter, but it's got momentum going for it. And today's fall also, although on the back of significantly high volumes, still shadows or rather the volumes in the last 2 to 3 sessions still overshadow the kind of volumes that we've had today. So it's had a good run on the back of good volumes. Today what we are seeing is profit booking, maybe some consolidation and then off to 21 again.
Okay, so that's the take coming in with regard to some of the jewelry stocks, and the other set of stocks which are doing well in trade. There's the textile sector, buzz on the back of the steep tariffs imposed on textile producing companies by the US. Mahima joins us with a perspective on that, or rather still with us with a perspective on some of those textile counters. Mahima.
Right, so basically what's happening here is there's higher tariff on textile exporters that export garments or textiles to the US, that is Bangladesh, Indonesia, Vietnam. In fact, so basically what happens here is that higher tariffs on all of these countries will be a positive for Indian textile exporters. Any kind of differential will in terms of export might flow to India, and that is positive for Indian textile companies. India in fact is the 4th largest textile exporter in the world and has crossed the $34 billion US mark in FY25 in terms of overall exports. Currently, the tariff rate that is there on India is 26%, which is of course the pause tariff rate. But with comparison with that to other countries which have received the tariff letters, Bangladesh at 35%, Vietnam at 20%, Indonesia at 32%. So if our tariffs come lower than all of these percentage rates, India will be a beneficiary in terms of textile exports for sure. Now, companies that could benefit from this include names like Trident, which has 39% of the revenue coming in from the US exports, Welspun Living 63%, KPR Mills 21% revenue coming in from US exports. There are counters like Alok Industry where 45% of the revenue comes from US, and Gokuldas where 77% of the total revenue comes from the US. So all of these counters could benefit. Some other names also include counters like Raymond, Arvind Limited, as well as Skitex Garments that do export their textiles as well as garments to the US. Also, just to conclude and give perspective to viewers with respect to where textile industry stands, despite of the entire global shift that's happening, textile industry has remained and has had a steady growth. Plus, there are a lot of tailwinds in picture. There's UK FTA that's taking place, there's US tariffs, there's China plus one strategy that's working in the favor of the entire space, and lastly, India is aiming to grow this entire space to $100 billion US by 2030. So all of these things combined together will aid that kind of spur in growth in the entire textile space, and of course it's in focus today as well.
Okay, well, most certainly in focus, and the way some of these stocks have shot up today and stayed higher. I mean, yes, Gokuldas has come off, but you look at, I mean, the top gainer market-wide, and if you consider Alok Industries a pure play textile company, then that's some like whatever 17-18% or no 10%, excuse me, even that's come off. But Gokuldas, Trident, Alok, everything has done well. Now, Sudeep, usually these stocks tend to flare up in an announcement and then go off too. There are very few like Pearl Global who've had a sustained shareholder return over the number of years, right? This announcement is good. Today we've seen a flare up. Will that stay that way?
Well, it's very difficult to say, Neeraj. First of all, we don't know what's going to be India's tariff rate. Now, this is this is being speculated or being estimated based on the fact that, let's say Bangladesh stays at 35 and we get a much lower tariff rate finally when it's announced. Same goes for Vietnam, Indonesia, and other countries which compete with India in the US market in particular on the textiles front. So we have to wait because we are still not sure that it's going to be a status quo, what's going to be US-India tariff rates. That's point number one. Point number two, there is two distinct, I would say, streams of export which go into US. One is garments. The other is home textile, which is, the bed sheets, bed covers, towels, and the rest of the stuff. Now, Welspun is big in the second category, which is home textiles, whereas Gokuldas and the others are big in the first category, which is apparels. Now the apparel part, the competition is intense with Bangladesh and Indonesia and so many other countries, Vietnam, whereas the home textile, the competition is more with Turkey and other countries. So it's a different set of countries. So we have to wait and watch and see the relative position vis-a-vis India once the entire thing is settled. It's a little too early to kind of get too excited. Of course, it's a good development because the misery of the competing countries is being touted as a favorite thing for us or a good thing for us. Let's see what happens to us.
Just talking about that trade deal, this is what we are learning right now, that it's now about political will and not technical negotiations. This is what we are hearing. India's offer has been finalized. Ball is in Washington's court whether to approve deal or not, and this is what we've been consistently saying. The negotiating team is back. Our version of the deal and what is acceptable to us is on the president's desk. Now it's really up to him. India's focus remains on securing preference, increasing competitiveness in labor-intensive sectors. US unlikely to offer exemptions on key sectoral tariffs. Steel, aluminum, auto parts, mini or interim trade deal to cover only goods. Broader issues like digital trade, IP and services have been kept out of this scope. There is so much news everywhere about when the timeline of the trade deal will come. All of last evening, the buzz was that it's going to come anytime now. There'll be letters on one end, a trade deal. Yeah. Now there's more buzz that will happen tonight. I would say let's hold our horses. Let's wait for an actual decision because that's what matters to the street at the end of the day. Where do you fall between 10% and 26%?
Agree. Tamanna, if my voice was as good as yours, I would have sung Chitti Aayi Hai.
You reversed it.
I reversed it.
For those who are wondering what's happening, go back and watch India Market Open.
I did, yeah. But
we do know you have a good voice, and people know that I don't. So.
But on a serious note, I think preempting what happens on this has been a fool's errand. So therefore, might as well wait for this to come out.
And if it's out in a day or two, we're likely going to start to see the impact this week if it's out, and therefore might as well wait if you've waited this long.
Which is why I think I like Sudeep's response when he's saying that India ka rate kya hai abhi pata nahi hai, so let's not take a call on textile companies right now. Let's wait for 2 days and then think.
But if you recall, that's what Sunny Agarwal had also said in the morning. But since then, you've had stocks go up, massively. So it's a momentum trade, I suppose. I think the other important story to note is look at a BSE, look at an Angel One, look at an MCX, look at a 361 WAM. There is something which is a problem or maybe a red flag in the capital market segment of things. And call this the Jane Street impact, call it what you will, but there seems to be some concerns over here which are now building. I actually want to pull up Nuvama also very quickly if we can. BSE, of course, the worst hit, about 6% down. Nuvama is all right, has flattened out today. And Kush, let me come to you on this bit. Do you think there are opportunities here in the capital market play? Because Jane Street or no Jane Street, directionally we're going very strong, and AMCs are doing well today otherwise.
100%, 110, 20%. This is the time to buy, some of these names that, had run up so fast, so sharp, and you were waiting for a dip to come about. Mind you, that's not to say that, go out and buy today because, something like a BSE is still showing some effects of, the discussions that are coming about. But then you look at something like a CDSL, it's starting to take support. You take something like a Nuvama, it's starting to take support at, key levels on the downside. So yes, I don't think the India story is over. And, I've had my fair bit of stint in the broking industry, and I know one thing for sure: whatever is bad for the client in the short term is bad for the company and the industry in the long term. Now, if this is something, that is resolved, it comes out very clearly, and all the checks and balances, as SEBI has been mentioning, are put in place, the industry generally is going to just benefit out of this. So I am not disturbed. In fact, I'm looking at this as an opportunity. I might just have to wait for a day or two just to see where BSE settles and accumulates from those levels. But on the whole, for me, this dip is more of a buying opportunity. So yes, CDSL taking support at the 20-day moving average near the 70-25 mark is a healthy sign. Nuvama, Angel One broking industry, I wouldn't touch right now. The only reason being that generally there has been pressure and volatility, in some of those stocks. But if you look at the other names like BSE, CDSL, this is more of an opportunity to buy. You might just want to see where the levels settle and then accumulate. But on the whole, buying opportunity.
So what is your top pick then amongst those? Is it BSE? Would you look at some of the other exchanges? Would you look at a CDSL?
So the top two picks are BSE and CDSL.
Okay.
The only reason I'm not putting a level to BSE is because this is the third day after all the news came out, and the stock is still correcting. So you wouldn't want to catch a falling knife. So if I have to give levels to it, then 2330 is a good support zone for BSE. Give it a day, see if it holds above that level. Then you might consider a buy, because when you buy today, then for whatever reason there is another correction of 3 to 5%. You wonder you could have gotten that cheaper. So BSE, yes, once the dust settles, is a good buying opportunity. The dust already seems to be settling for a CDSL. So if you want to accumulate today, then CDSL is your stock. On the downside, keep a stop loss near the 1700, 1710 zone. Then the recent swing highs of 1825, 1900 become your target. More of positional bets. But yeah, if you were to pick today, then CDSL. Give it some more time. As dust settles, BSE will become a good pick.
So CDSL and BSE in that bit, and Angel One maybe, I don't know if that's in that list as well. Sudeep, what is your take? Okay, Kush is already saying no. Okay, what is your take, Sudeep?
Well, I think, BSE, there is a reason, because these hedge fund volume used to go to BSE. And obviously with this clampdown and the order on Jane Street, and naturally everybody else will be careful, and BSE will suffer volumes as far as the FNO segment is concerned, and that's a little bit of concern for BSE. So I'll wait and watch BSE and wait and watch this entire FNO related issue to settle down, or at least stabilize before I talk about BSE. And remember, the valuation was not cheap. It was very, very rich as far as BSE is concerned. So I don't think I will venture there. CDSL definitely would be worth looking at, because entire this imbroglio, CDSL doesn't get too much impacted. There is a little bit of impact because cash market volumes also may come down to an extent, but the impact will be minimum. And this kind of correction is a good opportunity for accumulating CDSL from a long-term perspective. The exchange stock which I've been watching for some time and I think is worth looking at is MCX. There are a lot of interesting things happening. Maybe a lot of things is under the radar. Electricity futures are getting launched. So MCX, this correction in the overall market related stocks, MCX is a good buy from a long-term perspective.
Okay. In fact, let's hear out S. Naren, EDNC here at ICICI Prudential AMC, about his view on this whole Jane Street saga, and whether it has an impact or a larger impact as well on the markets. Hear him out.
I want your view on two things, if I can. One is the RBI action in the recent past, and two, maybe I can start with that, the recent regulation or the recent moves by the regulator on, for example, Jane Street, right? Large global investment firm, if you will, making dollops of money out of Indian options market, and then we've seen this regulation come in as well. What did you make of it? Let's start with that.
I think it's a very good step by the regulator. Actually, I think in the last few days, they have done a report which shows that retail investors lost 1 lakh crores in the last financial year. That's a lot of money in a C3 settlement market in derivative. We've been also cautioning all the investors, and SEBI has done a beautiful job in releasing all these reports and actually doing this detailed investigation. See, at heart, derivatives is a sophisticated product, and it is important that the investors who trade in the derivative segment know about the risk. Despite all the efforts of the regulator, a lot of people have been trading in it and losing money. If you look at it, the growth in the losses has been much more than the growth in the markets.
Yeah.
And that's very worrying. And regulator has spent so much of time and energy. And if you look at the investigation report that they have carried out, they have done such a deep and detailed work on it. And it is very, very shocking, and it is very worrying that investors have lost money against it. And I think the type of investigation they had to do was very, very tough and very, very good. I hope investors also realize, who are participating in the derivatives market, that they have to be very careful. As mutual funds, you know, we don't participate much in the weekly derivatives market because we don't write options on the index. We are not allowed to write options. And for us, weekly settlement is not something that interests us. In a very, very rare situation like a budget or an election, we may take some exposure, but otherwise we have no interest in the weekly settlement because we are long-term investors. But it is the daily derivative, weekly settlement has been participated by retail investors and they have lost a lot of money. And I think the work done by SEBI has been fantastic in this area.
Okay.
But I hope investors read all the reports that SEBI has prepared and realize that they have to cut their trading volume, because it is not the job of the regulator to stop trading. It is the job of the investor to realize that they have lost money. The data shows that the investor has lost money and the gainer has been people outside India.
Yeah, that's true. So you reckon that because there is talk of SEBI extending some bit of this scrutiny to some of the other firms as well, globally, maybe locally as well, high frequency trading, etc. You reckon this will continue and it's actually a good practice per se?
For I think forget all that. I think the SEBI has done such a lot of work on this area and tried to dissuade investors from trading in this weekly option.
Which I agree.
I think that itself is enough. Why should, I mean, I think there is enough data to tell you that you have to be careful.
No, agree. No, but just one last point on this. So one is that the retail investors should be careful. Options trading is not making money. Two, for a regulator to pass an order of this nature onto a global firm which is trading in Indian equities or Indian derivatives and making this money, do you think this can dampen the mood of global firms which are looking at trading into Indian markets, or not really?
I don't think so. If you look at India, I think so many Indian foreign investors and the most storied investors have made money in the last 30 years by being investors, not by doing weekly derivative options. If you look at the amount of money they have in India, it is $800-900 billion. And they made money by investing for the long term, not by doing weekly derivative options. So I think it has no impact on all those long-term investors. I don't think the long-term FIIs are going to be affected by what happens in weekly derivative options. I think weekly derivative options is something a few investors have focused on. Most of the investors who have been there in India from 1994 till 2025 are very different type of investors. They have taken long-term bets on many companies, and they are big shareholders in most of the prominent companies in India. They are not weekly derivative exposures.
Okay, we'll play out, of course, that entire exclusive conversation for you. Rare catch there. S. Naren talking about the perils of derivative trading and, of course, what Jane Street means for the F&O segment as well as retail investors. Let's look at the bull and bear segment. This is where we take the stock of the day and we give you both sides and both aspects of the bull case and the bear case. Today we're talking about Kotak Mahindra Bank, definitely buzzing, higher Q-on-Q growth versus peers, and the stock has held on to most of its gains through the day, about 3.5% up even now. What is the bull versus bear case, Harsh?
Yeah, I want to start off with the Q that you've given me. So the bull case, to start off with, the QOQ numbers were strong, 4% growth on a sequential basis in net advances, surely looking good. It's the best growth QOQ among all the large to mid-cap kind of banks. So clearly standing out in a seasonally tough quarter. That's the bull case. But the bear case, let's zoom out a little bit, right? 14% growth. They've guided for 1.5 to 2x of nominal GDP growth guidance. That they've not been able to do. Okay, maybe Q1, and we'll have to wait for the GDP numbers to come for Q1. Maybe Q1, maybe that quarter in which they've actually done it. But outside of that, we've not seen that growth really kick in. Is this the turning point? Of course, we'll have to wait and watch. But that's broadly the bear case. Let's talk about the second metric, margins. They've held up well, they've sustained, but they've come off from those higher levels of 5.5%. Now they're sub 5, but they're sustaining there. The question, of course, is that can they replicate the Q4 performance in Q1 FY26? We'll have to wait and watch for that. And we had a note today also which said this, that it's going to be crucial to see margins, because we've seen a sharp cut in the repo. Can margin sustain, and what is the guidance is really the question. Most banks are penciling in margin pressure, at least for the moment. Now let's talk about credit cost, because that's the most important angle of lending. Microfinance delinquencies actually rose in Q4 FY25. That is actually my bear case, but slippages in personal loans, in the personal loan book has tapered. That's actually a bull case for me. So that's likely a positive, while microfinance delinquencies rising is a negative. Now let me talk valuations a little bit. When you're looking at the price to book, it's 2.5 times 1 year forward versus the 3.1 times a 5-year average price to book which Kotak commands. But the 12-month return is actually, or rather potential, basis the average analyst estimate on Bloomberg, is just 6%. Taking this argument forward, let's quickly look at what the Bloomberg, what the consensus analysts are estimating on Bloomberg. 27 buys, 12 holds, 5 sells, and a sharp outperformance that Kotak has already seen. Can it really sustain is the question. Back to you.
Thank you for that, Harsh. In fact, let me take that question straight to Aditya Agarwala, who now joins us on the show. He's Head of Research and Investments at Invest4Edu. Of course, Sudeep is still with us. Aditya, very good afternoon to you. Let's start with Kotak Mahindra Bank and the breakout that it's shown. Do you see this sustaining?
Good afternoon. Thanks for having the show. Oh, absolutely. In fact, as a disclosure, this is one stock which is there in our portfolio, recommended to our clients. And we are quite upbeat on the stock for this entire year. So we believe that Kotak Mahindra Bank and HDFC Bank are the two private sector large cap banks, which should be in your portfolio at least for at least 1 to 2 years. And you will see a decent upside from here on. If you're still looking to add the stock in your portfolio, I think this is still the right time to add the stock in your portfolio. I'm not looking for a 1 or 2 day trading time horizon. I'm looking for at least a 2600 kind of a target here on Kotak Mahindra Bank from here on, and place a stop loss somewhere around 2001 at about 2000 on the downside. And you will still see a decent upside in the coming quarters. So my sense is Kotak Mahindra Bank is definitely a buy. If you already have it in your portfolio, continue to hold on to it. If you're looking for a fresh entry, even after this 3.5% kind of an up move, I think so one should definitely look at going fresh long on Kotak Mahindra Bank.
Okay, fresh long on Kotak Mahindra Bank. What about on the Nifty? We don't know when this trade deal will come, but if you had to build a position, what would it be, Aditya?
I would go for a long trade, Tamanna, because clearly all the negatives are getting priced into the markets. Look at the way that the Nifty has taken into it, all the negatives that were there. And if anything, my sense is post this trade talks or whatever comes out from the Trump tariff, I think market is going to head north from here. So maybe place a stop loss somewhere around 25,400 on the downside. I'm looking for a target of 25,700, which has been acting as a hurdle for some time. And once that is taken out, 26,000 would be my next target. So 25,700 and 26,000 are the two targets. And I would actually stick my neck out and take that position in Nifty, a long position with a stop loss at 25,400 on the downside.
Okay, what about Bank Nifty?
Bank Nifty, I think it's done its bit of move already. From here on, my preferred index would be a Nifty as compared to a Bank Nifty. Because for me, the upside in Bank Nifty is capped somewhere around 57,800 to about 57,900 on the upside. So for me, I see more room on Nifty as compared to the Bank Nifty from here on.
Okay. Sudeep, there is a lot of traction around and announcements around the hospitality space. A couple of initiating coverage reports today on Schloss, and then Ventive gave out a fair degree of understanding around what's happening with their business as well. But we know that Q1 will likely show very wobbly numbers, and occupancies aren't great right now in the month of July either. So is it a prudent idea to wait for some pullbacks into the hotels and hospitality sector?
Well, Neeraj, I don't see too much of pullback coming in this sector. I think there's a secular uptrend in this space. Travel and tourism has got a significant boost post-COVID. There's absolutely no denying the fact that the volume of travel, volume of requirement for hotel rooms have increased significantly. And add to that the incremental religious travel circuits which have come up. Apart from that, the small towns, short stays, and whole lot of things. So And if you compare that with the number of hotel rooms available overall in India and some other destinations like Dubai or Bangkok or some of the other tourist places, we can see that there is a significant gap. So I don't see the stock prices coming down or correcting sharply. Maybe one or two instances where there is company specific news and they may correct, but otherwise no. And if you're building a long-term portfolio, it may be a good idea to pick up some of these good stocks and remain invested. Look, these are not stocks which I would recommend for a 1 month, 2 month kind of investment. You have a slightly longer time horizon, buy into these stocks, and I'm sure the return you will get will be more than proportionate to the market average return. Also on an occupancy front, I think 70+% occupancy is what the average is running, and that's a pretty good occupancy by hotel industry standards. Of course, there's scope for further improvement, and I'm sure during the festive season and travel tourism boom season, this will improve further.
Okay. In fact, Morgan Stanley has come out with a note on Schloss Bangalore, highlighting Leela's luxury play. Let me get Mahima in with more details.
Right. So, as you rightly mentioned, Morgan Stanley has initiated overweight coverage for Schloss Bangalore, which is the maker of the Leela hotels, with a target price of 549. What they're saying is that Leela is the best way to play the luxury hotel space in India, and it's one of the limited ways, in fact, to play the entire luxury segment when it comes to hospitality in India. The overweight rating basically is driven by higher for longer upcycle is what they're saying, and they're seeing strong demand in terms of luxury experiences, and that is something that makes them positive with respect to where Schloss Bangalore is concerned. What they're saying is that it also has iconic assets, and that too with low net debt position, and that makes it attractive. Plus, what they're saying is that the valuations right now at which it is sitting is also at an attractive level, and that's something that makes them initiate the coverage as well. Lastly, they're also saying that steady execution can drive re-rating, but concentration risk is something that one needs to keep a watch on, and something to keep an eye out for. So this is the overall view as to what the note says about the counter and why, and what makes Morgan Stanley bullish on Schloss Bangalore.
5% higher, and we spoke about this in the morning. I think two initiating coverage reports. Yes. One was Morgan Stanley, and one I think is JP Morgan. And Morgan Stanley is on Schloss. I think 549, and the other one is 520.
Where is it versus its issue price? That's what I have to go back to. At the end of the day, before it gets to all of those lofty claims, it's almost there. So if you were quote unquote lucky enough to get a Schloss allocation, you will still be some way away from what you paid for it. But nevertheless, there is this huge buzz on it right now. Aditya, I can't ask you about Schloss because not enough data on the charts, but let's get your picks this afternoon.
I've got a couple of buys, Tamana. The first one is GMR Airport. Actually, we are discussing on this particular space. I think GMR Airport looks interesting to me on the chart setup for a target of 100 rupees. I'll be a buyer here. Place a stop loss at 86 on the downside. The second is from the paint space, Asian Paints. I think it's done its bit of correction, and now it's time to look at the stock. Good short covering rally, and maybe probably a fresh long build-up can also be seen here for a target of 2600. I'll be a buyer in Asian Paints. Place a stop loss at 2400 on the downside.
Okay. Sudeep, what about Schloss? Any views over there?
Well, from a long-term investment point of view, there's absolutely no problem. To expect too much to happen in the short term will be a little unrealistic. As I just mentioned to Neeraj's question, hotel industry I like, and definitely in the luxury hotel space, Schloss has its own niche.
Okay, Bell Rise is the other one that is showing a lot of buzz. Recently listed, showing some buzz because of what brokerages are saying, has come off. It's the highest point of the day, but still about 9.5% up. Jefferies has initiated coverage on the auto ancillary company with a buy rating. Puneet is joining in for what Jefferies is saying.
It's an initiating coverage on a recently listed company in the auto component space, Bellrise. 135 is the target, a 20% upside from the current levels. Now, the key aspect is that they're maintaining that 12 to 18% growth in terms of revenue, and profits could continue for the company. They're largely getting 60% of the company's revenue from the two-wheeler space. So they are diversifying into four-wheelers, and that has 3x more components than the two-wheeler space. So hence, it could be a growth trajectory as well. But there are two key points that you need to know. One is that 20% of the company's revenue is coming from commodity trading, which is a very marginal business in terms of profit. So that is one, and that was a concern at the time of IPO as well. And the second aspect is that Jefferies was also the investment banker. So take it with a pinch of salt. The other aspect is that valuations are at 18 times price to earnings, are very, very favorable compared to other peers with niche businesses which are operating above 30 times price to earnings. So those are some of the key highlights, but definitely valuations are in comfort, and business diversification to four-wheelers could aid growth for Bellrise going forward.
Well, thanks, Puneet, for putting that into perspective. Now, auto ancillaries and Sudeep, it's an interesting bucket simply because a clutch of auto ancillaries, if earlier some of them used to be LED light manufacturers for the government of India and smart cities, now they are defense product manufacturers as well. So pure play auto anchs might not be as many, but Bellrise in that bucket. Jefferies is constructive. The stock has had a bit of a rally ever since it's gotten listed as well. Have you studied the model? Do you like it?
I did, Neeraj, and in fact, before IPO itself, I had recommended this from an investor point of view. I think I do like the stock. I think they're doing good job, and their branch moving into four-wheeler segment from two-wheeler, where they have a significant hold, is definitely a good development. Also, as I was being just now told, the valuation comfort is significant compared to the other peer group. So yes, I think it's a good buy at current level. Also, of course, it was a good buy. If you got an allotment of the IPO, I think it has got some way to go. It's well managed company, and I think investors will do well buying into it even now.
Well, 9.78%. This would have very limited chart history, so I'm not going to ask Aditya about this. But yes, 9.8% and counting. Really, really good show by Bellrise in the session today. Aditya, any other auto or auto anch name that looks good from a trade perspective?
Actually, a couple of stocks. In fact, I would add a Bellrise also to the list because we also like the company.
You can see the charts. Interesting. Okay.
Yes. So for a target of 120, this is one stock that we still like, and one can still look at going fresh long here. There are a couple of more stocks within this space which we like. The one is Uno Minda. I think this is one stock which also looks very interesting to me. Recently added into the F&O space as well, I guess. So this is also one stock that we like for a target of 1400 with a stop loss somewhere around 1000 rupees on the downside can be looked at. The second one that we have been recommending is Endurance Technology. This is also something which looks very interesting. After a decent bit of an up move, stock has seen some bit of a cool off, a good opportunity to go fresh long here at current levels for a target of 3200 on the upside. And if I can add a tire stock also in this list, I think so it's time for tire companies to make a comeback. And within that space, I think Apollo Tyre definitely stands out for me. And I think one should really look at Apollo Tyres as well for a target of at least 500 to 520 on the upside with a stop loss at 460 on the downside.
Got it. Okay. Thanks, Aditya. Now, let's also focus on the real estate pack because, well, if you look at the sectoral breakup today, I think real estate as a bucket has not had a bad move, 1% higher today. And amongst names, I mean, yes, Brigade and Prestige are the top names today, but Keystone for the last few days has done well, and they say that they are on track to achieve the FY26 pre-sales guidance. This is as per the director of the company, Mr. Chandresh Mehta. Listen in as he talks about the company's outlook going forward.
By and large, first quarter normally is a slow quarter, and we have grown 75% year on year. So, and quarter on quarter also, we have seen a 25% growth. So in terms of doing our numbers, we are well on our way. We have given a guidance of about 4,000 crores for this particular financial year. We have already done 1/3 of it, 1/4 of it in the first quarter, and we are well on our way to surpass our guidance.
Okay, 320. So before I go to real estate and take Sudeep's view on that, Aditya, your BTST, STBT call.
So for a BTST on Cummins India, capital goods space is also looking very interesting to me. So I think at current levels, one can actually go ahead and buy Harsh for a target of 3650, place a stop loss at 3350 on the downside.
Sudeep, real estate, how best would you play it at this point, and names that you like within that space?
Well, I think I do like the companies which have got a significant commercial real estate exposure, because I think that's where the action is going to be for some time. Residential part, while I'm not saying there is no action, but the demand is plateauing somewhere. It's not falling, but I think we have reached a level where incremental demand will be difficult to generate in the near term. So focus on commercial guys who are into commercial real estate. I do like Phoenix Builds a bit. I do like some of the southern developers who have a mixed model. Of course, DLF continues to remain my favorite because of the land bank they are sitting on, and of course the comfort we have in the valuation.
Okay, Aditya, I'm wondering how you would see some of these consumption plays. Titan especially. Titan has taken quite a bit of a knock today, but I don't know if it's if the street is overdoing the kind of numbers or updates we saw on Q1, because these are business updates overall. Do you see the positional play of a bounce back from here?
Absolutely, Tamanna. I think give it a day more because we are seeing intense selling pressure, and today the trading session backed by by on high volumes as well. So my sense is it can continue its slide somewhat tomorrow as well. Closer to about 3400 or 3350 is where I see stock bottoming out, and eventually it should start its up move. In fact, again, as a disclosure, this is one stock that we have recommended to our clients in this downfall to add to our existing positions, and I think 3350 is a good support area. From there, stock should recover and can hit levels of 4000 again on the upside. So I think this is getting little overdone and should subside soon this fall, and should resume its uptrend.
Okay, so that's the case with Titan. Sudeep, what about you? Is Titan a buy, or you'd stay away?
I would say wait for a day or two and then go ahead and buy. Because I mentioned in the beginning that I think we are comparing not the right matrices. Whereas Kalyan's sales growth percentage vis-a-vis Titan, the base is significantly higher.